the last couple of months, Angel One hasn't participated in the up move. Year to date, the stock is down 35%. And now even the Q1 numbers, they're not great. Profits are down 14% on a quarter-on-quarter basis. Thoughts on Angel One from here?
Yeah. Good morning, Rima. So if you see, the results have been pretty strong. Numbers have been pretty strong. The entire broking industry has been getting record volumes, and the same was with Angel One. Especially if you look at strong growth in both F&O as well as cash segments. The gross broking business has grown 65%, F&O 65%, cash segment 81%. And the key concern here is that there are regulatory overhang on this sector right now. There are talks of how SEBI wants to curb the tail end of the F&O trading, which in India is among the highest globally. And that is something, as I said, is a kind of an overhang on the sector. We have seen a lot of regulatory changes, a lot of regulations on the capital markets, but the volumes continues to surge. So we believe that the near term there could be pressure until clarity emerges on the way forward in terms of the lot size, the margin requirements, even the overhang on the taxation on the capital gains in the upcoming budget. So these things are keeping the capital market stocks a bit on the cautious side. But bearing that, we believe the capital market theme in India and the financialization of savings would continue to grow, and that should do well over the long term.
But right now, there is a bit of a regulatory uncertainty. Siddharth, do stay on. We want to talk about the telecom space. Now, yesterday, Vodafone Idea moved up 3.5%, and that up move came in the second half of the trading session. Now, the company has sought an urgent hearing of its curative plea against Supreme Court's 2019 judgment. The company in its plea has cited arithmetic errors and sought a reduction of its AGR dues. We have with us Balaji Subramaniam, Vice President at IIFL Securities. Balaji, before we get to the impact on Vodafone Idea, first for our viewers, give us a little bit of a background, a simple background of this curative petition of AGR dues that Vodafone Idea is seeking.
Hi, good morning, Rima. Thanks for having me. And the crux of the disagreement between the government and the telecom industry has been, how the adjusted gross revenue is defined. So that dragged down in courts for a long time. And in October 2019, the Supreme Court came out with a verdict which was against the industry, and it asked all players here. One needs to note that Jio, by virtue of being a late entrant in this sector, was not impacted by this legacy case. So this said that Bharti, Vodafone Idea, and even many of the telcos who had stopped their operations, they had to pay a pretty hefty liability to the government, which not only included the actual dues, but also the interest penalty and the interest on penalty. So after that, Bharti made an upfront payment of around 18,000 crores. Vodafone Idea made a payment of around 7,800 crores. And at the same time, they also appealed against this verdict. In September 2020, the Supreme Court, again said that, again ruled against the telcos, saying that, there would be no relief on this, and, whatever amounts the DOT has demanded cannot be subject to dispute. And it also asked the telcos, at least it gave some leeway in terms of cash flow, where it said that the telcos can make this payment over a 10-year period ending March 2031. So, there was some cash flow release, but at the same time, about 8% interest was also levied, so that the government did not lose in present value terms. So sometime in late 2021, the telcos considered submitting a curative petition against the September 2020 order, but again the Supreme Court declined to entertain it. Finally, in October 2023, the telcos again made an appeal, especially Vodafone Idea, and this time the Supreme Court had a more favorable bias, and it asked the telcos to submit their curative pleas, which the telcos duly did. But now it has been nearly 9-10 months after that happened, and there has been no clarity in terms of the timeline by which this would be heard, and that is where Vodafone Idea again went back to the court yesterday and sought urgent hearing, because it would especially add clarity in terms of their debt raising plans, which regarding which they have been in talks with banks and other financial institutions. So that is a brief background of where we stand as far as the AGR case is concerned.
Okay, thank you for explaining that so well, Balaji. Just some quick numbers. What are the current AGR dues, assuming the interest and penalty for Airtel and for Vodafone Idea? And secondly, what is the street expecting by way of a relief if it comes through? Say 50% of the dues are waived off. Then how does it impact the stock price? Is it already in the price? What would the target price rise for the two companies?
See, if you look at the public disclosures of Bharti Airtel and Vodafone Idea, Bharti Airtel has somewhere around 36,000 crores as the AGR dues. This is, including accrued interest, and this is the full number after what they have already paid the government in the past, etc. And the corresponding number for Vodafone Idea is around 70,000 crores. Now, I think the way it can pan out is that the Supreme Court allows the government and the telcos to kind of, sit together and resolve any calculation errors. And based on what Vodafone had done and Bharti had also done, it does appear that the relief can be to the tune of 50 to 60%. Of course, these calculations are very complex, going back across multiple years, across many circles, across all circles. But the rough extent of relief could be around 50-60%. So if one were to take a 50% relief as the number here, then we are talking about an NPV relief of nearly 35,000 crores for Vodafone Idea, which would probably equate to a little more than 5 rupees per share. And for Bharti Airtel, we are talking about an 18,000 crore relief, which would work out to roughly around 30 rupees per share. Now, that said, I think some of these are already being factored in by the market, because there have been some hopes of a relief coming on the AGR front. So now it will be very difficult as to how much of this 5 rupees and 30 rupees per share are already factored in. But my sense is that some bit of that is already factored in, while some bit of it can still play out in the market.
So, briefly, Balaji, what is your price target if there is if the relief comes through in this curative petition? Is there upside to your own target? And B, curative petitions are people appeal for them, but they're rarely taken up. So it's now the CGI has taken it up, and we're waiting for the date now. So in that sense, I think it's kind of raised hopes. So that's the way to look at it.
See, in my base case, I assume a 50% relief. So to that extent, my target price of 19 rupees for Idea and 1,597 for Bharti includes the 50% potential relief. If the relief is higher than that, there can be some upside. As far as the second question is concerned, even though curative petition pleas are rarely heard, and even more rarely you get a favorable judgment, my sense is that there is still some hope for relief, considering the fact that if you look at the September 2020 order, it also produces the affidavit by the DOT in the Supreme Court, which says that the estimates of DOT are based on preliminary estimates. So to that extent, the word preliminary at least indicates that probably, there needs to be some sharpening of the numbers. So I think it does offer some wiggle room. Of course, beyond a point, it becomes difficult to step into the shoes of the court and make such statements. But I think at least, that particular clause in the verdict gives us some bit of hope, but we'll have to wait and watch.
Absolutely. I think can't second guess the courts, but that's an important point that you make, and why I think many are hoping that that relief will come through. Balaji, thank you very much for joining us as always on these important issues. Appreciate your time here on CNBC TV18. Well, let's turn our gaze back to the market and what's in store for us. Anuj is here with the setup. Anuj, morning.
Morning, Prashant. And for me, the big cue this morning is the overnight statement by Fed Chairman Jerome Powell. Now, many people want to read it in their own way, but the market has decided to read it like a rate cut is coming on 31st July itself. But it was, of course, enthused by the statement. I think the biggest example of that was the Russell 2000, or the small cap index in the US, that rallied 2%. Now, that normally is, of course, a bit of a rate cut hope rally. In any case, the Indian market has been way too strong, but a bit of a global help won't, hurt. So that's something which could help as well. And FIs have started to buy as well. For last 2 days, there's been big buying in the cash market. And that, I think, is, again, perhaps in anticipation of some kind of a rate cut. The market might want to price in a rate cut, even if it happens or not, by 31st July. The only risk to Indian market now is that you have a budget coming. And there's always this, rumor or some kind of a buzz whether something will happen to the capital gains tax or not. In terms of setup, FIs bought yesterday 2,600 crores. DIs have been selling marginally. FIs are buying daily in index futures, 1,330 crores yesterday and 4,800 crores in stock futures. The put call ratio has gone up a bit, but that happens in an uptrend, 1.33 versus 1.28. The market's overbought, but it has been overbought for last 1 month or so. In terms of levels to watch, the first support is 24,522, yesterday's low, and then the bigger support is 24,445 based on the option side. Resistance comes in at 24,635, the all-time high, and then 24,702 based on the options. The Bank Nifty is important. Keep in mind, today is weekly expiry of both Financial Nifty and Bank Nifty, because tomorrow is trading holiday. So that's why today Bank Nifty could be in focus. You have an option writers range of 52,336 to 52,720. The quote for the day, it comes from Barbara Pletcher, and it is: the real winners in life are the people who look at every situation with an expectation that they can make it work or make it better.
All right, Anuj, thank you very much for that. That's interesting as always. To get it every morning. Well, we'll take a quick commercial break here. Mitesh and Sudarshan will be with us with some technical trading ideas. There is 11 minutes to go for the pre-open session. Stay tuned.
That's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. And what a great way to celebrate our own 25th year, with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
All right, welcome back. There's 9 minutes to go for the pre-open session. We have Mitesh and Sudarshan who are with us. Gentlemen, good morning. Good to have both of you here. Thank you very much for your time. Mitesh, is there a trade in the index, and what would you put targets at, and what's the way? I mean, Friday was just IT. Yesterday, it was a lot more. PSU banks did well. PSUs overall did well. So what are the trades for the indices?
Morning, Prashant. In fact, there's some traction in the PSU bank, and you could see good patterns on the charts of State Bank, etc., which is also a recommendation today. Today, I think I would want to see the Bank Nifty get past 52,700 in the spot, which was near the yesterday's high. Once that happens, then I think you can have a trading rally of another 250-300 points to begin with, and then maybe more. So I think that's where my focus would be, apart from the fact that the IT stocks still remain strong, despite the fact that after a good opening, they had some profit booking kind of scenario. So broadly, I think if you want to trade the index, the Bank Nifty would offer a fresh entry above 52,700, take a 100-point stop loss, look for a 250-300 point kind of.
Okay, all right, got that. Sudarshan, good morning. How would you look at things now and the way we've left off yesterday?
Good morning. Well, I'm a little cautious today. There are so many reasons. First, the S&P 500 actually closed with gains, but it gave up almost all of its intraday highs. So that's the way we start. Asian markets are mixed. We've had 3 stupendous days. This can't go on forever. So today, the keyword is caution. I don't think a new trader should enter or go for any long positions today. Tomorrow is a holiday. So for those who have existing positions, protect them with stop losses or even hedge them. Otherwise, avoid the bank completely. There is a bank expiry today. It can do unusual things. Wait for the Nifty to again stabilize, expecting choppiness today. So Thursday would be the day when we would trade. Today is a complete avoid.
Okay, all right, a bit cautious today. Sudarshan, in terms of individual stocks and trades, what would you have on your list?
Sure. Eicher Motors is a buy with a stop under 4,800. Bajaj Finserv is a buy with a stop under 1575. It's a mixed bag because there is no clear view today. Berger Paints is an intraday short with a stop above 527. And finally, ABB is a buy with a stop under 8,100.
Okay, and Mitesh, what about you?
Yeah. I also have a mix of buys and sells. A buy on State Bank of India with a stop at 864. Look for targets of 920. Good reversal in the on the charts of Bajaj Auto yesterday. So buy here with a stop at 9,600 for targets of 9,900. Conditional buy on Ashok Leyland if it starts getting past 230 half. Buy with a 5-6 point kind of a stop loss at 225 or so, and look for the retest of earlier highs of 242. And Jindal Steel is a sell with a stop at 1,021 for targets of 965.
Okay, all right, I got that. Sudarshan and Mitesh, thanks very much for that. We'll come back to you for more a little later. Sneha Sheth is with us as well, derivatives research analyst at Angel One. Sneha, good morning. Good to have you with us here. What would your trades be as we start this Tuesday morning?
So in individual counters, I have a 2 buy call. First one is on India Mart. This counter was up nearly 3% yesterday. It has breached the resistance zone placed around 2865, 2870. So I believe we may see an extension of this up move towards at least 3075. So for the target of 3075, it's a buy with a stop loss of 200810. Apart from this, Bata India looks quite interesting to me. If we see this counter has been consolidating. However, if we look at the chart structure, we have seen a strong base formation, and now I think we may see an up move at least towards 1589, 1590 zone. So would recommend a buy with a strict stop loss of 1490.
All right, Sneha, thank you very much for those trades and that view on the indices as well. We'll take a break here. We are going to come back in just a bit from now, and we'll have the pre-open rates. There's 4 minutes to go for the pre-open session to kick off. We'll also put the focus on the oil and gas sector with the analyst view. That's coming up in just a bit.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com.
Welcome back. Well, yesterday one of the big movers was Zomato because they're going ahead in increasing charges and in fact monetizing it. And now volumes as well are moving up. So that's why in fact that stock hit a fresh 52-week high yesterday. We're still in conversation with Siddharth Kemkar. Sid, what do you make of this one? You know, in the last 1 month itself, the stock is up close to 25%. Last 1 year, it's up even more. Your view on the stock at these levels of 230?
Yeah, Nigel, so if you think on the e-commerce platforms, they have started charging the platform fees and slowly and gradually ramping it up. So from 5 rupees to 6 rupees, that is almost 20% hike, which is a good percentage hike for the profitability of these companies. And it has been well accepted across the market. So I think that's a good step to improve profitability. And that is what the street was hoping and expecting for. Apart from that, if you look at Zomato, the quick commerce Blinkit has ramped up at a much faster pace than expected, even in terms of profitability. So view is definitely positive from here on. We believe that the penetration of e-commerce and the duopoly nature makes Zomato a very interesting case even at these levels because of the growth, improvement in profitability and the increasing opportunity in the Indian markets.
You know, and if they didn't have enough triggers, I'm reading an article which states that certain states may allow home delivery of alcohol as well, you know, via quick commerce platforms like Swiggy, Big Basket, as well as Zomato. So additional trigger if in case that's allowed.
Yeah,
okay,
yeah, I think that.
Yeah, go ahead, sir.
Yeah, so if you look at some of these e-commerce platforms did try to do home delivery in the times of COVID for the alcohol, and if that does happen by certain states, it will be definitely additional positive trigger, especially for some of the quick commerce companies. What I also read is, for example, beer and wine to be started with earlier. So it could be another 5 to 6% of the overall business opportunity for them right now. Given that still a lot of this alcohol consumption happens out of the home. So while it reads to be a good opportunity, I think the initial opportunity size could be smaller to start with.
By the way, Rima, you were talking about Angel One, I think, with Siddharth earlier, right? I was just reading the Money Control written a piece, basically comparing discount brokers, and I found it very surprising. The gap between Zerodha and Angel One is now very, very small.
In terms of market share?
In terms of active users.
Active users.
So, it's the chart over a 1 year period is exactly the opposite. Angel One has grown and Zerodha, the numbers, active users has come off quite a bit. I mean, just another one of those things, but it's a space, it's not really what's of course influencing these brokers. There are not that many listed brokers, but there's Motilal, there's MK, there's Angel. From a broker perspective, is not, I guess, market share, etc. Right now, it's essentially regulatory risk, as Siddharth also pointed out earlier. Siddharth, I mean, just a few other names, and just throwing these your way. The Mazgaon, the Garden Reach, the Shipping Corporation, Cochin Shipyard, essentially shipping companies, they all came under some selling pressure, but they've all been such large outperformers all of this year, and I think over the last 1 year as well. What do you do with these if you have a position?
Yeah, it's a difficult call, Prashant, to be honest. While we don't have active coverage, these stocks have seen a massive run-up. If you ask me, if someone has a 5-year horizon, I would definitely recommend to hold. There will be bouts of profit booking given the sharp rise, but the opportunity size is huge, is immense. The government's focus on making in India, spending on defense, and the newer trigger of exports, that is only adding to the overall growth opportunities. A lot of these companies are definitely adding capacities, but again, in the near term, there are two risks. A, the market is at all-time high. The stocks have seen a massive rally and run up, so definitely there would be bouts of profit booking in between.
All right. We'll leave it there today. So thank you very much for joining us. Good conversation as always. Appreciate it here on CNBC TV18. Let's talk about the oil and gas space. Quite a few developments to take and focus on in the sector. We have an analyst joining us, Dayanand Mittal, oil and gas and telecom research analyst at JM Financial Institutional Securities. Dayanand, good to have you with us here. Good morning. Thanks very much for your time. Before we get into some of the individual stuff, but just wanted to get a quick sense from a budget perspective. Should we expect anything for the oil and gas sector? Realistically speaking, I mean, there is, of course, with regards to gas, some conversation which has been brewing. We sort of quizzed the MGL management recently around those. Well, we hopefully something will come through. But your sense?
Yeah. So from budget perspective, obviously, gas sector is one space where there's a lot of expectation around providing relief or boosting the gas consumption story in India, given government has earlier announced plans to increase share of gas in India's energy consumption from about 6.5–7% currently to 15% by 2030. And this is being not happening at that pace because of the surge in global gas prices. So government is trying to find ways by which they can make gas more affordable domestically, either by way of including gas in GST, though it may not be a part of the budget, given GST committee's authority will decide on this. But yeah, any indication from the finance ministry on during budget before that on what's the status, that would be key. Second thing, what is within finance ministry's domain is probably cutting the excise duty on gas from current around 14%, in case including within GST framework will take its time. So that could be a temporary relief before they can get all the states together to agree to include gas in GST. So that could be one big thing that is expected from the gas sector. Apart from that, I don't think there's much divestment. Oil ministry has ruled out, so nothing much there. Windfall tax, I think that might mostly continue. So again, I don't expect any changes on the windfall tax regime, given crude price is around that $80–85, which is decent, but not low from government's comfort perspective. Yeah, so that's the key expectation, I guess.
Hi Dayanand, good morning and good to see you. When I wanted to focus on ONGC and Oil India, after a very long, they have come back, and in fact, both those two stocks are the biggest gainers in the last 3–4 sessions. Let's focus on ONGC because that was the big mover yesterday. We know valuation-wise there is comfort, dividend yield as well. We know the street is waiting for volume growth. What are you penciling in terms of volume growth for the next two fiscals? Because that's been lagging in the past, and the management I think is indicating a 5–6% volume growth. What are you penciling in?
Yeah, so both these stocks, volume growth has been a key structural concern for both the names, given the mature nature of oil and gas fields that they own, where you see a natural decline of 5–6%. So even they keep exploring new fields, that only goes to offset this natural decline. So overall production continues to be subdued. But after a long time, both the companies have few blocks which will contribute to growth. First, ONGC's KG-DW98/2 block, which has been long overdue, that will finally commission and ramp up from 3Q FY24. And that can probably add about 15–20% to ONGC's production over a three-year time frame. Given the not so great track record, we are conservatively building more like a 10% volume growth over a 3-year time frame for ONGC. For Oil India, there's a massive growth opportunity, but first on gas side, because of the new Indradhanush gas pipeline, which is gradually going to commission over next year or so, that as per management can increase the production by almost like 40-45%. But given the usual delays in pipeline, not so great track record, we have conservatively assumed probably they'll be able to deliver at least half of this in 2 years, and probably they'll get to what they're guiding over a 4-5 year time frame. For crude, Oil India, there's no block per se which is going to drive this, but yeah, there are a lot of IOR, EOR activities which they are doing, which can increase their crude production by about 10-15% over a 2-3 year time frame. So after a long time, we can see probably a 3-4% annual production CAGR over next 2-3 years. So that's the key story, apart from the fact that OPEC is keeping oil price high, which gives comfort on that $75 net crude realization. So yeah, these are the two key stories apart from dividend which you mentioned.
So, you know, the sector on the upstream side, is ONGC the pick for you, Dayanand?
So I would prefer Oil India, primarily because the volume growth story is much steeper in case of Oil India, something like a 40-50% production growth. In case of gas, if assume pipeline comes on stream, demand ramps up. And for crude, about 15-20%. So overall, about 30-35% production growth is possible in the next 3-4 years. For Oil India, for ONGC, that number is more like 15-odd%. So Oil India would be preference. Second key reason for Oil India's preference is they have 70% odd stake in NRL refinery, which is tripling the capacity from 3 million to 9 million tons. And there's a huge excise duty benefit being located in Northeast. And that excise duty benefit is likely to continue even for the expanded capacity. So they've got a huge, about $10-15 extra GRM which they make in this refinery vis-a-vis what the industry GRMs are.
On the downstream side, I mean, is there a case to be made to be buying any of these oil marketing companies?
So our preference has always been, we prefer upstream PSUs over OMCs. Primarily because we think oil marketing companies' valuations have gone out of the historical band. Historically, HP, IOC traded about 1x price to book, BP around 1.2, 1.25. They're trading now at about 10-20% above historical averages. We have a sell rating on HPCL and IOCL, primarily we believe because last 2 years, FY23 and FY24, GRM were very strong because of a lot of supply outages and one-off factors. Though we expect GRM to be robust, but unlikely that those strong GRMs of FY23-24 is likely to be repeated. Second, on the marketing margin side, few in the street are building in bull case assumptions of marketing margin further rising from the historical levels. We see that as a key risk, given the weaker mandate for the current government, given crude price is likely to be around the 80-85 band, which is at the edge. Any spurt in crude could put marketing margin under pressure. And also the biggest structural concern on OMCs is the huge capex that they are laying. Though over a 15-20 year period, this might prove to be profitable, but in the near term, next 5-10 years, given the time and cost over them, they usually tend to be value destructive.
Just one last brief question, and moving away from oil and gas. You track telecom as well, Dayanand? And what's the pick there? I mean, there's this AGR news that we were discussing earlier with Balaji of IIFL. Quick thoughts there?
Yeah, so in telecom, our top pick is Bharti, Reliance because of Jio and retail. We have a sell rating on Vodafone Idea and a hold on Indus. Though this news, in case Supreme Court gives this verdict in favor of telcos, logically that favorable decision makes sense given the arithmetical error that was involved. And given the previous decision of Supreme Court was a bit harsh in terms of penalty and interest on penalty. So assuming this decision comes in Vodafone and Bharti's favor, for Vodafone, the debt relief could be in the range of about 35,000 crores, which is about half of their 70,000 crore AGR dues. So given the EV won't change, assuming no changes in assumptions, this 35,000 crore could translate to equity, which if I do a rough math, can add about 5 rupees to the target price. For Bharti, that number would be more like 20,000 crores. So given its huge size, probably is a 1 or 2% addition to its equity.
Got that. Dayanand, thank you very much for that. So any potential relief on the AGR dues can boost the fair value of Vodafone Idea by nearly 5 rupees. That's the word from GM Financial and IIFL. Just going mathematically. But it's 9:10. Time to get in the call from Sudarshan. Sudarshan?
Hello.
Hi. What's your 9:10 call?
Right. Sorry. Eicher Motors is a buy with a stop under 4,800.
Eicher Motors. Mitesh?
I'll go with a buy on Bajaj Auto for targets of 9,900.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's get Sudarshan back in because he's the one who broke that story on Vedanta's QIP. And that's official right now. Sudarshan, tell us more.
So today Vedanta is opening with a gain of nearly 2% after the company's QIP is launched, and via QIP company is looking to raise nearly rupees 6,700 crore. And out of that, base size is 5,000 crore and green show option is almost rupees 1,700 crore, and indicative price for QIP is rupees 440 per share, which is a discount of almost 4% against yesterday's closing price. Now, what will be the next trigger for Vedanta stock? So likely the next trigger is demerger details. Remember, in September 2023, company had announced that it will demerge the company into 6 listed entities, and it said Vedanta will be the majority shareholder of 17 investment vehicles post demerger. Also, as per the recent brokerages, JP Morgan has a neutral call on the stock with a target of rupees 395 per share. CLSA has an outperform call with a target of rupees 520, and Nuvama has a buy call with a target of as much as rupees 644 per share.
All right, so thanks very much and congratulations once again on that story. Well, HDFC AMC is the next one we're going to focus on, and there is a little bit of lift in earnings and sort of view coming through from brokerages. Vamakshi is here to detail that out for us. Vamakshi.
Well, HDFC AMC had reported numbers during market hours yesterday, and that was a strong set coming in from that company. We have a couple of brokerage notes. CLSA says that the company reported a strong Q1 net profit, which is up nearly 27%, and this was largely driven by 37% growth in AUM and sharp gains in investment income, which offset higher operating expenses. Share of equity rose, and as a result, yields expanded by nearly 2 basis points. The drags from NFO, that is a new fund offered on yields, were negligible, but the OPEX was elevated with NFO, KYC and ESOP related expenses. Nevertheless, given the strong earning momentum, they've raised their FY25 AUM growth, which leads to 3 to 5% increase in FY25 to 27 net profit estimates. And given that, CLSA has gone ahead, maintained its whole rating, but raised its target price on HDFC AMC to 4,450. Jefferies, on the other hand, has raised its estimates by almost 1 to 2% to factor in higher AUM and investment income, and they've gone ahead and raised the target price to 4,900. They've got a buy call on HDFC AMC.
All right, lots to track this morning as always. Vamakshi, thank you very much for that. We'll have the first rates coming up in just a bit from now, in the next 1 minute, less than 1 minute. We'll have the stocks, HDFC AMC in the pre-open. Maybe if you're able to put this up. I think it's a 30 rupee uptick on HDFC AMC. And the other one we just discussed, of course, is Idea. News flow related names, which I think is also starting about 5-6% higher. There is Angel One, which we will look at on the back of earnings which came through, and many others as well. But first rates on the indices, as always, what do we have? 24,600 plus on the Nifty. We've got the Sensex, which is starting about at about 80,750 or so. So, these are the very first rates which are coming through. What else is coming through? Nifty Bank is starting 100 points higher. That's a 0.25% in the green. Mid-cap index is up 130 points. I think with the small cap index also in the green. Market breadth early, but it's indicative. 1,300 stocks are higher and about 300 stocks are lower at this point in time.
Well, HDFC Life is one of the big movers. It's opened up in the green with a gain of close to about 0.5%. But Telecom catches your attention. Bharti Airtel is now the top gainer. The street is optimistic. The street is hopeful that there will be some relief on the AGR dues, which have burdened the companies for the last many years. So Bharti Airtel is now inching up, almost 1450 on Bharti Airtel, 1% gain. You have Coal India, so PSUs continue with their up move. Tata Steel is a big gainer. State Bank of India is higher. HUL, where they've announced the news about selling their water purifier business, AO purifiers. The overall impact is going to be less than 1% in terms of the revenues, but HUL is looking to focus on its core business. So they've sold their water purifier business and the stock is opened up in the green. On the losing side, Pharma takes a bit of a backseat. So Dr. Reddy's, Apollo, Divi's Laboratory, all of them are down between 0.5% to 1%. Hero MotoCorp, L&T, Nestle too under pressure.
Well, a few stocks are flying away actually this morning. We had the positive news flow coming in on Century Textiles. So that stock, in fact, is up and about. The Birla Estates has secured a 71-acre land in Gurugram. The GDV at around 1,400 crores. So that stock is up and about. Hudson Agro, summer season has aided the ice cream business. The margins up 280 basis points. The street likes it. That stock is flying away in trade today. A couple of other notable movers. Oriental Carbon, well, that stock is up close to around 5%, moving on rather large volume, so highlighting that one. HPL Power has been a big mover. That's up even in today's trading session, up more than 5%. JP Morgan, they've initiated an overweight call on Bharti Hexacom. Well, that stock is up with the target price, in fact, up around 1,280. This I'm talking about Bharti Hexacom. So let's get that up for you. For the time being, the stock opens up with a gain of close to around 4% or thereabouts. So good going on a couple of these names. And Angel One, I think, as well. Rima just pointed out, I think that one, that as well has opened up in the green.
Okay, so 35 points higher on the index is what we have. And we're at about, 24,617 at this point. Just a few other names, right? And Chennai Petro is the biggest volume-led gainer with a 7% pop. Stocks at about nearly 1,160. Apart from what Nigel and Rima mentioned, there is MOIL, there is manganese ore, which is starting 4% higher, 550 on that one. MTNL is coming up with large volumes, 52 rupees, 6% higher on MTNL. I think Adani Green is up 3%, has got decent sized volumes for this point in the day. That'll come up. Zentech has had a one-way rally recently. I think it's at a new high, 3% higher. It was up 5% yesterday. This OCCL, I think Oriental Carbon, 17.5% higher. Hardly ever comes up on the radar at open, but 352. And it's got volumes to back right now. Look at that, 3.5 lakh shares. ISMT is up 4.6, 4.7%. Dredging Corp is up 5%. Raymond is up about 4%. So there is lots and lots of stuff going on. Motilal Oswal Financial Services is up 4%. Stocks coming through with gains and some volumes, not much. So this is essentially, what is up on volumes right now. On the downside, IREDA is down 4%. RVNL is down 2%. Geofinance is down 2%. It's got some volumes. Ircon is down 2%. Jupiter Wagons is down 6%. So that's a large cut, 662 on Jupiter Wagons. Oil India is down about 2.5%. Godfrey Phillips is down 2%. Texmaco Rail is down about 1%. Jyoti CNC, I can spot. Manappuram is down a little bit. But, volume started thin out if you go down the list. But this is the bulk of the activity, right to the word go, and how the opening sort of levels are coming through at this stage. I mean, the index is up about, 26 odd points, 28 points, 24,600 plus at this stage. We have Gautam Dugar, who is with us. He's Head of Research, Institutional Equities at Motilal Oswal Financial Services. Gautam, great to have you with us here. Thank you very much for your time. I just want to start with what you're telling clients about the budget and where should they really focus on in terms of announcements and which sectors could get a push, a meaningful push. So let's start there this morning, Gautam.
Sure, Prashant. Good morning. So as far as budget is concerned, we think there is broadly going to be continuity in the direction of policy making, which is basically the overarching focus on the infra, capex, manufacturing and PLI agreed. At the margin, as we have seen in some of the recent state budget like Maharashtra, the government could use the extra bounty of about 1.5 trillion from RBI dividend to provide some sort of relief at the bottom of the pyramid, whether through tax cuts or through some other consumption giveaways. We don't know yet, but that's a possibility because in another 2-3 months, we are heading into a big election calendar again as far as state elections are concerned. We've got Maharashtra, Haryana and Jharkhand in November. And then I think after another 3 months, you have Delhi and then next year you have Bihar. So, the political calendar is always very hectic in that sense. And I think a government does have that leeway to sort of use these 1.5 lakh crore extra money to create some sort of a buoyancy at the bottom end of the consumption pyramid, because that is one area which has been suffering for last 2-3 years, as we have seen, whereas capex, infra, industrials, that segment of the economy has been doing quite well. Rest of the things, there's no point speculating much about it, because we have seen now for last 8-10 budgets, we keep speculating this will come, that will come, but eventually it doesn't matter. If you look at markets, they have broadly followed the path of the earnings, especially the large caps. Mid cap and small cap obviously have been completely delinked from the earnings, underlying earnings trajectory. So yeah, I mean, it will create an impact for a couple of days, and then again, I think markets will be back to fundamentals and earnings. So yeah, I mean, that's how we are looking at budget right now.
Hi, Gautam. Good morning and good to see you, Ben. So it's all about earnings. What do you make of a couple of those IT companies that came out with this set of numbers? The street likes it, but they bid up the stocks in anticipation of better than expected numbers. And that's precisely what it is. How are you all placed on tech? What do you make of the earnings and preference in the IT pack?
Sure, Nigel. Good morning. So as far as tech is concerned, we've been underweight for some time. We now moved it to overweight with this quarter's preview and model portfolio revision that we've done. So we are now back to overweight position on tech. Yes, earnings have been decent, been in line broadly. HCL Tech has been a slight beat because of the slightly higher other income. But that's where our preference lies. In fact, if you see, we've now given a target multiple to HCL Tech, which is at a 10% premium to Infosys. This is the first time that we've done it, right? So as far as tech is concerned, we are now turning incrementally more positive than where we have been, not because we are expecting any significant pickup in earnings, but broadly, the valuations look okay in the context of rest of the market. Second, there has been 3 years of a very lackluster growth there. If you look at the earnings growth of tech that we covered, the last 2 years, CAGR is hardly 5%, whereas Nifty has given close to 20% sort of a CAGR in the last 2 years. So tech has underperformed on earnings front for last 2-3 years now, and stock prices also, keeping aside the mid caps in IT, which has done phenomenally well. The large cap IT has still been trading in a very decent and a fair band of valuation. That is what has prompted us to raise the weight on tech from underweight to overweight, within which we have Infosys and HCL Tech as our preferred large cap bets in model portfolio. And then incrementally, we have added Persistent and L&T Tech in the model portfolio. That's where we stand on IT.
Okay. Gautam, hi, morning. Rima here. So what are the other big portfolio bets or the changes that you've made to your calls in the last 1 month? IT is one, you spoke about it. What else?
So 2-3 big changes we've done, Rima. One is on pharma, where we've gone from neutral to marginal overweight now. Second, we have brought auto down from overweight to underweight. The stocks have done phenomenally well there. Names like Sambardhana and all, which we had added in model portfolio a quarter back, are up 72% in a quarter. And M&M, which is part of our model portfolio, still is up 40-45% in last 3 months. So auto has done phenomenally well. And that is where we expect earnings to moderate now after 2 years of very sharp earnings growth. So which is why we've taken auto down to underweight now. And consumer discretionary remains a big overweight for us. We have almost 11 consumption stocks in our model portfolio and only 2 staple names, which is Lever and GCPL, which we've added now by replacing IDC. As far as discretionary is concerned, we have a whole host of names, names like Titan, DMart, Indian Hotels, Zomato, all of that. And then on the mid-cap side, we have Kalyan, KEI, Metro, Sale, all those names. So basically our tilt for last 2.5 years has been towards discretionary, and we've been underweight staples. Marginally, we have made some tactical changes in anticipation of some sort of positive announcements around consumption. Let's see how that pans out. At a margin, rural is also showing some signs of pickup of the decent pickup in monsoon, and management commentaries around staple companies also started turning slightly better after fourth quarter results. So that is discretionary, and then industrials remain a big overweight for us, whether it is capital goods or real estate. We've continued with our big bullish stance on real estate even now, and then largely private banks is underweight and PSU banks is overweight. So that's how we are overall positioned on the model portfolio side.
Okay, all right. Gautam, what about the real estate theme? You know, some of those stocks have done very, very well. I think a couple of names you all have been positive as well on. You had Shobha, Prestige that did well. And now you have, some of those Mumbai-based realtors like Suntech Realty, which all have been positive on as well. They are playing catch-up. How are you all placed on the real estate theme? And in your pecking order, how does it go?
So, Nigel, we've been positive on real estate for more than 2 years now. I think real estate, which has languished for almost a decade in terms of cycle, is seeing a decent pickup in the last 3 years. And I think we are still in the middle of the cycle. I do expect the developers to behave more rationally this time. And, price growth will be slightly moderate in our view. We think the cycle can get prolonged a little bit. The kind of money that a lot of these developers can make by prolonging the cycle will be much higher compared to what they get by raising prices too high too soon. So that is a phenomenon. That's a fundamental thought process that we have on real estate. As far as our picks are concerned, we've been holding Godrej property from 1,000 rupees. We still continue to hold it. As you mentioned, we hold Shobha. See, Nigel, real estate is a very top-down macro sector. When sector does well, all the stocks will do well. So whether it's a Prestige, which has been our CY23 top idea, and now Sobha, which has been our CY24 top idea, irrespective of the name that you look at in that entire real estate pack, it has done well in the last 2-3 years, and we expect the cycle in both real estate as well as hotels to continue because the demand-supply gap is still in favor of demand right now, and we haven't yet seen the beginning of a rate cut cycle. So hopefully, as and when it happens, maybe in CY25, it can act as an additional trigger for some of these deep cyclicals.
Gautam, so especially for markets like now, I'm not saying that it is the case, but are there any other risks? For example, too much, we talk about whether valuations in stocks are getting a little out of hand, but should one start to ask the question for real estate? Especially, but it's very micro market, right? It's not one exchange like stocks. What's happening in Gurgaon is very different from what's happening in Mumbai and other markets, etc. But some have been sort of raising the prospect that especially in a market like Gurgaon, investor, broker demand, etc. is driving most of this price appreciation now. These 2-day sales, everything sold out, and things like that. Does that worry you at all that the proportion of end-use demand perhaps is coming off and investor demand is rising? At what point does that become a worry?
So, Prashant, we must be asking questions about all sectors all the time, given where the markets are trading at right now. More so for sectors like real estate, you have your defense and railways and all of that. So, to your specific point on Gurgaon, definitely that market is in a very different trajectory altogether. So, you have to be extremely cautious on companies which are direct play on that market, right? There's no price for guessing that market has become completely exuberant in the last 2-3 years. You've mentioned a couple of points around that, flats getting sold within 24-48 hours of launches and all of that. So as an investor, we have to be extremely cautious around the risk reward inherent in some of those stocks. The broader point I was making was last 2 years, you've seen very strong pickup in pre-sales and business development. If you look at the total pre-sales number of the top 10 real estate companies which are listed, you will see that the pre-sale CAGR has been more than 30%. Business development has been going on pretty strongly, 3x, 4x growth out there. Now, some of that pre-sales business development that has happened 2 years back, they are now getting reflected in the P&L. For example, this quarter itself, we're expecting a 40% growth in profit in real estate companies. I know profit is not an operational driver for this stock prices. They depend more on pre-sales and some of the launches. But the fact of the matter is, whatever development that you've seen in the last 2 years is now getting converted into profits and cash flows. And that's where I said from a top-down perspective, real estate remains to us very attractive. Yes, in between there could be rounds of corrections, so that you'll have to bear with. Just look at some of the other sectors that you just spoke about. In the market, there are sectors like defense, where market cap has gone up from 1 lakh crore, 3 years back to 11 lakh crores now. Railways, again, market cap has gone up from 1 lakh crore 3 years back to 7.2 lakh crores now. Well, the profit cumulatively has gone from 15,000 to 30,000 crores for both these sectors put together. So on a 30,000 crores of profit, railway plus defense today, the entire listed stocks in these two sectors are trading at a market cap of 18 lakh crores. So that's a trailing P of 60x now. 4 years back, the trailing P was 12 times. So P itself has gone up 5x, Prashant. So you have to obviously be very cautious, especially in mid and small caps, cognizant of what you're buying and what you're paying for.
But what's the overall sentiment? Is it just still upbeat, or do you think, given the overvaluation that we're seeing in certain pockets, you are seeing euphoria set in? because you also look at valuations, you compare it to the global markets, you track the flows picture in the Indian markets and how the weightages of DIs and FIs is changing in sectorally. Any interesting trends that you've gleaned from there?
So Rima, see, in every bull market, you will always find excesses in some pockets, some sectors. That been the norm. Whether you look at 2003 to 8 or any other bull market in the history, you will always find some sector going into excesses. As far as India is concerned, if you look at Nifty, which is broadly 50% of India's market cap now, it is trading at 20 times, which is on a 10-year basis in line with the 10-year average. Now, obviously, you can dig deeper and say within Nifty, X of financials, the rest of the sectors are trading at expensive valuation. That's fine. If you look at, we've done a good market cap comparison versus profit comparison on trailing 5-year basis. If you look at the last 5 years, Nifty market cap has compounded at 18%. And that's how the Nifty profits have also compounded. So they've kept pace with the market cap. But X of financials, the Nifty profits have compounded only 13% and market caps compounded 90%. So this is a clear-cut re-rating which has happened in the X of financials basket. And that re-rating is even more pronounced in mid-cap and small caps. If you look at the same data for mid-cap market cap is compounded at 27% versus the profit compounding of 17%. And same number for small cap stands at 8 and 28%. So yes, there are pockets where valuations are obviously offering you no comfort. But then that's where you have to dig deeper and do more bottoms up as far as projections and your cash flow analysis is concerned. The second point that you're talking about compared to global markets, do remember, Rima, that India right now on both macro and micro is offering the best combination, 7.5%, 7% GDP growth and close to 15-16% profit compounding for next 2 years on a base of 23% that you've already seen for last 4 years. The important ponderable is where does flow stop? Because that has been a very important part. Because you look at the first 6 months of CY24, the total flows are $28 billion, which is 30% more than what you received in entire CY23. And if you stretch that comparison to, let's say, last 30 months, which is beginning 1st Jan 2022 and ending to 30th June, so 2.5 years. In that 2.5 years, total cumulative FI flows are just $4 billion, out of which 3.5 came in June. But corresponding DI number against that 4 billion is 82 billion. So yes, in a bull market, till the time your flows are very buoyant, the underlying valuations can get delinked from earnings in the short term. But over a period of time, they have to catch up with earnings. Either the earnings have to catch up with the market cap, else the reverse will happen.
All right, Gautam, thanks a lot for joining in and filling us in with all of those details. I like the report you put out on the retail rhapsody, as well as the important point they're making. Everyone's talking about market cap going up, but even earnings have gone up at a similar pace. So that's why, there's not been, the markets are not as expensive as someone thinks. Well, let's move on then. Let's talk about the infra sector now. With the union budget due next week, what are the key expectations from this space? To discuss this, we are joined by Mr. Vinayak Chatterjee, founder and managing trustee of Infra Vision Foundation, as well as Mr. Padmanathan, the senior director of Crystal Market Intelligence, as well as analytics. Thanks a lot, gentlemen, for joining in, and good morning and welcome to the show. Well, let's start with you, Mr. Chatterjee. You're calling for a bigger boost in terms of spend. Could you give us a couple of numbers out there? And do you think the government has enough of fiscal headroom to go ahead and push the accelerator here?
So let's talk about the headline numbers. If you have when you track the last few years, you would have seen that year on year, the outlays have increased by 25 or 30%. And that has been the primer of the economy and GDP growth in a situation where, as we all know, private capex has not been up to expectations. That trend is continuing. And the maths is very clear. For example, a very senior functionary in the finance ministry during the post-budget interactions last year shared in a media interaction that they have a confidential internal report in the Ministry of Finance that a rupee spent on public expenditure on infra and public works results in 3 rupees of GDP, whereas 1 rupee spent on measures like direct benefit transfers, DBT, results in 90 paisa of GDP growth. So the maths is very clear that if you have to constantly keep pump priming the economy with public outlays, which is the case here, then you need to keep investing in infra at the same pace, which means a 30% increase. Now, the last full year budget was 10 lakh crores. I am discounting the interim budget at 11.1, which I thought was just a holding operation. But if you take the last full year budget at 10 lakh crores and you put a 30% increase on that, my personal expectation is that we are likely to see a 13 lakh crore budget from the union government. And the thumb rule there again is that if the union government spends X, then an equal amount is spent by three other constituents, which is private sector, extra budgetary resources, and states. So you're likely to get a 26 lakh crore total infra spend in the economy. And the maths, I mean, I'm not delving into detailed maths now, but the maths is very clear. And that is going to keep pump priming the GDP at expected levels of 7.5 and 8% growth. Now, if you reduce the infra outlay from 30% to say 10 or 15 or 20, then you have to be mentally prepared that you're not going to get a GDP revving up at 7.5 and 8. You're going to see a drop in GDP. So the broad number, in conclusion to your question, is that my expectation is that with the need to keep employment going, to keep the GDP primed to get 8% growth, the minimum expectation is that the government will have a 13 lakh crore outlay, 10% over the last full year. Over to you. 30% over the last full year. Sorry.
Right. Good morning, Prashant here. Sorry, Mr. Chatterjee, just to, you said you put out a number of 26 lakh crores as well. What was that?
See, the thumb rule is that when the central government spends X, then three other constituents together spend an equal amount. So if the central government expenditure is a lead. So if the central government spends 13 lakh crores, another 13 lakh crores will be spent by the combination of states, extra budgetary resources, PSUs, and private sector. So 13 will be matched with 13. You will get a 26 lakh crore outlay for the total, infra spend in the economy. And that will keep pump priming the economy to an 8% growth.
In the interim budget, what was that? What was the sort of number? The 13 lakh crore that you...
1.
Sorry, 11.1.
Yeah.
Okay, got it. Let me just welcome, Jagannarayan Padmanabhan as well. Mr. Padmanabhan, good morning. Good to have you with us here.
Good morning.
So, as you heard, Mr. Chatterjee, of course, said that interim budget was a holding operation, and this is going to be a big one. And they have, things have changed, right? There's an RBI dividend and tax collections have been robust, etc. Well-known facts. First of all, do you think that is going to be the case? Because, if you look at the interim budget as well and look at specific sectors, that is FY25 budgetary, the BE number, railway capex was projected to grow 2%. These are all interim numbers, 2%. Road was supposed to grow 3%. Spend on road, spend on defense 9%, housing and urban affairs 3%. So there was a sharp slowdown as compared to the last many years, 2022, 23, 24. So would you align with what Mr. Chatterjee is saying, that that was just an interim number and we'll get a much larger allocation now comparable to the last few years?
Yeah, so thanks for having me here. I think from a context perspective, we are operating in a fairly larger base. So pump priming has been happening for the last 5-6 years in the infra space specifically. And I think just to cut that into multiple pieces would be important. So roads and railways garner close to about 50% and above in the overall infra spend. I think what Mr. Chatterjee also alluded to is that the previous year was 10 lakh crore, which moved into about 11.1 lakh crore. So that itself was in a way a moderation, and his expectation is a 30% growth. So the interim budget did have a pause in terms of the overall growth. Historically, there has been between 25 to 30% in the infra spend. Yes, we do expect a similar kind of a jump up in the spend, which will happen, and it will go primarily to these two sectors, which is roads and the railways. And we also see and the ability to absorb such huge capital is also there only with these sectors. So given that context, I think this is important. The other ministries that you mentioned, actually the highest I think is about 50,000 crore tops, which will go into the capital expenditure. The revenue expenditure could be higher, but the capital expenditure is tops 50,000 crore in any of the other 5-7 infrastructure, base which is there. Yeah. So hope that answers. Yeah.
Mr. Chatterjee, can we talk about sort of 2 or 3 schemes which you think will receive the maximum attention? Because I think markets will also be interested in understanding that. There was, of course, the entire water theme, which we've discussed with you before. Just 2 or 3 sort of flagship schemes or areas which you think will see the maximum attention. Yeah.
Well, let me speak about the number one policy intervention which the economy sorely needs. And I have been arguing this on your channel and other channels quite vigorously. We see that a product like cement, which is both an Aam Aadmi product as well as the key infrastructure intermediate, accounting for a large portion of the cost outlays, is taxed at 28% GST. The 28% is what is called the sin tax slab. It defies rationality why an infrastructure intermediate, as well as an Aam Aadmi product, a person who is converting his mud house to a cement concrete house, why should we continue with a 28% GST on cement when it itself is one of the primers in terms of cost? So while the budget itself is an arithmetical exercise, we all know that it is also a platform for announcing key thinking of the government and imminent policy changes. So my request to the FM and the Finance Ministry over the last 2-3 years, and now it gathers momentum because of the revenue buoyancy that we are seeing. The government can do it now. Their budget speech should make a reference to the fact that the government is conscious about reducing a 28% GST on cement down to about 12%, and that the reference should be that the matter should be taken up at the GST Council. It will have far-reaching ramifications on the economy, both in terms of leading to a boost in the consumption of cement and construction, as well as, since government is the largest spender in infrastructure, a reduction in cement will make its budgets move that much more forward. It can do far more in a given budget. So all trends point to an economic intervention on cement GST, which is crying for attention. Let me stop here because we can talk about many sectors: water, rail, road, irrigation, rural, urban. But let me stop here because I think this is an important point for all of us concerned with policy making in the budget.
Mr. Jagannarayan, specifically, what are you expecting for the 2 states? One is, Andhra Pradesh, and the other one is Bihar. Given the political compulsions and the way the election is panned out, there is talk about a special status being given, extra support given to these 2 particular states. What is your expectation? What might come out in the budget?
Sure. So before that, can I just add on to what Mr. Chatterjee talked about the schemes part of it, if you allow me? And I think which will be a very important one in the overall scheme of things is the roads which have been getting a fair share, which was driven by the Bharatmala Pariyojana scheme. And I think that was the question which was also asked. In the last 4 months, if you were to see, the awards has been really at a pause. It's been really muted. And the first 2 months due to election, the next 2 months, the awards has really been very muted. I think a couple of 100 crores, 100 kilometers at best has been awarded in that. While the traction for in the same period should have been close to about 500 to 600 kilometers. And the primary reason is from the Bharatmala Pariyojana scheme has not got the cabinet approval as such today. So my sense is in the going forward, this will be a primary area where the government may make an announcement in the budget for a revamped and a higher allocation could go for this particular scheme, which will then be for a medium term at the next 5 years, which will be the phase 2 part of it. And specifically here, I think the capital expenditure, we are talking about lakh crores and all of that. The focus has to move towards from just build out into the services part of it. And when I say services, it is more towards the safety aspects which are there, either on the road part of it or on the rail. So I think a lot of focus which will happen, passenger amenities on the highways part of it, which would be there. On the railways, we could look at something on the Kavach and the security and the safety of the passengers part of it. So I think a lot of this from a medium term outlook because of what has got stopped before, could get announced in the budget specifically. And then enhanced Bharatmala Pariyojana scheme is what I'm expecting in the forthcoming budget. Specific to the two states, unfortunately, I don't track Bihar or Andhra Pradesh on a state level part of it, but suffice it to say, from an infra build out, the states, as Mr. Chatterjee also pointed out, have been matching similar to what has been done by the center. And I'm expecting similar thing to continue going forward at the state level as well. So the focus there would also be on the hard infrastructure build out. We could also look at the rural roads to be revamped, and because that's a significant job generation part of it, which will be the theme for the government. The food chain and the agro part of it is also something which needs to get augmented. So schemes on this nature, specific on the infra part of it, is what we could look at.
I think we barely scratched the surface, but gives us a sense to begin with, and maybe we'll have one more round of sort of a pre-budget chat with both of you. Interesting observations. Mr. Chatterjee and Mr. Padmanabhan, you might want to stay on. We're discussing housing on the other side as well. We've got a housing finance company to ask about expectations there again. I mean, that's more or less infra. Thank you very much for joining us here on the program. Thank you for joining us, and really appreciate your time on CNBC TV 18. We'll take a break. We are back, and as I said, we'll be joined by the management of Aadhar Housing Finance with, what they are watching out for as far as budget 2024 goes. Stay tuned.
Welcome back. Let's continue our coverage and set the tone for budget, which starts next week. Aadhar Housing Finance is the company on our radar. The company listed on the exchanges just a couple of months back. And the management that time had said that they're confident about sustaining a 20% growth. But to talk about growth and what the expectation from the budget is, we have Rishi Anand, MD and CEO of Aadhar Housing Finance with us. Mr. Anand, thank you for joining in. This is Reema here. First, lay out the expectations. Now, you've carved a niche for yourself in affordable housing. That's expected to, have a lion's thrust in the upcoming budget. What is your expectation? Specific schemes, if you could lay that out for us.
Right. Thank you, Reema, for having me back. Yes, I see a lot of traction happening on the pre-budget discussions. I was hearing a while back, Mr. Chatterjee speaking about the cement industry, etc. As far as housing goes, housing broadly, is an economic growth driver, which all of us know. But it also, if you look at it, it impacts various sectors, right from the housing finance companies that are the cement industry, the steel industry, and it is an employment generator. So housing overall, that drives that strength of economic growth. Now, when it comes to expectations, I think the industry as a whole has laid down multiple expectations, right from looking at income tax benefits, enhancing those limits, separate sections. We have talked about redefining the priority sector limits in metros and non-metros. We have talked about redefining the EWS LIG's income limits. And more importantly, and the most talked about, the Pradhan Mantri Awas Yojana scheme.
Okay. On the Pradhan Mantri Awas Yojana specifically, can you tell us, what is it that you're expecting?
Rima, this scheme was, if you recall, and I had mentioned this earlier also, this scheme was available until March 22. And in the pre-budget announcement, interim budget announcement, the FM had indicated the scheme should be back with better contours. Having said that, there are broadly four portions to the PMAY scheme. One, and the most important one, is the CLSS, which is Credit Linked Subsidy Scheme. Then we have the second section, which is Affordable Housing in Partnership. We have beneficiary-led construction, and finally the in situ slum development. For a moment, let me talk about only CLSS, because that impacts the end users directly through intermediaries like us. If you recall, the CLSS subsidy scheme had a limit of 2,67,000 per end user. I think the demand or the request to the FM has been to enhance this 2,67,000 to about 3 lakh rupees. And more importantly, in the previous scheme, the extent of coverage was only 21,000 locations, and there has been request from industry bodies in the housing finance to enhance this coverage to more locations, at least minimum of 50,000 locations.
Okay, so the limit goes up, right? I mean, from 2.67 lakh
to 3 lakhs. That's the request. That's the request.
And of course, number of locations where this is in use, that also should be more than doubled. That's been the request.
That's right. That's right.
Yeah, and you've kind of made, the industry, I'm assuming, has made these representations during the pre-budget consultations?
We have, at multiple forums, we've made these representations, Prashant.
Okay, got it. If there is widespread expectation that since this is an industry with multiplier effect, and the government is looking at ways to do that, to exactly do that, what kind of impact can we see if, say, as you yourself said, the specific demands are met on the CLSS side? I'm not even talking about the other three aspects of the PMAY scheme. What kind of impact can it have on credit growth for companies like you?
See, Prashant, if I can, quote some numbers which will be very helpful for the audience when it comes to Aadhaar housing finance. In the previous scheme, we extended a subsidy of approximately 1,800 crores, which impacted lives of approximately 82,000 individuals, which is approximately 50+% of my housing finance book. So that is the kind of impact we are talking about. 50% of a book of 21,000 crores gets impacted by the subsidy scheme, even if it is 2.667 lakhs to the end user. If it gets enhanced and if the requests are met, I am falling short of words, but it should be beyond 50% of my additional book as we go ahead. And so for the industry.
Right, 50% of your additional book could be impacted. I mean, in the sense that you could
impacted.
It could give a boost to that much in terms of credit that you make.
That's right, and I'll tell you why. Because companies like us, we cater only to the EWS LIG segment. 71-72% of our book happens to be in the EWS LIG segment. Hence, the penetration levels are very high.
So, what can growth rate get boosted to if we do get this incremental benefit coming in the budget?
That's right. It gets boosted completely.
No, by how much? Do you want to put some numbers to this?
Also, so on an incremental basis, we are looking at anywhere between 10 to 15% of my incremental business getting enhanced by this scheme.
And Ms. Anand, what are you factoring in terms of AUM growth as it is, irrespective of whether this comes or not for the coming year, FY25?
Nigel, in the last interaction also I indicated, last 2 years we've been growing at about 23-24% on our AUM. And given the strong demand, the benefits that are going to come up after the budget, I don't see any reason why we should shortfall of 23-24% incremental AUM growth.
And if there are some tweaks in the budget, then maybe in fact you can do even better than that.
Touch wood, yes, definitely.
Okay, all right. A couple of quick aspects. You raise some money via the QIP route. How does it change things, your ratios, as well as how much does it reduce your cost of funds?
From a ratio perspective, the only ratio that gets impacted for a couple of years is the return on equity, which is from an 18.4 as last reported in March 24, falls to about 17.4, 17.5% for a couple of years, and we should be quickly back into the 18% plus ratio.
Okay, and cost of funds?
So cost of fund will not see a major impact as we move ahead. I think anywhere between 20 to 30 bips impact is what we are seeing.
And you're looking at NIMs of around 8 to 8.5%, right?
We continue to look at 8.5% plus NIMs.
You said you expect the number of locations to increase under PMAY. Currently, it's 21,000. In the budget expectation or the representations that you've made to the government, how many locations do you now want covered?
We should look at, and when we talk about these locations, Rima, we are not talking about rural locations at all. We are talking about, roadside towns, small talukas, small districts, and anywhere between a good number to have under this populist scheme should be about 40,000 locations.
So doubling it.
That's right.
And how has asset quality been for you? It was under control when we've spoken to you last. But in the last 3 months, has there been any incremental stress that you've observed, or has it gotten better?
So I would say, it is a very seasonal kind of asset quality movement that we see in our industry, and we are completely on the track. As you remember, and you rightly said, we closed the year March 24 at 1.08% GNPA numbers, which are well within our budgeted discussions.
All right, we'll leave it there. Mr. Anand, great to have you with us here. And I hope we can have you on the day of the budget. Once the announcements are out and the speech is made, it'll be lovely to get your reactions to what is announced. And hopefully some of what we discussed does come through for the sector. Thanks very much for joining us. That is
very helpful. Thank you, Prashant.
Thanks very much. That's the management of Aadhar Housing Finance with some perspective on hopes for the housing finance sector. We're up 50 points on the Nifty, 24,634, and things are looking pretty good. 1,600 stocks are higher. You've got about 700 stocks which are down, and it's not a bad-looking screen at all with lots and lots happening. Well, let's shift our focus to the auto sector now. First quarter earnings have started coming in. Bajaj Auto will be reporting its Q1 numbers today. It's expected to report a decent quarter. How will Q1 as a whole look like? Let's discuss this with Kapil Singh. He's auto analyst at Nomura India, and he's joining us to take some questions. Kapil, good to have you with us here. Thank you for your time. Good to have you with us here. Just a quick word, Kapil, on stocks under your coverage. What are the broad expectations, and what are you really watching out for clues to kind of look into the future as well?
Sure. Good morning, and thanks for having me on the show. So first of all, coverage universe as a whole is seeing a pretty strong earnings growth. So revenue growth, for example, for the OEMs will be around 10%, but EBITDA growth will be somewhere around 25%. So still margins are going up, and this is going to be a strong quarter as such. Similarly, for suppliers also, we are expecting EBITDA growth to be somewhere around 25 to 30%. But the interesting thing to note is that now the inventories in the for the OEMs have filled up fully, and there are in fact discounts and deals on offer as well. So what we would look for going ahead is what kind of inventory levels OEMs hold, and what is the demand outlook, because there is a risk that margins could start coming under pressure from the second quarter onwards. And also we have seen a little bit of inch up on the commodity prices. So these will be the two key things to watch out for as the earnings seasons begins from today.
So higher discounts, I mean inventory levels, right? Which kind of, and you said that from Q2 margins could come under pressure, and higher commodity prices, input prices. Which are companies most at risk from the first point? Higher inventory and discounts, and to the point that you're saying that from Q2 onwards, margins can see meaningful pressure. Is that already the base case in stocks, or you think that's not really in the price right now?
No, I think it is to some extent factored in, because industry bodies like FADA, for example, has talked about it, and SIAM has also acknowledged it. So I wouldn't say it's not there in expectations, but sometimes, if the inventory is too high, the discounting can overshoot. So these will be the risks, I would say, to watch out for. And it depends on how July, August, September kind of period goes as well. But what we are starting to notice is that industry growth has fallen to mid-single digit or low single digit kind of levels. And what that means is that overall, industry is not growing high. Whereas all the players are looking to gain market share. So there will be some kind of increase in discounts that I expect. Some of it may be visible in first quarter and some more visible in the second quarter. I would say that OEMs who manage inventory well may not really see this risk. But if they are not able to bring down inventory quickly, then there will be no option but to increase the discounts. So I think across the board, we are seeing all the OEMs increasing either discounts or reducing prices. We have seen, for example, Mahindra and Mahindra, Tata Motors also reducing prices, but rest of them are increasing the discounts. So it's in some way addressing demand problem and in some cases inventory problems.
Okay, hi Kapil, good morning and good to see you in. This is Nigel on this side. Let's focus on the two-wheeler space. I'm just looking at your top recommendations. You're still positive on Bajaj, while you're not so positive. I think you have a reduce on Eicher and you're neutral on TVS Motors. What are the expectations out there? And is that reduce on Eicher because of valuations, or do you expect growth to be relatively lower?
Yeah, so Bajaj Auto has been our top pick, and we are still maintaining that. They've been doing a lot of interesting things. I think besides the core business, where the portfolio has shifted more to the 125cc and above segment, which has seen higher growth. They have also done quite well in the electric two-wheeler space. And what we notice is that the volumes are ramping up pretty nicely as we see, for example, the month of July. They are already getting into mid-teens and closer to other leading players like TVS. We saw the launch of the CNG bike, which is another interesting proposition. And we are hoping that that product can also gain traction as we go forward. As far as some of the others are concerned, I would say particularly Royal Enfield you asked, I think the issue is of growth. We feel that at the level of valuation where it's trading, the growth may not be strong. And there will be some more some more market share pressure that would continue going ahead as well. Because we will see players like Bajaj Triumph and Hero Harley continuing to ramp up. And that could put more pressure on growth going ahead as well.
M&M is your top pick in the automotive space. Recently, M&M share price came under pressure after that impetus for hybrid cars, a move which will benefit peers like Maruti. It's happened only in one state of Uttar Pradesh, but M&M stock corrected. Is this, how big a risk is this for Mahindra and Mahindra?
So look, I think as far as our assessment is concerned, we'll wait for a direction from the government on what the final implementation of the policy is going to be in Uttar Pradesh. I don't think the finer details are out as yet. But as we noted that it is, it's just one state which has implemented this policy. And even there are discussions undergoing that there may be some price limits, etc., as well, which could be imposed. So we'll wait for the final policy. But our assessment is that there are significant incentives or policy support for electric vehicles, and I do expect that to continue. So we have the PLI schemes for automobiles, auto components, for batteries, and I think taxation policy that India has is also very supportive. So now from next year onwards, we will start seeing cars coming out from all the players, including M&M. And I think we will see a pickup in electrification from 2025. At this point, the policies which are there, or the taxation policy which is there in particular, doesn't look, from the central government, doesn't look very supportive of hybrids. So that's the reason that we are not expecting hybrids to really gain share in India till there is any significant change in policy. So I think if you ask me, what I would watch out for is how the electrification picks up. I, at this stage, don't feel that hybrids will gain share with the current policy framework that we have.
Got it. Kapil, we'll leave it there. And thank you very much for running us through what you're expecting from Q1 and, of course, other allied industry issues as well. Kapil Singh, auto analyst at Nomura India, with perspective on the sector and specific names as well. We'll take a quick commercial break here. We'll come back. Okay, I think Mitesh is with us. Mitesh, for 10 o'clock calls. Mitesh, the market's up 60 points on the Nifty, but I think with stocks, there is a lot more action. What are your trades?
Prashant, Balrampur Chini is breaking into a fresh swing high. So buy here with a stop at about 445 and a target of 470 can be looked at on the upside. And the other one which I like is Marico. Buy here with a stop at 649 for targets of 680.
Okay, thank you very much for that. By the way, Reliance Industries has moved to the day's low. It's down close to about 0.6%. But on the way up, IT is moving up and PSUs. BPCL Coal India, top gainers on the Nifty. Get into a break. On the other side, we'll talk to Manisha Gupta. Welcome back. Up nearly 50 points on the Nifty. Today as well, the Nifty's gone and hit a record high in the early session. Yesterday, the high on the Nifty was 24,635. The high today was 24,650. So third consecutive day of records being made on the Nifty. But it's time now to talk commodities. Manisha's with us. Manisha, iron, gold?
Oh, it definitely is, yes. The overnight surge in gold prices has been quite on the stronger side. And from where we are trading right now, gold is not too far away from its all-time highs of $24.50 an ounce. The last 3 weeks have been on the positive side, and the gold prices only seem to be building up onto this one right now. So with the U.S. Fed now suggesting that the Fed will not wait for a 2% inflation to hit before they start taking an action, it is now a 90% probability that you will see the first interest rate cut from U.S. Fed come in for the month of September. That clearly has been supportive. And very interesting Citi report which says that the Fed rate cuts historically have led to 13% of gains in 6 months post the cut. So that is perhaps what the industry is readying itself for. Citi also has suggested that by mid-2025, the gold prices have all the ability to go up to $2,800 to $3,000 per ounce as well. If you look at this year itself, well, the gold prices have gained up by 16%. Silver clearly outperforming with 32% of gains in this year until now. This clearly has been an outperformer, not just within the precious metal, but within commodities and various other asset classes also. Interestingly, the gold ETFs globally also seem to be looking at more inflows in the last couple of months now. The creative or the cumulative gold holdings in ETFs are still, though, at 2020 lows, but the last couple of months seem to be on the supportive side. Now, interestingly, what is happening in India is that you are looking at very strong gold imports and platinum imports as well. This is happening because you are looking at a loophole when it comes to imports here, and multiple, multiple duty cuts as well for this one. So when you look at the platinum imports in past 4 weeks, they are higher than all of 2023. So what India has imported in sense of platinum has been almost to the tune of 11 million tons there, while all of last year was less than 10 million tons. Now, the government rule says that any alloy that is containing 2% or more of weight by platinum is seen as platinum alloy. But what the bullion dealers really seem to be doing is that they are actually importing gold in the garb of platinum there. So while the gold import duty is 15%, platinum duty is 5%, and with a bar which has 2% of platinum and 98% of gold can be imported, saying that it is platinum. So this is a loophole that we've seen happen in India, and what that has led to is that gold prices within Indian markets are now trading at a discount. So on 1st of July, gold was at a discount of around $10. It's at a discount of $34 an ounce right now if you were to buy gold in the open market there. We do understand that Delhi is working on this loophole right now. There are multiple duty that you can see in sense of gold imports, proper gold import under CEPA, gold import under FTA, gold from least developed countries as well. So this is something that we do understand the government is sorting right now.
All right, Manisha, thank you very much for that. Very interesting. Appreciate it. We'll take a quick commercial break here on the other side in our special pre-budget program, the segment. Lata will connect with Neelkant Mishra, member of the PMEAC and chief economist at Axis Bank, to discuss the big budget numbers to watch out for. Stay tuned.
Even our last 2 years, the quarter-to-quarter trajectory has been, the first quarter is the weakest, around this 17% in both the previous years as well. And then it's the second quarter where we pick up to, let's say, somewhere around 18%. And then the third quarter is the peak, driven by the software seasonality, which is our most profitable segment, as you know. And then the fourth quarter is kind of near the annual average, again, just like Q2. So that's the trajectory, and we seem to be following that. The wage hikes, last year itself was a delayed cycle, delayed by a quarter for everybody practically. So we'll have to see what we do this year. We haven't still made the decision, as we discussed on Friday as well.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. At this point, we feel confident of the overall guidance for the year. In the last 7 quarters or 8 quarters, There's been kind of differing kind of signals that we've been getting, and sometimes the ramp-ups are very short.
Welcome back to our pre-budget special, The Big Numbers. As we have been discussing, this time the government is going to actually be on the front foot. They're going to have more revenues than they estimated in the interim budget. How much more and where will it use this money? We have now with us Neelkant Mishra, member of the PMEAC and Chief Economist, Axis Bank, also Chief Strategist at Axis Capital. Neelkant, thank you very much indeed for your time. Well, first up, what's the estimate you are working with? 1.3 lakh crore extra comes from Reserve Bank, clearly. Against 80,000 crore, they have given 2.1 lakh crore. So that 1.3 is there. How much more would you think the revenues will increase given very good tax collections?
So the nominal GDP itself, I think, can get bumped up because growth in the last 6 months, I mean, growth forecasts have been revised upwards. And as you know, the fiscal deficit as a proportion means that there will be more crores of money to spend with. So give or take round figure of 1.5 lakh crores of extra expenditure that the government can do if it needs to. It has to figure out what to do with that.
2 lakh crore,
first,
you're saying?
I think, no, 1.5 lakh crores. So 1.26 from the RBI, extra dividend, and then there is an additional funds from higher tax to GDP and also the higher nominal GDP itself.
Yeah.
Now, the question to ask is, what can the government do with that 1.5 lakh crores? I think that it is very likely. I mean, if I was recommending it, I would recommend 20 basis point reduction in the fiscal deficit target. Remember that in January, when they were working on the February budget, the vote on account, the government felt that the economy could withstand 70 basis points of consolidation. And given that the FY24 deficit came out to be 5.6% instead of 5.8%, which was there in the revised numbers, if you build on 70 basis points of consolidation on that, then you get to a 4.9%. That takes care of about 60,000 crores of that 1,50,000. The next question for budget makers would be, should we do more? Can the economy withstand more? Because there is fiscal space, so can we bring it below 4.9? And there the question would be, if you consolidate too fast, then it becomes a risk to the economy as well, because then the economy slows down and the debt to GDP concerns then actually become worse. And therefore, it is very possible, I mean, the government should be trying to spend that 90,000 crores. Now, when you think about the capex versus opex split, one of the big measures of the government, which has actually worked somewhat better than most people expected, is the interest-free loans that were given to state governments. And that number was 1.3 lakh crores in FY24. For some reason, in the vote on account, maybe because of lack of fiscal space, it was brought down to 1.1 lakh crores. It is reasonable to expect that that number could get bumped up, and the government may offer 1.5 lakh crores, maybe another 40,000 crores of an increase in the FY25 budget. And then you are left with about 50,000 crores. Some of that very likely will go into the expansion of the Pradhan Mantri Awas Yojana Gramin, the rural housing scheme that the government has been talking about. And then there is the remaining 25,000-30,000 crores, which actually could be used for several purposes. So that's broadly the contours of the changes that you would expect versus the vote on account.
Okay. Just to get the numbers right on the fiscal deficit, you said 0.2% percentage points lower. So it was 16.9 lakh crore, which is what they had said that would be the fiscal deficit. It comes down to what, 16 lakh crore or something? Or if you are thinking in terms of a market borrowing number.
So it goes down from about 5.1% of GDP to 4.9% of GDP. That's a easier way to remember it. And that would be about 60 plus thousand crores of reduction in the absolute numbers. Yes.
Okay, so then in the interim, they said 16.9 lakh crore as aggregate fiscal deficit. You're saying that it could go down to 16.3 or 16.4. So you expect market borrowing also to come down.
Good.
I mean, that's important because that will mean cost of capital for businesses improves, as your paper pointed out.
Oh, yeah, absolutely. Absolutely. So we have been talking about it. So we felt that given what the state governments are doing, and there is, the FY25 budgets from the states also, we expect that the aggregate deficit could be, I mean, it's currently about 3.1, but generally the actual deficit comes out to be much lower. And if you adjust for the interest-free loan that is counted as capex in the central budget and as part of capital expenditure in the state budget, so there's kind of a double counting. I think the aggregate government borrowing by FY26 could be well below 7%. So I think the cost of capital coming down is a very strong argument. But remember that as the RBI pays its dividend, how it embarks on it is also very important, because remember that when the RBI pays a dividend, like any other bank or any other company, it is actually shrinking its balance sheet. So in the process, the net impact on the borrowing number will not be very meaningful. So we have to be cautious on how we interpret it, and therefore, when we think about how the government is going about allocating its resources, remember that they will also, because they're very careful people, they will also separate out what is sustainable and what is not, in the sense that there is an element of a one-off in the excess dividend that the RBI has given.
Yeah. No,
and
I agree
it will
with
be
you.
dealt with in a one-off way. So,
Yeah, I agree. But, the way in which the Fed interest rates are panning out, it may not be much lower. And the Reserve Bank has a lot more money to put in US Treasuries. So perhaps it won't be that much lower. We may have this one-off one more year, if not 2.1 lakh crore, maybe 1.5 lakh crore. But that's a different matter.
Correct. That's absolutely correct. And in fact, when this special dividend came, we wrote, we published notes on this, that FY26 also is likely to be above 1.5 lakh crores, even on conservative numbers. So I'm totally with you. But that's not how bureaucrats generally are trained to think. Forecasting is very much a market's activity. The bureaucrats tend to be quite conservative in their thinking. So it is unlikely that they will extrapolate from this and say that, oh, look, now RBI every year is going to give us 1.5 lakh crores or 2 lakh crores of dividend. I don't think that would be prudent on their behalf.
Okay. Just one more word on this capex spend. See, if they give a higher interest-free dividend, interest-free grant to the states or loan to the states, that will come under capex, right? Capex is at the moment, the 10 lakh crore has become 11.1 lakh crore. But now, both states and centre have only 8 months to spend. You think increasing that will be... you were the one who once pointed out on the channel that spending is also very difficult. It requires bandwidth.
It is very, very difficult. So, but you're spending it on anything else is going to be much more challenging. So let's look at it this way. The states sometimes can also draw down on that loan, because that was the allocation for this year, and then choose to spend it in the next year. So it is not necessary that, because see, remember that the states also ended the year with, I think 2.5 lakh crores plus of cash balance on their balance sheet. So it is not that they are able to spend everything. And the assumption should be, and there are some states which are far more aggressive, some states are of course very slow in their administrative steps, but the states that can spend and are coming out with valid spending plans maybe can draw down better. So, but giving them an option to spend is far better. The other alternative is to, because see, any other scheme that you come up with is going to take time to sort of design and then detail and then implement.
Yes.
And then the easy thing which everyone seems to think of is do income transfer, just put money into people's bank accounts. Yeah. So as some of the debates have rightly said, this is not a very large part of this is sustainable, in the sense that It's only the last 30,000 crores of that 1.5 lakh crores ballpark number that I mentioned early on, which can be considered to be a sticky number in the sense that your nominal GDP is doing better. So great. Tax to GDP, it has gone up. Maybe it will stay higher. And therefore, that's the only number that you can really play around with. And given that the states themselves, so we put out this note that Maharashtra was the 10th state, it was not the first state, 10th state to announce an income transfer scheme for women. So if you add up what Andhra and Telangana and West Bengal and Assam and Tamil Nadu and Karnataka and Maharashtra and, so these states are doing, Madhya Pradesh, the total number is 1.8 lakh crores already. So 0.6% of GDP at an annualized base is already being spent by state governments on income transfer schemes. So another 30,000 crores is not really going to move the needle much. So that's the reason why I don't think the government is going to embark on that.
Okay, so where are you expecting the money to be spent then? If there is RevX, after all, there are some people who say that the election result indicated pain at the bottom of the pyramid. And therefore, immediately after the election, the Prime Minister even announced expanding the PMAY, the Awas Yojana. So what would you expect in terms of revenue expenditure?
Yeah, so, well, I think that the schemes like Pradhan Mantri Awas Yojana are the ones which will get a higher priority, because I think the priority of the government has been, if you see the behavior, the intentions visible over the last 10 years, is that they would rather help build assets which then last a while and then help the productivity of the household over a period of time. So whether it is toilets or electricity connections or rooftop solar or the Awas Yojana. So those kind of schemes, I think, are where you will see additional expenditure. Because
let me try
if out of 1.5 lakh crores, 1.26 lakh crores is a one-off, it would, that's why I feel that it would be much more prudent to hand it over to states as a one-off, extra loan. You want to build some assets with it, go ahead and build it. Because that can't be steady, continuing expenditure.
Fair point. I have to quickly rush in one last question since I'm out of time. What would you tell your market viewers? What are the good bets, pre-budget or for the year itself?
So I would first tell the market viewers, which I've been trying to tell for the last 10 years, please don't pay too much attention to the budget. I think it has very low relevance for the overall markets. In terms of what to prioritize, I would continue to be cautious. I know caution over the last 1 year has been a bad thing to do. Markets have been on a tear. But some of the underlying issues, that economic acceleration that we are seeing now seems to be stabilizing. So we are growing very well, but we are no longer accelerating, and therefore the positive surprises on earnings are likely to dissipate, and we are going to get into a period of consolidation. So it's better to be prudent, be in large caps, in lower price to earnings multiple stocks.
Oh, thanks a lot, Nilkant Mishra, for all those messages. The government may not go on a spending spree because a large part of the income, RBI income, could be treated as a one-off, and that's the way to do it. And the second big takeaway, budget is noise for the stock market investor. It's important for the economy, and the economy is perhaps now accelerated and on an even keel. So don't run away with expectations if you are a market investor. Thank you very much for joining us on this special edition of Run Up to the Budget.
Things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now, so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they're younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing, and then ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us, what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth.
Shares of Bharti Hexacom rally over 6% after brokerage firm JP Morgan initiates coverage on the stock, an overweight rating and a target price of 1280 rupees a piece.
Hudson Agro surges in trade on the back of a strong showing in the Q1 numbers, which rise close to around 10% on a year-on-year basis. The summer season has also aided the company's ice cream business.
Shares of Voda Idea rally after the Supreme Court agrees to consider the company's plea for an urgent listing of its curative petition in the AGR case. The move is expected to benefit Bharti Airtel as well.
Bandhan Bank, Piramal Enterprises, Balrampur Chini and IEX, all of them climb more than 1% in today's trading session as they come out of the F&O ban.
Oil India comes under pressure after the government of India raises the windfall tax on crude oil to 7,000 rupees per metric ton. The stock is down more than 2%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. And in the first hour itself, the Nifty has hit a half a century. Can we build on from here? Can we end with better gains from here? I'll tell you what, the second half of trade belongs to the financials and the banking names because we have weekly expiry playing out on both those two indices. I think, Mangalam, what's positive today is there are way more winners than losers. The current advance decline ratio is 2:1.
Twice the number of stocks. Yes, that's doing extremely well. And we're also seeing some traction in a couple of these Tata Group names actually as we speak. So Tata Motors has moved to the high point of trade. Tata Steel has done well. And we have Tata Consumer as well, which now is among the top gainers that we have today in the last hour or so. Tata Consumer should come up for you. It's a big up move that we're seeing on that stock. We have important results as well, over the next couple of days. Asian Paints, tomorrow is a market trading holiday, but Asian Paints comes out with its numbers, and then day after, we do have the numbers coming in from Infosys. So to that extent, all these stocks will be in focus. Though I'm watching out for a couple of these pharmaceutical names. Since yesterday, they have been buzzing around as well. So case in point, something like an Alembic Pharma, Strides Pharma, both of them are the top owners when it comes to the F&O stocks. So just keep an eye out on that. India Cements too continues to buzz now at around 320 for that stock as well. But let's get you some ideas of profit coming in from our colleagues at Money Control Pro. We have with us today Lekha Badlani Chamnani.
So our stock pick is this PSU giant Coal India, as we think the secular growth trend is in place as India's power consumption has been rising, driven by increased demand from the industrial segment. The company's total production in Q1 FY25 increased by 8% YOY, with 16% growth seen in the supplies to the non-power segment. Now, given the demand trend and government's plan to reduce coal imports, Coal India, which caters to 80% of the India's coal requirement, plans to fully meet the domestic demand. Now, in order to achieve that, it recently announced changes to its e-auction norms. Among the many initiatives to ease the entire process, the company plans to lower the earnest money deposit and also increase the quantities offered under the e-auction hammer. Now, we think the easing of the e-auction norms will be favorable for Coal India's customer more than the company itself. However, bringing in more volumes through the e-auction route should help cater to the unserved domestic demand and increase volume starting Q2 FY25. While the e-auction volumes account for only 10% of the Coal India's total volume, this segment is important as the realization is significantly higher than the FSA segment. Now, we think the e-auction premium over FSA is likely to remain supported at the current levels or could see a moderate upside, supported by surging demand from the non-power sector and sturdy global benchmark prices. Now, trading at 4.7 times FY26 estimated EV/EBITDA and a dividend yield of 5 to 6%, we think the stock is well placed to see more upside.
Well, thanks a lot for that, Lekha. We'll keep an eye out on that one. Well, let's welcome Shilpa Rao to Prabhudas Leela for a technical check on the markets. Hi, Shilpa. Good morning and always good to see you in. Well, markets holding well with a gain of closer around 60 points odd. Tell us, what are the levels you're looking at? It seems that 25,000 mark is well and truly on.
Good morning, Nigel and Manglam, and thank you for having me on the show. Yes, Nifty and Bank Nifty, both the indices are actually holding on very well, and Nifty attempting a breakout towards 24,850 to 25,000 zones is very likely to happen. Now, the support base, one can elevate towards 24,400 and stay long and look for targets till 25,000. Likewise, Bank Nifty also sustaining 52,500 to 600 zones, acting as a mild resistance. Once it breaches that and sustains, you will see 53,500 and levels coming very soon.
Okay, all right. What about individual stocks, Shilpa? What are you looking at?
I have two buys. The first one would be from realty sector. I like Oberoi Realty a lot. Oberoi Realty is witnessing some sort of breakout here, and if it sustains the 1700 mark, then you will see a very sharp move moving towards 1900 positional. Intraday also you can expect 1780 to 1800 zones. The same has been recommended also at Prabhudas Leela today. The other one would be a buy in Kolpal, again recommended same at PL. You are seeing that there is again some sort of breakout above 3100 zones, and as long as it is holding these levels, Kolpal can do 30 to 50 to 3300 positional, and on a very short term basis intraday also you can expect 3180 to 3200 zones coming in.
Do you have a view on Chennai Petro, Shilpa?
Just a second, I'll just check.
No problem. It's been a big mover. So Chennai Petro is up around 23% this month, 15% up this week itself. And if you look at the last 12 months or so, it's an up move of nearly 173%. So it's seen a big move. Let's see whether that sustains from here on or not. What could be the reasons for the same from a chart standpoint? Shilpa.
Yes, Manglam, if you see for the weekly breakout also, it has given about 1060, it is sustaining that. And now at 1200 zones, I wouldn't suggest to go long on immediate basis, but yes, on declines with a stop loss of 1060, definitely it's a good buy. For positional targets, again, above 1408.
All right. Thank you so much for joining in and giving us your views on individual stocks and the indices, Shilpa. With that, let's take a short break. Come back on the other side. We'll have with us the management of Anthony Waste Handling, one of the big stock movers in yesterday's trading session on account of their first quarter update. The management, Mahindra Ananthula, joins in to discuss more.
markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation.
Welcome back. The telecom stocks have been on our radar ever since last evening, where there was news coming in. The Minister Jyotiraditya Scindia will be meeting the telecom service providers and industry stakeholders shortly. Ashmit joins in to tell us what could be on the agenda. Ashmit.
Well, the Stakeholder Advisory Committee, we understand the meeting is about to begin shortly. This is an effort, an outreach by the new Minister Jyotiraditya Scindia to reach out to the industry stakeholders to learn more about the industry's concerns and also share some of the pressing issues that the government has on its mind. Now, firstly, let's begin with who's likely to attend the meeting. Let's bear in mind that the invitations as a member of the Stakeholder Advisory Committee have been sent out to some of the biggest hitters in the industry. So whether we're talking about Sunil Bharti Mittal, Kumar Mangalam Birla, Akash Ambani, N. Chandrasekaran from the Tata Group, the invitations have been sent to them. The invitations have also been sent to Bharti Airtel, MD Gopal Vittal, as well as to Akshay Mundra from Vodafone Idea. So essentially, we're expecting the top leadership, the top deck of these telecom companies to join. This would be the first meeting here done by the Minister Jyotiraditya Scindia. Now, some of the aspects to bear in mind. One of the key concerns that are expected to crop up is the network quality. That is one concern that the government has. Unsolicited commercial communication is another key concern that the government has on its mind. As far as the industry is concerned, they will be speaking about issues such as the 5G network, the way the rollout has panned out, looking ahead at potential 6G collaboration. And also bear in mind, this would be the first such meeting coming in after we saw the tariff hikes being undertaken by all the companies in question. So a whole host of issues that are likely to be taken up. But this will, again, being the first meeting of its kind between the minister as well as the telcos, it will be more of sharing the initial ideas and setting the tone for future conversations.
All right, Ashwin, thanks a lot for that. Those telecom stocks in focus today on various news pieces, also on account of some brokerage coverage coming in for Hexacom as well, up around 6.5% for that stock. But let's talk about another stock which was a buzz in yesterday's trading session. That was Antony Waste Handling, after the company came out with its first quarter business update. Mahindra Ananthula, who's the Group President of Operations and Business Development for the company, joins us now to discuss the company's outlook going ahead as well. Thanks a lot, Mr. Ananthula, for joining in. You know, the core revenue for the first quarter was up 11%. It was driven by escalations in tipping fees, revenues from fixed ships, also steady contributions coming in from the new collection and transportation project in Panvel, along with sale of power and waste to energy project itself. So this was the first in the series of steps that you had taken. What one wants to understand is how much higher can it be from here on when it comes to, you know, the utilization of your plants, further scaling up. So this first quarter revenue growth of 11%, how much higher can this be for the entire year?
Good morning to you and all your viewers. Thank you very much for the kind words. Yes, we are extremely bullish about the way some of the last 2 quarters have fared for us. And specifically talking about the waste-to-energy project, in the second quarter of the first year itself, we have successfully managed to stabilize the plant operations. And that reflects in the very high PLF of 89% in the second quarter. I mean, we expect that in the first year of operations, we can achieve a PLF of close to 80% on an annualized basis, and which is by no means a small feat, considering all power plants typically work at around 65-70% in the first year. So we are extremely pleased by that. And going forward, I mean, not only this plant, we are also looking at some of the new ventures, which will give us a very healthy growth going forward.
All right. Hi, Mr. Mahindra. Good morning and good to see you in. So you're saying that the PLF numbers are encouraging, which is good to hear. Now, could you tell us about this 25% growth rate guidance that you'd given? Given the start you've had to the year, do you stick to the revenue growth of close to around 25%? And could you outpace that? Or do you believe that there's an upside risk to the 25% guidance number?
I mean, just looking at the order book that we have, which is around 8,300 crores, we are very positive that we can clock a CAGR revenue growth of close to 20 to 25% over the next 5 years. So we stick, by and large, we stick to the guidance which we have been giving since last few quarters.
All right. Just to understand, the industry size is around 4,500 crores?
I mean, it depends. I mean, you know, when you talk of industry, I mean, if you're looking at the processing industry, I mean, that's you can say probably close to 4,500 or 5,000 crores. But then the business, the addressable market for us is the business of collection and transportation, processing. We are also talking of alternative fuels, recycling, and so on. So the large market size is extremely large for our business.
So your target market is how big, sir?
I mean, difficult to put a number because especially the collection transportation is a very unorganized market and more regional. But among the organized players, I mean, I would say that we are in the top 2.
What is the kind of volume that you are targeting to handle this year? I mean, the first quarter, if you look at your total municipal solid waste, the handle numbers were close to 1.2 million tons. On a quarterly basis, what is this number likely to be? And do you get paid per ton, or is it just a long format contract that you have irrespective of the tonnage here?
So, yes, I mean, it's by and large, the collection and transportation contracts are tonnage based. So we are paid on tons collected and transported. That's on the collection and transportation segment.
Okay. Oops.
Right, we'll just try and repatch that connection with him. So on the CNT business, the revenue billing is done on a tonnage basis, though an order book of 8,300 crores could keep the company afloat for 20 to 25% revenue CAGR over the next 4 to 5 years. 80% PLF is what they're targeting in the waste-to-energy power plant this time around as well in the entire year. So we'll keep an eye out on how this pans out because it's an interesting business. You know, time and again, we do ask the management whether they have any impact of change in political scenario to their business itself or not. They say, no, these contracts are very long-term and there haven't been much changes. It'll be very interesting where the growth comes by, largely because of the big move that we've seen in the stock over the last 1 year or so. It's nearly doubled.
Well, I think, you know, what the street is excited about, Mangalam, is it's one of the only listed players in this space. They've been there for, I think, more than 2 decades odd. And now that an investment phase is over, the street is eyeing the growth phase. So I wanted the management's comment on that as well. For the time being, they've given us that number of a CAGR of 20-25% over the next 5 years or so. It appears that they're well placed.
Yep, I guess we have him back with us. Mr. Ananthula, you were talking about the tonnage outlook going ahead.
Yeah, that's right. So I was talking about the waste-to-energy project where we have 2 revenue streams. So we are paid a processing fee per ton of the waste that we get in our campus. And the second is the sale of revenue. So the processing plant like waste-to-energy has 2 revenue streams. The collection and transportation contracts are paid on per ton basis. By and large, 90% of the contracts in India are structured on those lines.
And what is the per ton sort of realization that you make? What is it likely to be? And what is the kind of tonnage that you are likely to handle going forward?
So, I mean, we don't give specific numbers on each project, but specifically talking about the waste to energy project, we get about 1,000 tons of waste, which is guaranteed as per the concession agreement. And we are going to process about 700 tons in our waste to energy plants.
Okay, all right. Mr. Mahindra, also, wanted to understand what about the margin outlook? You've been doing margins in the vicinity of around 20% for the past year. So top line growth of 25% we have. What can the margin number look like?
So both for EBITDA as well as the PAT margin, I mean, our guidance stays. I mean, we expect to maintain our EBITDA margin of 22-23 odd percent, and PAT of about 10%.
Okay, all right. And any quick update that you can give us with regard to the new venture you were looking at, the vehicle scrappage business? I think the last time you said you're looking at a capex of around 15 crores, but it's in initial phases. Tell us more.
That's right. So we have made progress since then. One key change that we did is that earlier we were planning to take private land on long-term lease, but then after looking at the risks involved in leasing land, we realized that we are going to take land in industrial area so that we have more longevity and sustainability of the project. So that's one change. We have already identified 3 land parcels for the project, which is going to be a recycling park, in which we will have the vehicle scrapping facility as well as tire recycling in the same project, in the same project area.
Vehicle recycling and tire recycling. Just before we let you go, what would the RDF revenue for the entire year look like for this year?
So again, I mean, we don't give specific revenue for various products that we have. But just to give you an idea, I mean, in terms of tonnage, this year we clocked close to 35,000 tons, which is almost 33% higher than the corresponding quarter of the previous year. Last year we sold about 130,000 tons of RDF. This year we're likely to sell about 2 lakh tons.
All right.
And
thank you.
And contribution in all those are continuously increasing.
All right, thank you so much for joining in. Wish to have a word with you after you've reported your numbers as well, so that we can get into the nitty-gritties of what you've reported and what you're likely to do going forward. But 20-25% revenue CAGR with margins around that 22-24% is something that the street likes. There has been a smidge of an uptick in the stock after an up move that we saw yesterday post your first quarter update as well. And that's the management of Anthony Waste Handling. But with that, we'll slip into a short break. But as we do that, here's a quick programming note. Coming up tomorrow is the market holiday at 9 a.m. is a very, very special offering. A big CNBC TV18 exclusive just ahead of the budget. One of the world's top market strategists is visiting us in our studios. Chris Wood of Jefferies will make his bull case for India. And also, don't miss out on this exclusive chat between Chris Wood and D Street stalwarts Ramesh Damani and Utpal Chet. All of this on Wednesday, that's tomorrow at 9 a.m. only on CNBC TV18.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions. On the go.
Welcome back. Let's talk about the big news that came in overnight. It was CNBC-TV18 exclusive, which was later confirmed. Vedanta has indeed gone ahead and launched its $800 million QIP. Nigel has moved across to the wall to tell us how the proceeds are likely to be used and how is this likely to aid the company's growth plans. Nigel.
Well, that's right. Vedanta has launched its $800 million QIP, which includes a base issue of around $600 million and around $200 million, which is a green shoe option. The timing is perfect because the globe is bracing for rate cuts, which will result in a softer dollar and serve as a booster shot for base metals. So Vedanta is very, very well placed. Well, Vedanta can use these funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years or so. It can also look at retiring high-cost debt and ultimately make a bit of a pitch for a change in its ratings. Let's see whether that happens, but that will happen with a bit of a lag. Now, the QIP entails a dilution of approximately 3 to around 4% of its total equity share capital. And so the promoter holding will get diluted a little bit from around that 59.3%, which was last reported in June 2024. But there will be a lock-in of close to around 60 days for the promoter entity. Now, the promoter, Vedanta Resources, well, is in far better shape as it reduces net debt at a standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, which is FY25. How do they do that? Via brand fee payments from Vedanta Limited as well as Hindustan Zinc, both those two listed entities. They've done that promoter stake sale as well, which will help them. And also dividend payouts. Some part has come in and the street anticipates there'll be another dividend payout for the remainder of this year. Now, brokerage firm Phillip Capital, well, they have given a target price of 552 rupees per share. And the table that comes up on your screen, well, that indicates that the stake they have in Hindustan Zinc as well as the aluminium business, well, that accounts for bulk of this SOTP of around that 552 rupees or thereabouts. While also, if you look at the negative value, well, the net debt number of around, that gives you a negative value of around 173 rupees. So there is potential upside risk to these estimates. That's because of two counts. One is on the net debt that's assumed. The street believes that maybe it can be lower than estimated because of this fundraise and also hefty cash flows that are due. While the aluminium EBITDA, well, that could be a little bit higher as they're looking at higher captive sourcing of alumina as well as coal and bauxite. That's what could lower the aluminium cost of production by around $250 on a structural basis. Well, the steel street expects the demerger to be completed by the end of FY25, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight some risk. And I'm putting out 3 out there which could potentially derail this bullish outlook. One is the higher debt at the listed entity to service the promoter debt. The second factor is any kind of delay in commissioning of the backward integration for the aluminium operations. And the third could be investing in the cash that's generated into low return assets or unrelated sectors for Vedanta. Well, the ingredients are in place. The question is, will they finally deliver for shareholders? Nonetheless, this QIP is a bit of a booster shot for the stock.
Take that point, Nigel. Thank you so much for putting that into perspective, what the money could do for the company and what the company itself could do for shareholders going forward. That's Vedanta, up around 0.5% right now. With that, we're out of time on this edition of Chartbusters. Thank you for watching. Trading Hour comes up next.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And it's a good start, right? Tuesday morning. Some follow-on gains. Third consecutive day where markets have gone ahead and hit record levels in the morning. And today, as we speak, the Nifty is now above 24,650. And the Sensex is just 150 points away from hitting that 81,000 level. Hi.
Hi, Reema. Yes, absolutely. It's been a green start. And once again, it's a pretty interesting market because we also have mid-caps performing. The advanced decline breadth is very healthy, actually. If you look at the advanced decline ratio right now, that tells you the other part of the story. Over 1,600 stocks on the advancing side, and there are just about 700 declines. There's plenty going on out there. On the large cap screen, just to sort of talk about the big movers and shakers, it's still the PSUs, the big boys, the ones with the maximum market weight. Coal India, BPCL, these are the ones that are really leading from the front. But then it's a very diverse, if you look at the Nifty contribution chart, then you have all kinds of stocks in it. I mean, you'll have some IT names, for instance, an Infosys, you'll even have an ICICI Bank. Though if you look at, the contribution, there could be some banks on the downside as well, Kotak being case in point. So it's a more mixed screen today. But for what it's worth, definitely more, movers on the way up than on the way down.
Okay, let's get to the market texture then and where we are headed. Rakshit Ranjan from Marcelus Investment Managers is with us on the show now. Rakshit, morning. Thank you for joining in. How are you feeling about the markets right now? What's the sentiment gauge and what's the investor appetite? It appears to be very high, but is there some nervousness creeping in?
Well, not so much in the style of investing that we follow, because we don't invest from one political outcome or one budget or one external event outcome to another. But otherwise, yeah, we're feeling quite positive because we can see a lot of opportunities where companies can allocate capital and make bucket loads of returns for investors, and that's where we are orienting our exposures to.
Can you talk about some of the recent changes that you've made to your portfolios?
Yeah, in fact, quite a few. Over the last 12 months, the number of companies or the allocation to companies that we call as sort of enterprising compounders with return on capital employed, not sort of 40-50%, but instead 20 to 30%, and reinvestment rates rather than 50-60%, more like 100% or 90%. So high on reinvestment and hence high on growth. These kinds of compounding plays have become more than half of the portfolio compared to, say, 10 to 20% that it used to be previously. And largely the reason for that is in the economy, we can see a very clear shift. What has happened is the way the digital and physical infra combined with the integration of the economy through GST and a structural fall of cost of capital because of physical investments going into financial. What it has done is there are challenger companies, mid-sized corporates, which are taking market share away from the larger incumbents in some areas. So, for instance, in our portfolio, we've got an Astral Poly as a recent investment, and Narayana Hrudayalaya in hospitals. And then you've also got some large companies spreading their wings, allocating capital to build new businesses. So Tube Investments is a case in point. Let's say a Chola expanding the turf, a Trent expanding beyond just apparel and getting into more groceries as well. So yeah, so those are some of the changes in the portfolio.
Okay, Rakshit, so I was going through your latest update, the July update, the newsletter, the Consistent Compounders, right? And it seems that you guys are now sort of tweaking strategy a little bit to go for companies that are not only allocating capital to their own core business, but also allocating capital to certain unrelated areas. Now, typically that's seen as a red flag by the market. But you seem to be liking, these big giants which are looking at newer business opportunities as well. Just explain that rationale to us. And I think an example that you cited in that newsletter is a Trent and a Tube investment. So just expand on that for the benefit of our viewers.
Yeah, so let me give you an example from, say, 3-4 years ago, so that there's also continuity visible in this change. So when we picked up a Titan 3 or 4 years ago, a Titan was highly energized around non-jewelry businesses, turning around its eyewear business, getting back the energy levels in the watches and wearables business, Tanaira as a sari business. These are not related to jewelry. These are, in some ways, unrelated businesses, right? When a Bajaj Finance was expanding from personal loans to home loans, consumer durables to home loans, that journey was not completely in related businesses. It was a lot of it in unrelated as well. That was not so widely available to us in our coverage universe. The number of Titans and Bajaj Finances of the world were just 2 or 3 options available to us, and hence the portfolio allocation was lower. All that has happened is in the last 2 to 3 years, we've identified several more Titans and Bajaj Finances, and Trent and Tube are 2 such examples that you cited from our newsletter. So in that regard, it's a lot more of what we were doing previously in lower allocations to the portfolio, doing it with greater allocation today. It does rev up the growth engine of these companies because the trade-off is higher reinvestment rates and maybe 5 to 10% lower return on capital employed compared to, say, an Asian Paints or a Dr. Lal Path Labs, which continues to be in our portfolio, by the way. Just that allocations have been slightly tweaked.
Particularly on Titan, do you think while the diversification strategy is well appreciated into Tanaira, etc., watches, eyewear, on their mainstay gold jewelry business, competition is eating into the margins, and the stock has underperformed. It's down 16% from its recent highs, and year to date also it's in the red. Your view on Titan just in the near term as they navigate through these challenges? I know you guys are long-term investors, so you stay put. In fact, you've loaded up and tanked up more. But how should an investor or a retail shareholder understand how Titan is going to deal with these competitive pressures?
Yeah, no, you're right. The near term offers certain headwinds, and about 6 months ago, we more than halved the position size in Titan as a result. The headwinds are we can see two risks on the horizon, which are more near term. One, as you said, competitive intensity has arisen when the gold price is up. The second is also footfalls of customers. They start dropping for the industry as a whole if gold shoots up by 20 to 30%. If it's a far more gradual increase, footfalls are in fact benefited. But if it's a sudden increase, then customers start delaying their purchases a little bit. So that's the near-term piece. In the medium term, there's a lot of white space that this company is trying to exploit. So, for instance, when you look at the eyewear business, in 90%, 80 to 90% of the industry is below 6,000 rupee ticket size, and Titan is predominantly above that kind of a ticket size. So getting more into mass for eyewear, getting more into mass for wearables is a wide space that this company is going for. Carrot Lane adds a massive muscle to the whole Tanishq piece, and that's a massive growth engine. So from a medium-term perspective, from a long-term perspective, we are quite positive. But yes, as you rightly said, there are a few headwinds. A quarter or two. This is somewhat of a repeat of 2016. I remember in 2013 when a similar story played out. As you said, these things become opportunities to load up more. So at the moment, there's nothing on the long-term horizon that worries us on Titan.
Okay, so Titan over the long term, though you've reduced your holdings to an extent. By the way, the flashes on our screen just alerting us that there is this all-important meeting that's underway between telecom service providers and the telecom minister. This is happening in Delhi. And Ashmit has told us that, among other things, on the agenda is, of course, unsolicited phone calls and communication. That remains a very big issue, pesky calls. And perhaps the next stage of the big rollout beyond 5G, there lies 6G. So those are some of the issues that could be brought up in discussion. We'll touch base with Ashmit. He's right now in the ministry, in the thick of the actions. As soon as he manages to come out, we'll touch base and have a word with him. So a lot of the representatives of the telecom sector attending that meeting. Rakshit, just to round up this conversation, and since we were looking at that list of holdings that you have, of course, one of your long-time holdings has been HDFC Bank, right, and consistent compounders. Now, like with many other parts of the market, this is one stock, one enterprise that has been really testing the market's patience ever since the merger happened. And even, the last quarterly update was not really firing up the charts. We know that. There's this tactical issue, of course, of FPI allocation. But beyond that, what are the expectations you're working with? Will this be the year, the turnaround year for HDFC Bank? What's your base case thesis here?
Well, we hope so. We hope so, although it's very difficult to call a 6-month, 12-month share price trajectory on a stock like that. Yes, I think last 2-3 years, it's been a sequence of slightly uncorrelated events, right from a regulatory ban to a bottom of the NPA cycle for the entire banking system to this corporate action of the HDFC Limited merger, and then the entire lack of liquidity on the deposit side in the system, making it difficult for deposit growth of a bank like this. So all of that is behind us. We believe another quarter or two, none of these factors should have a drag on reported fundamentals. From a long-term perspective, I think the credit aspect, the credit quality aspect, is fairly cyclical. When the sort of credit quality peaks out or NPAs bottom out, that becomes a very attractive point to benefit from investment in a firm like an HDFC Bank, which is pretty much the rationale why we've continued to hold on to our exposure here. And yes, hopeful of better times ahead from an investor perspective on this portfolio holding.
Thank you, Rakshit, for your candid conversation today. With that, we'll slip into a very short break. We'll come back and discuss commodities on the other side. Stay tuned.
Even our last 2 years, the quarter-to-quarter trajectory has been, the first quarter is the weakest, around this 17% in both the previous years as well. And then it's the second quarter where we pick up to, let's say, somewhere around 18%. And then the third quarter is the peak, driven by the software seasonality, which is our most profitable segment, as you know. And then the fourth quarter is kind of near the annual average, again, just like Q2. So that's the trajectory, and we seem to be following that. The wage hikes, last year itself was a delayed cycle, delayed by a quarter for everybody practically. So we'll have to see what we do this year. We haven't still made the decision, as we discussed on Friday as well.
This guidance of 3 to 5% is something which we gave in the beginning of the year. And we did factor in the first quarter softness, which is quite similar to the previous years. And of course, Q2 is going to be a growth quarter, and Q3 is where we usually deliver peak performance. And at this point, we feel confident of the investing.
Let's now shift the focus to the commodity markets. We have Manisha Gupta joining in with the latest. Manisha.
Well, thank you for that, Surbhi. I want to talk about the gold imports within the country, which are coming in the garb of platinum, because there's a definition under CIPA which says that if there is a 2% of platinum or alloy containing 2% or more of weight of platinum, it is treated as alloy of platinum. Now, the thing within this is that when you are importing precious metals into India under CIPA, the import duty on gold is 15%, while the import duty on platinum is just 5%. So there have been various big bullion dealers and jewelers with big credit lines and offices globally who have been making use of this rather say loophole into the system and importing a lot of gold via this itself. From what we understand, that in the garb of gold, platinum, which was last year imported at around 10 million tons, has come into the tune of 11 million tons already in the first 4 months of this year itself. Now, what we also understand is that this has distorted the Indian markets in sense of gold imports. We absolutely import all the gold that we use and consume in sense of jewelry, bars, coins, investments, ETF backing, etc. So there are multiple layers of import duty when it comes to gold. It's 15% as it stands right now. Then there is a different duty when you are importing it under FTAs, different duty when you do it with least developed countries or LDCs as it is called, and then CIPA as well. So what we also understand is that because gold is coming in under so many layered and multi-layered duties, it is also on a discounted note within the Indian markets. So until last fortnight, gold in India market was at a $10 discount. Today it is at a $34 per ounce of a discount. And a lot of gold has come in into this as well. What we also understand is that today itself there is a meeting happening with various gold associations, with the government, who is now seized of the nature and trying to correct this loophole. So there is something that we could hear pretty soon onto this one. But at this point in time, there is multi-layer in sense of gold import duty, and that has led to a lot of gold coming in into the Indian markets, as we have seen in 2024.
Thank you very much for that. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar will join in with his top trading bets. Stay tuned.
In the last 7 quarters or 8 quarters, there has been kind of differing kind of signals that we've been getting, and sometimes the ramp ups are very short cycle and things like that. So that's why I've not called out any pickup in demand. The demand situation remains pretty much the same as what we had talked to you 3 months ago when we gave the annual guidance.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now, so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing and an ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness, or do you think it's also a cultural issue where, one of the statistics or reports that I was reading, indicated that we just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night.
Welcome back. Steady as she goes, 26,640 on the Nifty. On the mid-cap end of trade, quite a few interesting movers. You've got Chennai Petro now up close to about 12%. Suntec Realty continues with its up move from yesterday. Remember, it reported the pre-sales numbers. The stock rallied. It's seen a good follow-up up move. Mitesh is now back with us for a technical check on the markets. Mitesh, which stocks do you recommend?
So I think, what's happening is that the index has been pretty okay. It's the side market which is still showing momentum, and I think the oil refining stocks are showing good patterns. We have some positions in BPCL and HPCL, but I'll recommend in IOC right now. I think that's also showing good traction on the upside. So keep a stop at 167.5. Look for targets of 180 to begin with, and maybe even eventually we can look at higher levels over here. While the Page Industry stock has also made a fresh swing heights off the day's high, but the pattern is very strong. So buy Page Industry with a stop at 40,400. Look for targets of 42,000.
Thank you very much for that. Oil marketing companies, remember, are higher because Brent crude prices have dipped below $85 per barrel, providing them that tailwind in terms of pricing. Let's move on now. As you can see on your screen, what we've picked up from sources, the Uttar Pradesh government has extended its electric mobility policy till 2027. For more details, Parikshit joins in. Parikshit, hi.
Well, yes, this was an ask by the automotive industry to extend this policy to 2027 because it was lapsing in October 2025. So the industry, in a way, wanted some clarity from the Uttar Pradesh government. What the government has done, that there were funds for incentives and subsidies for different categories of vehicle under the UP government EV policy scheme, which had not been fully utilized. So the government has made sure that this fund is revived and is available to the industry till 2027. Also, the incentives in the form of road tax waivers will also be applicable on electric vehicles and hybrids till 2027. But there is a catch right now. Currently, there is a consultation on within the UP government on applying a price cap to the range of the price range of vehicles which can be allowed the road tax waiver. So that clarification is yet to come by. Currently, the road tax waiver on hybrid cars is there. Yes, there is a little bit of confusion on whether more expensive cars will get this, or will this only be for cars in the range of 15 to 20 lakhs. All that is yet to be clarified by the UP government. Currently, that road tax waiver continues on paper, and we will be awaiting a clarification from the UP government, which is expected to come soon.
Okay, thank you very much for that. Get into a break, but here is our special, which is coming up tomorrow, Wednesday, 9 a.m. A big offering, a CNBC TV18 exclusive. Well, just ahead of the budget, one of the world's top market strategists is in our studio. Chris Wood of Jefferies will make his bull case for India. And also, don't miss out an exclusive chat between Chris Wood and D Street stalwarts, Ramesh Damani and Utpal Sheth. All this Wednesday, 9 a.m. Block your time.
Bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day.
Welcome back. Let's put the spotlight on L&T, and that's because of a very interesting development. Now, L&T's debt ratings are higher than the Indian sovereign ratings. In fact, both agencies, two of these agencies, Fitch as well as S&P, they have rated L&T at BBB+, which is 2 notches higher than India's sovereign ratings, which stand at BBB-. And to my memory, the only other, I think, company that enjoys this position is Reliance Industries, where the company's ratings are higher than the sovereign ratings in terms of India. What does this mean for L&T? Let's ask Amit Anwani, research analyst at Prabhudas Leeladhar. Amit, great to have you with us on the show. So, of course, it sounds fantastic, but actually in terms of downright business, what does this imply? Does it necessarily mean lower borrowing costs? I mean, how should we interpret this?
Yeah, so Surbhi, I think there's been news that sovereign rating have even better, only 2 companies, Reliance and L&T. So I think this is pretty important in 2 contexts. One is that L&T has been very aggressively focusing on the Middle East market, including Saudi, Kuwait, and Qatar. And we saw last year there was few mega orders which was won. So out of the 70,000 crore order which came in hydrocarbon, I think there was one large order and also one large, more than 25-30,000 crore order in renewables. So I think more than 60-70,000 intake from the Middle East market. So this was very critical in terms of funding the project and financing the project. There would be support required from the international banks in terms of debt funding in these projects. And it was very important to have it at a lower cost. So in that aspect, since the execution period for all these projects would be next 3 years, this is very critical and enhances the overall funding management for these projects.
How much lower do you think the funding costs can be now for overseas?
Yeah. So I don't have the exact details, but I think this should be about 30-50 bips at least lower than the
30 to 50 bips.
Yeah.
Okay. So is there an EPS implication, or do you think this warrants a relook at the kind of valuation multiple you ascribe to L&T?
See, EPS, so there are also talks about that since there's a longer term spending plan by Saudi in renewables and oil and gas sector, and including urban infrastructure. We saw Neom City, there was few projects awarded to Indian companies, including L&T. So I think in that aspect, even L&T is targeting further orders, aggressive orders, large size orders in FY25 and I think FY26 as well. So we saw they surpassing the inflows guidance by a large amount, so more than 30% inflows guidance, and the share of Middle East market went up from 25% contribution to almost 40% contribution in the intake. So I think with that aspect, the top line definitely will see faster visibility. So with the previous assumptions of 10-12%, this can be more than 12-15% for next 3 years. And definitely some positive implications would be there with respect to the EPS. But having said that, I think near term, there are a few challenges which company might be facing in terms of labor's not availability challenge in past 2 months. But I think In second half and FY26, definitely we can see much better prospect, and there could be order intake surprise this year as well. So the company is guiding about 10%. I think with these Middle East orders, there could be surprise as good as last year.
Sure. So, yeah, we've got the FY25 guidance up on our screens, and you're saying that with a better rating, maybe they get more overseas orders and surpass that guidance. Got that point, Amit. Just very quickly, since we have you with us, Q1 is round the corner. What are your expectations? And with L&T, the problem is never more orders. The market's issue continues to be on margins, right? And when they can start improving that margin profile. What are you expecting this year from L&T?
Yes, so definitely, so there was a margin impact full of FY24, I think by 70-80 bips, and they kept lowering the guidance full year. So there were a few specific challenges for company as big as L&T, more than 900 to 1,000 project sites. So definitely, I think the infra business was facing challenges last year, and because of the also because of the some competitive intensity in domestic market and slow pace of ordering did impacted the margins. So I am expecting starting Q3, Q4 of this year, there could be visible improvement which can be seen in the margins. And we are taking some 30 bips, 50 bips improvement in FY26 and similar kind of improvement in FY27.
Thank you very much for joining in, Amit, on L&T. Get into a break. On the other side, we'll talk more about stocks, sectors, themes. Harshit Kapadia from Elara Capital joins in.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they're younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing and then ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading...
Welcome back. Now, the capital goods sector saw a record run in FY24. But does the sector have the power to rally further? Vamakshi joins in with the key expectations for Q1 FY25. Vamakshi.
FY24 was a blockbuster year for most product companies in the industrial space. It was characterized by record high order books, strong government-led domestic capex momentum, which offset the slowdown in exports and margin surprises. In the first quarter of this financial year, the top-line visibility across segments is very strong. Revenue is expected to grow in double digits, driven by execution of orders received in the last couple of quarters. While operational efficiency, favorable mix and better pricing could support margins, though a rise in commodity prices could place spoilsport. Nevertheless, margins are expected to expand on a YOY basis. Companies may continue to benefit from a strong inquiry pipeline, especially in T&D, data centers, EV, railways, amongst others. However, order inflows may see some moderation given the elections, which is largely expected. For ABB, process automation and electrification segments are expected to drive growth. Order backlog of nearly 8,900 crores will support revenue growth of nearly 23%. With the base quarter EBITDA margin at 13.9%, we anticipate an expansion of nearly 330 basis points, resulting in a 46% uptick in the net profit. For Siemens, the company could see its revenue rise by 19% on account of healthy growth in smart infra and mobility segments. Margins may expand by 240 basis points to 14%, but UBS believes that the company has the potential to deliver a surprise. Clarity on HVDC orders in energy segment and large tenders in mobility remains critical for this company. CG Power seems well placed to capitalize on continued capex-driven demand from industrial and power segments. We expect the company's top line to grow by 20%, margins to remain more or less flat, down 10 basis points. But Nuvama believes that the company's margins may remain weak for the next 1 to 2 quarters. We will also be watching out for clarity on exports ramp up with expanded capacities nearing completion. As far as BHEL is concerned, Bank of America expects strong order inflow of 30,000 crores this quarter. We anticipate a 13% growth in the top line and 380 basis points improvement in its margins. In fact, Bank of America expects EBITDA break-even from this quarter itself if execution momentum sustains. As far as Cummins is concerned, revenue growth of 10% is expected to be driven by robust domestic demand, but exports may remain weak given slower recovery in end markets. With rising share of CBCP4 gensets, margins are expected to rise by 360 basis points on a YOY basis. Apart from that, management commentary around demand outlook, transition to the new norms, and any competition-led margin pressures is critical to monitor. It is also important to see whether margin surprises, as seen in the past few quarters, is able to sustain. Most of these capital good players have seen continuous upgrades on account of the pickup in ordering activity, growth in the top line and profitability, which has driven a re-rating in the sector. Valuations, as you can see, for most players are above the 5-year average. Nevertheless, UBS has maintained its positive view despite expensive headline valuations. Additionally, Nuvama believes these premium valuations are warranted given the capex super cycle.
Okay, all right, premium and how? 100 times. Who would have thought we will live in an era when we see those kind of earnings multiples for capital goods players? Vamakshi, thank you very much for that backdrop. Much appreciated over there. We have Harshit Kapadia from Elara Capital now joining in to take this discussion forward. Harshit, great to have you on. That's really the question, right? I never thought in my career I'm going to see 97 times or 100 times for a capital goods stock, right? But here we are having this conversation. So you tell us, from an earnings standpoint, what is the run rate that these companies will have to keep throwing up to justify these numbers? And do you think we will have evidence of that kind of growth in this quarter?
Yeah, good morning. So to have a justification of such a high valuation, we expect an earnings CAGR of close to around 25% on a consistent basis. And the kind of capex momentum that we have seen across multiple sectors is giving us this kind of a support. That's where these kinds of companies are trading at such a high and rich valuation. But any miss out would be something which could be really not looked at positively.
You know, Harshit, the fear is that maybe margins have peaked out for some of these companies because raw material pressures have started creeping in. Does that, put some pressure on the EPS expectations?
Yes, that do see some compression on the EPS side, but that would be passed on to as subsequent quarter comes up, given that the demand environment is extremely strong. So there could be subdued quarter for maybe fewer quarters, but post that there could be a recovery is what we have also seen in the last raw material cycle, which happened from 2022 to 2023.
Harshit, you said that obviously, 25% is the run rate that's going to be required to keep justifying these kind of valuations, right? So let's talk about where this 25% growth is going to be delivered from, which pockets. And from an investor standpoint, which are the areas that we should track more closely? I mean, I don't know, data centers, or should we look at power? Because even in power, there is so much of capacity that's being added. So should one be focused on power equipment companies as industrial automation? So which are the segments which are the key focus areas for you that you're tracking, and which are the companies that represent those sectors or that have a greater exposure to those sectors?
Yeah, so rightly you mentioned utilities has become a very important, both thermal as well as renewable, given that the manufacturing base is rising. So that has been predominantly the major sector. This is followed by data center as being another sector which is seeing an unprecedented momentum in terms of growth, both domestically as well as there is also a market on export side which is rising for renewables as well. So that is also propelling us growth for the sectors. And apart from that, if you have looked at oil and gas, the core economic sectors, which is oil and gas, metals, as well as cement, has also started to inch up their capex guidance. And that is also helping us believe that the growth is going to be there.
So in terms of your own projections, which companies in the ones that you cover are likely to post a 25% plus kind of a top line growth?
So within the companies which I cover, ABB looks to be on a very strong footing as far as the quarter is concerned, followed by Siemens. Siemens would be somewhere close to around 18% growth. Thermax would be something close to 15%, as well as cable and wire companies looks to be at a 20% kind of a growth. Given that Q1 is generally a very soft quarter as far as capital goods is concerned, second half is where the major growth comes up as far as the sector is concerned.
Actually, I was asking more from a longer term because you spoke about 25% over the next 5 years. So which of these companies, Q1 aside, can report this kind of robust, consistent growth?
So within the companies which I cover, it would be Siemens, KS International, KI Industries, Thermax are the companies which I would prefer and which would see a consistent growth of 25%, given that they are in a super cycle of industrial and their product portfolio is very much aligned to what the power requirement is, towards how the changes which are happening on the power side, moving more towards non-fossil environment as well.
Siemens, KEC, KEI and Thermax, right? These are the 4 companies. And these are your top picks?
Yes.
Okay. Thank you, Harshit, for the conversation today. We will slip into a very short break. On the other side, we bring you excerpts from our conversation with the management of Bank of Maharashtra.
We just don't feel the need to brush more than once a day.
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news.
Welcome back. Telecom stocks are doing very well today. So Bharti Hexacom is up nearly 5-7%. JP Morgan has initiated coverage. They've put the target price at 12.80. IFL2 has initiated coverage on Bharti Hexacom. Their target price is at 12.67. They both believe that the best way to play the market repair or the tariff increase story in India is via Bharti Hexacom. But even a Bharti Airtel or a Vodafone Idea are moving up. So if you pull up a Bharti Airtel, that's up close to about 2%. Vodafone Idea has some strength going for itself. So the rally is sparked because the Supreme Court has agreed to hear the curative petition on AGR relief. If you see the current pending AGR dues, it's 70,000 crore rupees for a company like Vodafone Idea. For Bharti Airtel, the pending dues are about 36,000. If they get any kind of relief on this, and the street is assuming 50%, it's a direct boost. It's a cash flow benefit. They don't have to pay those dues going forward. So there is upside in the stock, according to analysts. So according to, we were talking with IFL's, telecom analyst Balaji, and he said, for Vodafone Idea, if they get a 50% relief on their pending AGR dues, there could be an upside of 5 rupees. And for Airtel, there could be an upside of 30 rupees. Not from current levels, but generally the relief amounts to 5 rupees per share on Vodafone Idea and 30 rupees for a company like Airtel. So telecom stocks today are doing pretty well. But the one which is on our radar right now is Bank of Maharashtra. Reported the Q1 numbers yesterday. The asset quality and the net interest margin continue to remain stable. My colleague Abhishek spoke to Nidhu Saxena, the MD and CEO of the bank, and started by asking about the deposit growth. Listen in.
The industry is currently encountering a very intense situation where the credit growth is outpacing the deposit growth in the system. And I'm also not out of the system. Like if you see my numbers, my credit is expanding YOY 19%, whereas deposit I could get at a YOY growth of 10%. But having seen the situation, we are taking a lot of steps on an immediate basis, and some things that we'll be planning to implement in the near term so that some results will come. So what we are specifically trying to do is what I will try to explain here. We are having good patronage from state government, departments, ministries, many institutes in Maharashtra and outside Maharashtra as well. I am able to see some traction in 3 months, and people are responding, and we are getting some green shoots. And I'm only going ahead strengthening this effort. And so this will take care of broadly institutional deposits. At the retail deposit level, we are doing a couple of measures. I have seen the powerful digital channel is mobile banking. So we are working on making digital banking more customer friendly. And in fact, going forward 6 months to 9 months from now, there'll be a lifestyle banking application that we are launching, which will be a new version providing additional services.
Sure, sir. Now, you spoke about, loan growth outpacing the deposit growth. We have seen that for the banking system as a whole since April of 2022. Now, credit growth has outpaced the deposit growth. Talking about your own credit growth, how has it been segmentally? Where are you seeing demand from? And by when do you expect, the proper CAPEX cycle in the corporate portfolio to come back?
Yeah, Abhishek, that's a good answer. The good question from your side. We are also trying to find answers because we have been discussing this, we've been hearing this. And yes, the private CAPEX cycle in true sense is yet to be seen, maybe next 2 to 3 quarters. We expect that demand coming from the corporate, and I see that manufacturing sector has to really come up, and for capex in the private sector, it is still something which we'll be awaiting, and maybe next 2 to 3 quarters. But other than that, we are seeing a lot of traction in the RAM segment. Our retail, agri, MSME, they are having healthy double-digit growth.
While net interest margin has remained healthy on a sequential basis, we are in a rising cost of deposits or cost of funds scenario. And, I'm still waiting for your answer whether you have heard from RBI with respect to credit deposit ratio at 75%. So how do you see, net interest margin panning out ahead if at all you have to put your CD ratio, that is credit to deposit ratio, at 75%?
So let me just clarify, Abhishek, here. There is no regulatory prescription on the CD ratio as such. But yes, the regulator is watching this parameter, how it is moving. And from 75, we are now at 78.16. And I think that's a healthy ratio, 78, 79, we would like to maintain to see that my net interest income is going up. So there is no discomfort to me in maintaining a CD ratio of around 78 to 80 between. I don't think so there's a problem there. And yes, deposit, as you said, I already explained a lot of, to fuel this credit growth, we require a lot of resources. And currently, although if you look at my capital adequacy, we are at a comfortable zone, but I have my plans in place. We are also exploring raising for my infrastructure book that I am having around 27,000 crores. So I will be going to board very shortly, and we will try to do one tranche of raise through infra bonds also. So where we get the advantage of CRR, SLR requirements are not there, and my cost of borrowing also will come down, is what the sense is coming to me. So we will explore that option too.
So what is the guidance on net interest margin trajectory?
So we are keeping a guidance for ourselves of maintaining a NIM between 3.75 to 3.9. Although I'm doing 3.97 for the last 2 quarters, I don't see much of challenges, but I want to be conservative here and keep a guidance of 3.75 to 3.9.
Well, that's very good, sir. Now, slippages marginally increased on a sequential basis, which is seasonal in nature, but your credit cost spiked up. So, provisions for NPA spiked up by 28% on a sequential basis. What was this provision for, and how do you see the outlook with respect to slippages and credit costs going ahead?
Yeah. So, let me clarify here, Abhishek. The issue is that I am already an NPA at 0.2%, and I'm maintaining that level. So whenever I'm encountering any slippage, I am required to provide more than the regulatory prescription, and I am doing above that. So if you look at credit cost, as per the IRAC norms, it works out to only 0.4%. And yes, the credit cost for June has been 1.12, which is on Q&Q sequential basis has gone up. But this is on account of slippages in the agri segment, which is, I think, not something we are not able to control. We have seen this trend in Maharashtra in previous years too. And going forward, I'll be definitely able to control this. We will be able to even recover and upgrade a lot of agriculture accounts that have slipped in this Q1. And that also will, be able to rectify the position.
Well, what I've observed with bankers are that agri portfolio has been hurting for last 2 quarters in a row, Q4 as well as Q1. And what I'm seeing on the NBFC side, the MFI portfolio is hurting them over the last 2 quarters and is expected to hurt going ahead. So do you foresee pain in the rural economy that started to kick in because of high inflation? And how do you see your gross NPA and net NPA levels by end of FY25?
Okay, so yes, see, we have done at our level certain, changes. What we have done is we have changed our focus when we look at the agri segment from the production credit to investment credit. We all have read about a good monsoon this year. So if the rainfall is adequate, I'm sure the sector will not going forward see any much of stress. and prospects will only improve going forward.
Interesting conversation there with Bank of Maharashtra. While the indices are consolidating, stocks underneath are bubbling. So some of these cement companies catch your attention. A Heidelberg Cement, and the other one is KCP. Stocks are up 5% and 4%, pretty large volumes. Nosil is another one. Just volumes are 3 lakh already, and it's been about 2.5 hours of trade. So Nosil is higher. In the banking pack, it's Punjab and Sindh Bank where you are seeing a spike up. Castrol India gains for the second day in a row. I think yesterday and today combined, the stock has seen an up move of 10%. This month, Castrol is up nearly 38%. It's seen a phenomenal rise in Aadhar Housing Finance. We chatted with the management earlier today, and they were telling us that they'll be a beneficiary if there are any tweaks, benefits to the Pradhan Mantri Awas Yojana, the one which is for affordable housing. So they're going to be watching the budget very closely. They've made representations. Aadhar Housing Finance too, higher by nearly 5%. With that, it's a wrap on trading hour. Stay tuned. Halftime report is up next.
Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones.
Stocks notch up some more gains with mid-caps leading the charge. Realty, telecom and metals are prominent gainers while financials are the soft spot. Now Vedanta joins the fundraise rush with an offer to mop up around 7,000 crores via QIP to likely fund capex or pay some debt. The offer precedes the split of businesses expected by the end of FY25. Vodafone Idea and Bharti Airtel hope for some relief on their AGR dues after the Supreme Court agrees to hear a curative petition while Voda Idea owes around 70,000 crores. Bharti's dues stand at around 36,000 crores. Experts tell CNBC-TV18 that a significant step up in government allocation for infra from the interim budget is likely. They see roads and railways accounting for the lion's share of spend.
Good afternoon. You're watching us here on Halftime Report. Exactly a week to go for the CNBC TV18 budget, the mega budget. We have the budget box out here as well. But ahead of that, it's not just the box which is green. We have all the other indices which are in the green as well, barring the Nifty Bank, which is flitting between red and green as we speak. And that will be extremely important to watch out for in the next couple of hours of trade, because ahead of the holiday tomorrow, we have both the Nifty Bank as well as the Nifty Financial Services expiry that will play out. The good part about today's trading session are the broader markets. 1,500 stocks advancing for nearly 800 stocks which are declining. So we have a big distance between the green and the red line. I'm Manglam Malu, with me, Ekta. Hi, Ekta.
Hi, Manglam. Yes, absolutely. And what really stands out is that we are building on our gains. Like you mentioned, the mid-caps are doing well. We have the advance decline ratio. The breadth of the market is favoring the advances at this point in time. And what we are seeing is that rally in the entire PSU space, which is continuing into today's trading session. So if you just look at it on a week-to-date basis, yes, at current reckoning, it's only 1.5 sessions that we're talking about. But nonetheless, the Nifty PSU Bank Index is up around 3.4%. The BSE PSU Index is up close to around 2%. And the Nifty PSE is already up around 1.8%. And let's see where that goes. But that seems to be the big trend which is panning out in today's trading session. But earnings this week, we have a lot to watch out for. So we have Asian Paints, which will be declaring numbers tomorrow, along with LTI Mindtree, Infosys on July 18th and Reliance on July 19th as well. So it's going to be a busy time in terms of earnings. And then we're going to top it up with the union budget on July 23rd. Not to mention that the end of this month, we have the US Fed meet also on July 30th and 31st. So it's going to be a packed month because we have earnings. But for the next couple of days, for the next week odd, we have a lot to watch out for. With the crescendo being really the budget.
Absolutely, take that point entirely, Ekta. And ahead of Asian Paints numbers, actually, not only is the stock doing well, we have the entire FMCG pack which is doing well as the crescendo builds to the budget as well. Hopes of more money in the hands of people. Monsoons haven't been too bad either. In fact, whatever deficit was there in the month of June has now been more than made up in the month of July itself. So we'll get more clarity on how rural demand is with all these numbers. The FMCG index actually at the high point of trade. But another space which is abuzz in today's trading session is the telecom space. While Bharti Hexacom is surging on the back of a positive brokerage note that has come by, Vodafone Idea and Bharti Airtel hope for some relief coming in on their AGR dues after the Supreme Court has gone ahead and agreed to hear a curative petition. Rima dials in with all the details on why the telecom space is abuzz today. Rima.
Thanks so much for that. So let's start with Bharti Hexacom. As you pointed out, there have been some initiating coverages. So first, a JP Morgan overweight rating on Bharti Hexacom, target price 1280. Not just that, today even IFL has initiated coverage with a buy rating, target price 1267. In fact, most brokerages are bullish on Bharti Hexacom because this is a pure play telecom company. It operates in only 2 circles, Northeast and Rajasthan, where the tele density is lower, which basically means fewer people have mobile phones. So the the market growth potential is quite a bit, and therefore it's one of the best places to play the market repair or the tariff increase story compared to peers like an Airtel or a Vodafone Idea. The other 2 stocks, Bharti Airtel and Vodafone Idea, are also higher in trade, and that rally is sparked on optimism or hope that now that the Supreme Court has agreed to hear the curative petition which was filed by the telecom companies Vodafone Idea for a rethink on the AGR dues. Now, companies are saddled with massive AGR dues. For Vodafone Idea, the current balance is 70,000 crore. For Bharti Airtel is 36,000 crore. If in the curative petition there is any kind of relief, and the street is hopeful of a 50% relief, because they are arguing that there are some arithmetical calculation errors in the way AGR was computed. If they get that relief, then we're talking about a potential relief of 35,000 crore rupees for Vodafone Idea, which amounts to 5 rupees per share, and for Airtel it amounts to 30 rupees per share. But that's assuming a 50% relief on AGR dues, and that's what the street is hopeful about. Back to you.
Okay, all right, Reema, thanks very much for that. Earlier today, in fact, we spoke to Balaji Subramanian, who's the Vice President of IIFL Securities, to discuss his take on this. Listen in to what he had to say.
See, if you look at the public disclosures of Bharti Airtel and Vodafone Idea, Bharti Airtel has somewhere around 36,000 crores as the AGR dues. This is, including accrued interest, and this is the full number after what they have already paid the government in the past, etc. And the corresponding number for Vodafone Idea is around 70,000 crores. I think the way it can pan out is that the Supreme Court allows the government and the telcos to sit together and resolve any calculation errors. And based on what Vodafone had done and Bharti had also done, it does appear that the relief can be to the tune of 50 to 60%. So if one were to take a 50% relief as the number here, then we are talking about an NPV relief of nearly 35,000 crores for Vodafone Idea, which would probably equate to a little more than 5 rupees per share. And for Bharti Airtel, we are talking about an 18,000 crore relief, which would work out to roughly around 30 rupees per share.
All right, so that's about the telecom space. Meanwhile,
so 70 का एक stop लेके यहाँ पर.
All right, flashes coming in from the heavy industrial minister saying that we are likely to implement the FAME 3 scheme in the coming days itself.
Okay, all right. Well, those are some flashes coming in from the heavy industries minister. But nonetheless, we have Paytm, which is under pressure after SEBI issued an administrative warning letter for related party transactions. Abhishek is joining in to tell us more on this story.
Well, Ekta, to begin with, administrative warning letter from SEBI has been received by Paytm, and this is for the related party transaction, or RPT, entered by the company and its subsidiaries, that is Paytm Payments Bank. Now, this was done in FY22. Company claimed that the transaction do not qualify as the, related party transaction in FY22. However, the board and the audit committee have felt that this can be considered as material, related party transaction, and they have passed a resolution that all the RPTs with PBPL, that is Paytm Payments Bank Limited, will be within limits. So violations have been viewed very seriously by SEBI, and they have warned the company to be careful in future and improve the compliance standard that is there at Paytm. Now, Paytm has also responded to this SEBI inquiry. They say that there is no impact on financials, operations, or other activities of the company. Now, company is committed to upholding and demonstrating the highest compliance standard. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on Paytm, which is in focus. But the other big stock and the big story that we're tracking today is Vedanta, which has launched its $800 million QIP. Nigel is here to tell us about how the proceeds are likely to be used and how this fundraise is likely to aid the company's growth. Nigel.
Well, that's right. Vedanta Limited has launched its $800 million QIP, which includes the base issue of around $600 million with $200 million of a green shoe option. The timing is perfect. The globe braces for rate cuts, which will result in a softer dollar, and will serve as a booster shot for base metal prices. And so in that context, Vedanta is perfectly placed. Well, what can Vedanta use these funds for? Well, they can use the funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years. It can also look at retiring the high-cost debt and ultimately make a bit of a pitch for its rating upgrades. Let's see whether or not that happens. Well, the QIP entails a dilution of around 3 to around 4% on its total equity base, and so the promoter holding will get diluted from around this 59% odd mark as of the last reported number in June 2024. But there will be a lock-in of around 60 days for the promoter entity. Well, the promoter, Vedanta Resources, well, it's in far better shape than what we have seen in the recent past. It's reduced its net debt at the standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, that's FY25. How do they do that? Via brand fee payments from Vedanta as well as Hindustan Zinc, the promoter stake sale that just got concluded in the past month, and also the dividend payouts. Some part has been paid and some part is due in the coming fiscal. Well, brokerage firm Phillip Capital, they have given the stock a target price of close to 550 rupees per share. And as the table indicates, well, bulk of this value is coming in from the stake that they have in Hindustan Zinc, which is 65% stake out there, and also its aluminium business. While there is a bit of a negative value that's ascribed to the debt in their books of around 173 rupees odd. But there is a potential upside risk to these estimates on two counts. One is on the net debt. That what they have assumed, well, it could be relatively lower. Why is that? Because of this fundraise and also the healthy cash flows. While the aluminium EBITDA number, that could be relatively higher as well, because they're looking at higher captive sourcing of alumina, coal as well as bauxite, which could lower the cost of production of aluminium by around $250 on a structural basis. Well, the street further expects the demerger to be completed by the end of this fiscal, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight the three key risks which could derail this entire bullish outlook. One is the higher debt at the listed entity. Well, if it's used to service the promoter debt, that will be viewed negatively. The second factor is delay in commissioning of some of this backward integration that we're talking about for its aluminium operations. And the third factor is, suppose they invest all this cash that they throw up into a low return asset or an unrelated sector, that in fact will be a bit of a negative. For Vedanta, the ingredients are in place. The question is, will it finally deliver for shareholders?
All right, Nigel, thanks a lot for that. Will it finally deliver for shareholders is the question that we will get an answer to as the company raises funds via QIP. Meanwhile, there were flashes at the bottom of your screen, and these were pertaining to MTNL, where the government has sources say that the government has asked MTNL to monetize its land assets at the earliest. The stock has seen a big spike. It's up around 10%, and it's seen a bit of a rally over the last few months already. But this is not the first time news of such nature has come by. Let's see, how fast they can actually go ahead and monetize some of the assets that they do have, because this has been the big thesis on MTNL over the last many years as well. But one of the stocks which is surging in today's trading session and on the back of fundamental news, and that is Hudson Agro, because they reported their first quarter numbers yesterday. The stock is up 7%. It's on account of a couple of factors that these numbers look very good. One, the summer season. There was extreme heat wave. The company has been pushing on increasing its distribution for some of its value-added products, including the likes of ice cream. So that's aided the business, and gross margins have expanded both year-on-year and quarter-on-quarter as well. So to put numbers into perspective, 10.5% revenue growth is what the company has reported, 2,375 crores on the top line. That has resulted in a 39% or 40% jump in the EBITDA, which has turned in from 238 crores to about 330 crores, with margins around that 14% mark versus 11%. So there's a near 200 basis points improvement out there, 300 basis points improvement. The net profit up by 63% as well. The gross margins, both year-on-year and quarter-on-quarter, they've seen an improvement. In fact, this is the highest gross margins that we've seen in the last many quarters for the company itself. And why are these margins better at a time when milk procurement prices may be going up? Well, because the management had told CNBC-TV18 earlier that they have prepared well for summer. They're sitting on enough stock. They target 15 to 20% growth in sales in the next 2 years with improved margins. They had already guided for 100 to 150 basis points margin improvement, and value-added products, which a couple of years ago were around 25 to 30% of their sales, are now 35 to 40%. The only two things that we have to watch out for now is how milk procurement prices pan out for the entire industry, and secondly, whether they go ahead and reduce the debt that they had on their books to sub 500 crores by July 2025, as they had earlier guided. And taking note of these, moves on Hudson Agro, a couple of other stocks are also buzzing around. So pull up something like a Parag Milk, which saw an uptick in yesterday's trading session somewhere in the middle of the day, and now as well has moved to the high point of trade. And the other one is Dodla Dairy, both of them at the high point of trade. The question is whether they benefit from improved margins or not as well, because both of them have higher milk procurement prices. So the reduction in margins may not be very well taken by the street for both Parag Milk and Dodla Dairy. Whereas for Hudson Agro, they don't have to, depend a lot on procurement of milk from outside vendors. So let's see how that pans out.
Okay, all right. Thanks, Banglab, for that. So all of those stocks are buzzing around today. We need to take a short break, but a quick programming note. Coming up on this Wednesday, 9 a.m. is a very special offering, a big CNBC TV18 exclusive, just ahead of the budget. One of the world's top market strategists is in our studios. Chris Wood of Jefferies will make his bull case for India Also, don't miss out on an exclusive chat between Chris Wood and these streets stalwarts Ramesh Damani and Utpal Seth. All this on Wednesday at 9 a.m. only on CNBC TV18.
On the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Welcome back. Well, for the markets, it's given up a little bit of gains for the mid-caps as well as the bank Nifty, but nothing to fret about considering that we are sitting at record highs and, the flows have been good in terms of the FIIs as well. So as of now, just about consolidating, the Nifty is higher by around 35 odd points. The Sensex is higher by around 97 odd points. Remember that it was a good US close as well, but maybe the markets are now preparing themselves for domestic cues such as earnings, big earnings, as well as the union budget. But let's move on. Temasek is aiming to invest around $10 billion in India over the next 3 years, says the country head Ravi Lamba. Our colleague Nisha Podar spoke to him exclusively and began by asking him about the impact of higher interest rates around the world and the effect of global events on the liquidity situation globally.
Our investment focus, more of our dollars will likely go to the Americas and India in the next, say, year or so, as we think about what's happening there. And globally, you're right, there's a significant amount of uncertainty on both geopolitics. That's a concern as we think through what might happen there. We're seeing possibly some tail risks from political shifts in Europe, as we've seen in the last few weeks. There's still geopolitical uncertainty out of China, which might impact the export demand out of China. So we think about that carefully. And then we see the positives of that also can happen in certain places where we may see supply chain-led upside, that we might see for India, as India's low-cost manufacturing base helps India do more in the export side. Overall, fiscally, we see the Federal Reserve is likely to keep rates higher for longer. We think the 2% target is uncertain at this stage. The good news is that recession risks have faded. The global economy is strong. On the U.S. side, you see the labor market is resilient, as is growth. So the overall risk framework seems to have come down, which makes us more positive to put more capital to work. as we find the right opportunities on a bottom-up basis in these countries.
You know, last year when we spoke, Ravi, you said that up to $9 billion for next 3 years is the kind of investment plan you have for India. So by that logic, a run rate of $3 billion of investment has been achieved in the last year?
Yes. So last year we did $3 billion because we found the opportunities, and if we find the opportunities, we'll continue to do that run rate. We think, so if I step back, I think what we think about India right now, India exposure is almost $50 billion in Sing dollar terms. So it's about $37 billion US dollars. So that's our portfolio exposure in India.
Yes.
Over the next 3 years, we're hoping we can put, say, $10 billion to work. Maybe more, maybe less, depending on the opportunities. Our portfolio, our subsidiaries are also investing in India.
Right.
So that amount of investment may be higher, depending on how they invest. And, you know, we have subsidiaries like STT Data Centers, Singapore Airlines, Singapore Telecom, SemCorp. They're all investing in India, Ascendus, Capital Land. So their investment journey also shows that they are increasing exposure to India. India has been the best performing market for Temasek globally in terms of returns, and we hope that can continue.
Right. So what is your ambition, Temasek's ambition with Manipal Hospitals investment? Ravi, IPO is something that the market is expecting anytime soon. Is that one of the strategies, and how soon can we expect that?
The strategy simply at Manipal Hospitals is to grow the business inorganically and organically. And the decision to buy and build will really be dependent upon the economics of both. And typically you'll find when you already have scale, and Manipal Hospitals is, you know, let's say top 1, 2 operators in the country in hospitals, you know, your ability to build is almost as efficient as your as to buy.
Yes.
So we will make that decision based on capital allocation and what the right return framework should be. When it comes to an IPO, yes, we will take the company public. There's alignment amongst the shareholders. It comes down to the right timing. Timing is when the company is fully ready, when we believe the business is mature enough for public investors to now invest in it, so that, you know, everyone has a good outcome, and when the markets are there. So we will take our time, and we will do it at the right time.
Right. Is it at all expected in a year's time from now?
I don't think in the next 12 months, but we will take the company public.
And about two, EV companies, pure play, two-wheeler companies gearing up for an IPO, and of course your portfolio company, Ola Electric, being almost ready. Ravi, in the pre-IPO round, you had invested at $5.5 billion of valuations. You think at the current environment, that is a valuation, and an uptick to that valuation is quite achievable, and your view on part exit from this IPO?
Okay, I don't think it's fair for me to comment on something that's happening right now. All I will say to you is that we are long-term investors in this business because we believe in the long-term growth in the business. The fact that we may be taking some money off for the IPO is a consequence of of helping the IPO happen, and we see this as a long-term play. We're comfortable with the valuation we invested. Of course, we always hope that we will make good returns out of all our investments, so this is no different.
I wanted to take your view on financial services also, Ravi. Of course, one of your portfolio companies is heading for an IPO, Niva Bupa. Insurance has been dynamic over the last few years. How do you view this company and overall financial services currently?
Again, it won't be fair for me to comment on Niva Bupa, but we made the investment on the basis that we have a strong belief that insurance is a great place, huge runway, long way to go, and just started actually in many ways. So we are invested in public markets and insurance. We have invested in the private space as well. The fact the company going public is just another milestone in its own journey. IPO is a one-point-in-time event, right? Ultimately, we are focused on the long term, and that's how we look at it. Financial services, insurance is a place we will put more capital.
All right, that's interesting opinion coming in from Temasek for their portfolio companies, etc. Just before we slip into a short break, we have a couple of stocks which are spiking. Alembic Pharma has been doing well from the word go right now, up 8% as we speak. First Source is the other one which too has recovered from the lows, and United Spirits. Just before we go into a break, just look at United Spirits. There's been a big surge out there as well. At the bottom of your screen are numbers coming in from DB Corp. 49% jump in their net profit. Remember, year on year, there would be a big skew largely because of the election event and that aiding their ad revenues, and that perhaps is reflected in their numbers as well. We'll get more details as per, what the advertising revenue this time around has been. Revenue has grown by about 6.5%. How much of the increase has been on account of the improvement in newsprint prices or reduction in newsprint prices and improvement in margins is something that we will track as well. Take a short break for now. Come back on the other side. We have Sachidanand Utekar, who's joining in with some trading strategies.
value.
Holding up with around 40 points gain on the Nifty. We were talking about the numbers coming in from DB Corp. It's the margins which have actually led to the improvement in the profitability. Revenue growth of 6.5%. Margins improved by 700 basis points. There was an over 40% jump in the EBITDA, and as a result of which the net profit is higher by about 49%. The ad revenue up 8.5%. Circulation revenue as well was slightly higher. The stock mildly off highs. Maybe the street was expecting a little more when it came to ad revenues as well. But be that as it may, let's look at the market from an F&O perspective right now. Even as the Nifty is doing well, the mid-cap index is doing a shade better, with broader markets seeing better gains. But off highs, we are seeing some bit of, at high levels, we're seeing some supply. And that's largely because of the financial space. The Nifty Bank is in the red. The Nifty Financial Services too is largely flattish. And those will be the indices that we'll be watching out for in the next couple of hours. So for the Nifty Bank, 52,500 where we are right now, 50 points away from that is an extremely crucial zone, because both the call and put at 52,500 are most active, and the straddle, which is a call and a put together, have a premium of 150 rupees. So 150 points on either side. That is 52,350 to about 52,650 is the range that one is looking at for the Nifty Bank. For the Nifty Financial Services, the premium on the 23,700 straddle has about 65 rupees, telling you again that 23,635 to 23,765 would be the range that one is looking at on that index as well. For the Nifty itself, support has moved higher. 24,600 put is very active, and at the same time 24,650 call is equally active as well, telling you that there is supply at levels upwards of 24,700. A lot of long positions added on Coal India, so that's one stock which I'm keeping on my radar. A lot of long positions added on refiners as well. So we have BPCL and HPCL, both of them spiking in today's trading session with open interest spike. two stocks I'm watching out for from an F&O ban perspective. Balrampur Chini may actually re-enter F&O ban after exiting it yesterday. And Aditya Birla Fashion, the one that went into F&O ban in the early part of the series, may now finally exit F&O ban in today's trading session. And that explains why the stock has seen a bit of an up move as well.
Okay, all right. That's on the F&O space. Well, we do have Sachitanand Utikar of Trade Bulls joining in on the show to discuss the technicals now. Sachitanand, hi. Welcome to the show. Well, the markets have come off a little bit. No worries. But nonetheless, consolidating at this point. So how would you approach it? Would it be more stock-specific or index-specific?
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly, index is something that can be avoided as of now. Though if we have the Nifty, which has been trending for almost 29 trading sessions in a row above its 5-day exponential moving average support, which is placed somewhere close to around 24,510. So until unless this particular level holds, we may see this gradual up move in the indices, continuing on the positive side. But when we look at Nifty Bank, clearly it has been oscillating within its previous day trading range. So unless we don't see a breakout outside this particular range of 52,650 on the higher side, we may not see very strong momentum play. So I think it's better to avoid the indices as of now. In case if we get a dip in Nifty somewhere close to around 24,600, I think that will be an ideal level wherein some long positions can be considered. But as of now, it is better to avoid the indices and focus more on stocks.
So what stocks would be on your radar right now, Sachi?
Mangalam, two stocks, stock ideas on the bullish side. First of all, Godrej Properties has displayed a good strong breakout from a bullish flag formation. Since the beginning of the day, we have seen very strong long built up positions here. If you look at the entire structure, the pattern target is placed somewhere close to around 3460, and that's why we are recommending building long positions here. From momentum perspective, any decline towards 3365, 3370 would be a good level wherein some aggressive long positions can be deployed. The stop loss for the trade should be placed at around 3330 on a closing basis. The other stock idea which has hit our radar is Marico. Now, if you look at the pattern structure, it looks like a classic rounding bottom formation. The neckline of this particular pattern was placed somewhere close to around 660. So this particular level has been breached confidently, and right now we have seen a good amount of traction here. From an intraday perspective, we may see a swing towards 685, but positionally I think the 700 target is well intact. So I think even here long positions can be deployed, keeping a stop loss somewhere close to around 658 on a closing basis.
All right. Thank you so much for joining in and giving us your views on individual stocks. Marico indeed has moved to the high point of trade. It's the day for some of the FMCG stocks doing well. But what we'll do is take a short break, come back, focus on some of the earnings, particularly from the pharma space. We'll discuss this space with the analyst, the expert, Vishal Manchanda of Systematics joins in after this short break.
What are the tests that women need to probably undertake when they are approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they're younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. then the examination, internal examination by the gynecologist, the pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has, testing and an ultrasound lower abdomen.
Dr. Sunil, you know, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, you know, one of the statistics that or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial testing.
Well, we're tracking earnings thick and fast, so let's get you our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector daily. And today, Ekta's moved across to tell us what one should expect from the pharmaceutical sector for the first quarter. Ekta.
Thanks for that. Well, pharma companies are expected to kick off FY25 with around an 8 to 10% growth in revenue, led by the domestic business, around an 8 to 9% growth in the EBITDA on account of higher expenses being offset by niche launches in the US, and profit growth of around 10 to 13% year-on-year due to lower interest and tax outflow. Now, domestic formulations are expected to lead with a growth of around 10 to 11%. Company-wise, Mankind, along with Torrent Pharma, Dr. Reddy's, JB Chemicals could see good traction in the domestic sales with a growth of as much as 10 to 12%, with Cipla and Sun Pharma at around a 9 to 10% growth. Key drivers for the domestic business include traction in key therapies, new launches, and increase in market rep productivity. Now, the US business is expected to continue to benefit from drug shortages, mid-single digit price erosion, and sale of limited competition drugs such as Revlimid generic. Estimates are that the US could see around a 6 to 7% growth to around $1.2 billion. Now, company-wise, Revlimid generic continues to aid numbers. Cipla's US sales are estimated to grow to $235 million, up 6% year-on-year. Dr. Reddy's to grow 5% on a year-on-year basis, both aided by Revlimid generic. Aurobindo likely to generate $27 million from the drug, which would be similar to last quarter, while Natco could see margins of around 45% aided by the drug. Now, the likes of Lupin is expected to benefit in the US from key drugs such as Spiriva generics, so they could make sales of around $220 million, and the launch of a particular drug used for overactive bladders, Mybetriq. Now, Sun is expected to see growth aided by its specialty portfolio. So, estimates are that the growth could be around 4% Q-on-Q to $282 million in its global specialty sales. Watch for a few more companies, Divi's Labs, which could report around 35% year-on-year growth in sales led by a low base. Biocon could report around 3% Q-on-Q growth in core biosimilar sales. And lastly, commentary on compliance from Aurobindo on UGR3, Cipla on Goa, and Pithampur and Sun on Halol and Dadra facilities. Let's, as always, leave you with the valuations, which on an FY25 basis look quite punchy.
All right, Ekta, thanks a lot for that. Indeed, some of them looking punchy on an FY25 basis. But what's the street factoring in this time around? And what are the stocks that one should be betting on? Vishal Manchanda, who's the pharma analyst at Systematics Group, joins in now. Vishal, of the first quarter earnings, what do you think will be your pick of the pack? And what are the key trends that you are expecting from some of the companies, reporting numbers this time around?
So I think the best performer for this quarter should be Zydus Life Sciences, led by the US. So they have a limited competition launch there. So as Ekta said, it's MyBetric, which is going to be very large for them, and even larger for. So Lupin is the other company that's also going to launch this drug, but Zydus probably is going to do much more out of this opportunity, and the US sales should meaningfully rise for them. So that's going to be the best performer. But as you have indicated, the valuations quite build in all of these upsides that we expect in the US. And again, we know these are not structural opportunities. These are these opportunities will pass by, and companies will need to replace them. I think the other trend in this quarter we need to watch out for is lower raw material prices. So as we can see, the antibiotic raw material prices have come down meaningfully. And if you look at companies who have large presence in antibiotics, one is Cipla and another is Aurobindo. Alchem is also another company that should benefit out of the lower raw material prices. Another important aspect this quarter is the last quarter, the base quarter last year was on a low base as far as the India business is concerned. So why on a low base? Because the last year we had seen NLEM price revisions and also ceiling price cuts. So that led to a low base, and probably we should see better growth in India on a reported basis. So all of these should help, and Zydus should be the one that should be the strongest.
Okay, so you're expecting Zydus to be the strongest this time. What about Lupin? Sales are in the US are expected to probably sustain above $200 million. They have that drug which is used for overactive bladders, MyBetric generic, which they would have launched as well, which I think Zydus would benefit from, along with Spiriva. So what is your estimate on Lupin? How much of a game changer do you think this drug would be for Lupin and the overall sales estimate?
Yeah. So on Lupin, this drug MyBetric will not contribute as much as what it would contribute to Zydus. So probably Zydus is going to do a very large number versus what Lupin might do, because like Zydus is doing 2 doses while Lupin is just doing 1 dose of this drug. So, and probably the other dose, Zydus is exclusive, while in the second dose, both Zydus and Lupin are there on the market. So I think Zydus has got an upper hand here in this launch. And what was the other question you said?
Spiriva, their total US sales for Lupin.
Yeah, so on Spiriva, I think that should be flattish this quarter. But what happens in Lupin is they are also expected to see erosion in one of their large assets, which is generic Suprep. I think that is about $70-80 million in our estimates for the company, and that should see erosion this quarter because a lot of other companies have launched a copy of Suprep. So that erosion should offset some of the gains they are going to get from this MyBetric launch, and they also had a few other launches this quarter. But I think this erosion should be steeper for them. So more or less, I think a bit of growth or flattish numbers is what I would see for Lupin.
All right, just a final question before we let you go, Vishal. You said Zydus Life is likely to be the pick of the pack when it comes to numbers this time around, but the stock, if you compare it to something like a Lupin, in the last 6 months, it's rallied about 64-65% as well. So from a valuation standpoint, what do you think is most attractive in the space right now, and which of these stocks do you think has a lot more valued or priced in the current price that there is?
I think structurally, among the larger names, we prefer Sun Pharma and Cipla, where we think these companies can compound longer. And so these are not as much driven by one-off opportunities as the other companies. So the concentration in the US business for the other companies is much higher. So that is why we prefer Cipla and Sun over the others among the larger names.
Okay. Just quickly, wanted your thoughts on 2 stocks, Divi's Labs, in terms of sales, what could they report in terms of margins this time, as well as Sun Pharma when it comes to the global specialty business.
Right. So on Divi's, I think we are expecting strong growth in CRAMS, about 12-13% growth in CRAMS, while on generics, we are expecting high single-digit growth, mid to high single-digit growth. That's where we are. In terms of margin, I think they should be around, on EBITDA, they should be around 31-32% EBITDA margins. So I think the quarter should, on a YOY basis, DV should look good, but on a QOQ basis, it should be weaker because the fourth quarter for DVs is generally a high base, wherein they do book large part of their cram sales in the fourth quarter. So weaker on a QOQ basis, but a decent numbers on a YOY basis. And on Sun Pharma, I think the specialty numbers, we are expecting a bit of decline, and that decline would be on account of a seasonal weakness in this quarter. So we are looking at QOQ decline in the Sun Pharma specialty sales, but on a YOY basis, the specialty sales should grow mid-teens.
Okay, all right, Vishal, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us your perspective on what we can expect in the pharmaceutical space this quarter. We need to take a short break, but up next, we'll get you a lot more stocks in focus.
In the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back. All consumption stocks are doing well today, but in that HUL has a slightly better benefit here, largely because of the announcement that came in yesterday. A very small announcement from their overall standpoint. They will sell their water purification business, Pureit, to A.O. Smith for about 601 crore rupees. Remember, the FY24 revenue of the water purification business was close to around 300 crores, so sub 1% of their sales. And 601 crore typically does not move the needle for them too much. They have cash of over 10,000 crore on their books already, and this accounts for just 0.02% of their overall market cap as well. But the important part here is they're getting rid of non-core businesses, and this deal is in line with their strategy of focusing on core categories itself, so improves their mental and management bandwidth a lot more, and that's a mild positive. Add to that the big tailwind that all these consumption stocks are seeing right now itself. Take a short break, come back on the other side. We track the commodity space with Manisha Gupta. Chirag Sheth, the principal consultant, South Asia at Metals, joins in.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests?
Welcome back, and joining us on the show now is Chirag Sheth. He's Principal Consultant South Asia at Metal Focus. Chirag, hi, good to have you. And while, of course, the whole of last week has been conversation about how there's a lot of gold coming under CEPA agreement in garb of platinum, where the duty is 5%. So looks like a lot of things have started moving now. We do understand that there was a meeting between government officials and various gold associations and agencies and big bullion dealers as well. The government clearly seems to be seized of the matter right now. Perhaps it was an oversight, and the government always obviously wants to do the good of the industry, but this clearly has been a loophole which a lot of people seem to be using on right now. What is your sense on what are the numbers right now, and what is all of this conversation headed to?
So I think, if you look at purely on how much has come in over the last probably couple of weeks, these could range anywhere between 3 to 5 tons of gold has obviously come in. And I think we've seen historically that whenever any such things are highlighted with the government is swift enough to move it and plug whatever loophole is there. So I think there is obviously things are moving in the right direction. It becomes a bit complicated when CEPA is involved, because then it is an agreement which is signed between two countries. So nothing can be done unilaterally. Obviously, the government can bring in more stricter norms so that things can be avoided in the future. But all these things will still take some time before the entire loophole is plugged.
Chirag, there was also a conversation, and this is coming in from officials, suggesting that if there is 15% platinum and 85 and let's say 70% gold and 10% of copper perhaps, then it should be perhaps a SAID and duty put in depending on what percentage the alloy is or the brick is for that matter. You think that is doable?
No, look, I'm not an expert on the foreign trade policy, but I think there are some norms which are there globally when it comes to alloy, where it has been mentioned saying that beyond a certain percentage, if a certain metal is used, then it has to be considered as that metal. So these are, I think, WCO norms, if I remember it right, which are World Custom Organization norms which are there. So I don't know how much changes can be made, but I think only we'll come to know the next few weeks as more and more consolidations takes place among these experts who are there who make these foreign trade policies.
Chirag, as of now, I mean, clearly you have been talking to a lot of people within the industry, and there have been various whistleblowers onto this one as well, because it clearly was construed towards bigger guys, bigger bullion dealers and importers, and the smaller jewelers clearly couldn't make much use of it. And there have been people telling us that there are various these kind of loopholes perhaps in the market right now.
Right, sure. Look, as I said, Manisha, yesterday at CNBC Awaaz and Metal Focus has written about this quite extensively. In a country where you've got 5 to 6 duty structures, things like this will always come up. We've had historically, we saw some, about 4 or 5 years ago, there were these 24-carat spoons and forks which are coming into India under the Indo-ASEAN FTA. Then we had findings coming in, then now platinum with gold. So when you've got 5 to 6 duty structures, these kind of complexities will remain unless and until we do not do away with so many duties. We cannot completely plug any loophole that exists in our foreign trade policy.
Chirag, also, would it be too much to expect anything like this sort coming in from the budget?
I think all of us know budgets are usually prepared a couple of months in advance. So I would be surprised if something comes in so swiftly. But, given with this government, we really don't know what can come in. So always ready for any surprises, if at all.
Okay.
All right, ready for surprises always. Well, with that, what we'll do is we'll, not surprisingly, take your leave on this edition of Halftime Report. Business Lunch comes up next.
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they're younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has to be, testing, and then ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth. And
Stocks notch up some more gains with mid-caps leading the charge today. Real estate as well as telecom and metals are the prominent gainers, while the financials are the soft spot today. Now Vedanta joins the fundraise rush with an offer to mop up nearly about 7,000 crore rupees via QIP to likely fund capex or pay some debt. The offer precedes the split of businesses expected by the end of FY25. Vodafone Idea and Bharti Airtel hope for some relief on their AGR dues after the Supreme Court agrees to hear a curative petition. While Vodafone Idea owes 70,000 crore rupees, Bharti's dues stand at 36,000 crores. Experts tell CNBC-TV18 that a significant step by the UP in government allocation for infrastructure from the interim budget is likely. They see roads and railways accounting for the lion's share of the spend. Jerome Powell indicates the Fed won't wait until inflation is down to 2% before cutting rates. Says that the central bank is looking for greater confidence that inflation will return to the target. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and take a look at the market today. Yes, it's all in the green. Nifty 50, 24,650 levels at the moment, closer to the high point of the trading session, 0.25% up. When we talk about Sensex, it's inching closer to a 200 points gain. Bank Nifty is a little more lackluster. It's flattish on trade, but with a green bias. But the real momentum, which used to be in mid-caps, that has come down a slight bit, but still holding up minor gains. Advance decline ratio in favor of the advances today. And on my screen, some of the consumption stocks like Hindustan Unilever is doing well. Remember, the PSU momentum still continues with BPCL, Coal India. And also remember, it's also the day of the telecom companies with lots of buzz and lots of new developments in the telecom space after the recent telecom tariff hike. So Bharti Airtel is smiling in trade today, but I would bet on the consumption stocks really picking up, with all of them like Tata Consumer, Britannia, all of them really having a good showing with a stiff amount of gains at the moment. When we talk about on the flip side, Dr. Reddy's as well as Kotak Mahindra Bank, Shriram Finance, Ultratech Cement, these are some of the individual laggards in terms of the percentage drop on Nifty 50. So that was all about the market momentum at really lunch hour. Let's talk about one particular count, which is Vedanta. It has launched its $800 million QIP, and Nigel D'Souza, our colleague, is right here to tell us how the proceeds are likely to be used and also how this fundraise is likely to aid the company's growth plans. Nigel, tell us.
Vedanta Limited has launched its $800 million QIP, which includes the base issue of around $600 million with $200 million of a green shoe option. The timing is perfect. The globe braces for rate cuts, which will result in a softer dollar, and it served as a booster shot for base metal prices. And so in that context, Vedanta is perfectly placed. Well, what can Vedanta use these funds for? Well, they can use the funds for its ambitious growth capex of around $3.5 billion, which has been lined up over the next 2 years. It can also look at retiring the high-cost debt and ultimately make a bit of a pitch for its rating upgrades. Let's see whether or not that happens. Well, the QIP entails a dilution of around 3 to around 4% on its total equity base, and so the promoter holding will get diluted from around this 59% odd mark as of the last reported number in June 2024. But there will be a lock-in of around 60 days for the promoter entity. Well, the promoter, Vedanta Resources, well, it's in far better shape than what we have seen in the recent past. It's reduced its net debt at the standalone level, and it's well placed to fulfill the $1 billion obligation for this fiscal, that's FY25. How do they do that? Via brand fee payments from Vedanta as well as Hindustan Zinc, the promoter stake sale that just got concluded in the past month, and also the dividend payouts. Some part has been paid and some part is due in the coming fiscal. Well, brokerage firm Phillip Capital, they have given the stock a target price of close to around 550 rupees per share. And as the table indicates, well, bulk of this value is coming in from the stake that they have in Hindustan Zinc, which is 65% stake out there, and also its aluminium business. While there is a bit of a negative value that's ascribed to the debt in their books of around 173 rupees odd. But there is a potential upside risk to these estimates on two counts. One is on the net debt. That what they have assumed, well, it could be relatively lower. Why is that? Because of this fundraise and also the healthy cash flows. While the aluminium EBITDA number, that could be relatively higher as well, because they're looking at higher captive sourcing of alumina, coal as well as bauxite, which could lower the cost of production of aluminium by around $250 on a structural basis. Well, the street further expects the demerger to be completed by the end of this fiscal, which could unlock further value for minority shareholders. Well, before we wind up, let's highlight the three key risks which could derail this entire bullish outlook. One is the higher debt at the listed entity. Well, if it's used to service the promoter debt, that will be viewed negatively. The second factor is delay in commissioning of some of this backward integration that we're talking about for its aluminium operations. And the third factor is, suppose they invest all this cash that they throw up into a low return asset or in an unrelated sector, that in fact will be a bit of a negative. For Vedanta, the ingredients are in place. The question is, will it finally deliver for shareholders?
All right, thanks, Nigel. So that was the view on Vedanta with a vague fundraising at the current moment through QIP. Moving on then, Uttar Pradesh government extends its electric mobility policy till the year 2027. Now, Parikshit Luthra has more details on this. Parikshit, tell us about whom it impacts and what does it augur and mean for the hybrid auto industry?
Well, the electric vehicle mobility scheme of the UP government, which was launched in the year 2022, was due to expire in 2025. There were voices from within the industry which wanted it to be extended till 2027. Now the government has done that. Essentially, this is for the unutilized amount. 409 crores was unutilized under this scheme, and now this amount will be utilized till 2027. This gives a 15% incentive, or 15% incentive on the ex-factory price of the vehicle, maximum 5,000 rupees per electric two-wheeler. So this would be the incentive for two-wheelers. There will also be incentives for shared mobility, for electric buses as well. Road tax waivers are there as well for electric and hybrid cars. Now, all of this will be available to customers till 2027. Now, here's the catch. When it comes to road tax waiver for hybrid vehicles, the UP government has already said that they are going to come out with a clarification on the price range of vehicles which will get the incentive. It will not be for all categories of vehicles, and maybe it could be capped in the range of 15 to 20 lakh rupees. Also, they would like the scheme to be aligned with the eligibility criteria under the FAME scheme. So let's see when the UP government comes out with the clarification. As of now, the electric vehicle incentives under the scheme have been extended and they'll be available to customers till 2027. Having said that, there is status quo on the hybrid road tax waiver notification. That continues on paper, but the clarification could come soon and change things.
All right, Parikshit, a very important story when it comes to some of the EV players, especially based out of Uttar Pradesh. All right, moving on to the top sector for me today, that's the telecom space, which is really buzzing. And Jyotir Aditya Scindia had a meeting with industry players. Let's go across to that.
Now, the members of these committees and us will be working together. There are varied schedules for the first presentation of these committees over the next couple of weeks, and then we will be taking each individual issue at a time, delving into the details and devising an action plan with clearly timelines and actionable items so that we can take our sector forward. These 6 committees are the backbone of the communications sector in India, and by forging these committees, we hope to take the sector forward, realizing Prime Minister's goal of creating not only an Atmanirbhar Bharat, but a telecom superpower within India that will hopefully transcend our boundaries in the days to come. Thank you.
Sir, some questions, sir. The telecom industry demand has been known for long. Like the key demand is that bring OTT into the telecom services.
So I'm not getting into any particular issues. We have identified the agenda, as I've mentioned to you. Each and every one of these committees have been built in a partnership because it is when our stakeholders and our customers derive value that really the robustness of the sector is maintained going forward. As and when we start deliberations on each one of these issues that we have delved upon, we will brief you accordingly. Thank you.
Thank you, sir.
All right, so that was the Telecom Minister Jyotir Aditya Scindia. In fact, he had that big important meeting with the industry leaders in the telecom sector about their demands and the agenda for improving the prospects of this sector going forward. So that's the word coming in from the Telecom Minister. But also remember, Bharti Hexacom is surging on positive brokerage notes today. On the other hand, Vodafone Idea as well as Bharti Airtel hope for some relief on their AGR dues after the Supreme Court agrees to hear a curative petition, which remember was yesterday. So the entire telecom space is evolving to another level with many moving parts. Reema Tendulkar, our in-house telecom expert, gets us all the details and what it means for these particular counters, the stocks and the industry. Reema.
Thanks so much for that. So let's start with Bharti Hexacom. As you pointed out, there have been some initiating coverages. So first, JP Morgan overweight rating on Bharti Hexacom, target price 1280. Not just that, today even IIFL has initiated coverage with a buy rating, target price 1267. In fact, most brokerages are bullish on Bharti Hexacom because this is a pure play telecom company. It operates in only two circles, Northeast and Rajasthan, where the tele density is lower, which basically means fewer people have mobile phones, so the the market growth potential is quite a bit, and therefore it's one of the best places to play the market repair or the tariff increase story compared to peers like an Airtel or a Vodafone Idea. The other two stocks, Bharti Airtel and Vodafone Idea, are also higher in trade, and that rally is sparked on optimism or hope that now that the Supreme Court has agreed to hear the curative petition which was filed by the telecom companies Vodafone Idea for a rethink on the AGR dues. Now, companies are saddled with massive AGR dues. For Vodafone Idea, the current balance is 70,000 crore. For Bharti Airtel is 36,000 crore. If in the curative petition there is any kind of relief, and the street is hopeful of a 50% relief, because they are arguing that there are some arithmetical calculation errors in the way AGR was computed. If they get that relief, then we're talking about a potential relief of 35,000 crore rupees for Vodafone Idea, which amounts to 5 rupees per share, and for Airtel it amounts to 30 rupees per share. But that's assuming a 50% relief on AGR dues, and that's what the street is hopeful about. Back to you.
All right, so entire telecom sector is really buzzing on these developments, Reema. And I would like to point out one more counter which is connected with the telecom space. And as the health of the telecom improves, the telecom tower space also improves. So Indus Towers, look at the kind of momentum it has seen in the last 1 month and is still holding up closer to 2% gain at the moment. Don't lose sight of this particular counter. Now, as we slip into a short breather on Business Lunch, here's a quick programming note for you. Coming up tomorrow at 9 a.m. is a very special offering, a big CNBC TV18 exclusive just ahead of the union budget. One of the world's top market strategists in our studio tomorrow, Chris Wood of Jefferies, will make his bull case for India. Also, don't miss out on an exclusive chat between Chris Wood and the Deal Street and the Dalal Street stalwarts Ramesh Damani and Utpal Sheth. All this on Wednesday at 9 a.m. only on CNBC TV18. Don't miss this. Welcome back. You're watching Business Lunch, and let's get you some top global events and developments. On to the Federal Reserve Chair Jerome Powell's speech at the Economic Club of Washington, D.C., and he said that the central bank would not wait for inflation to meet its 2% target to start lowering the interest rates. He also spoke on the likelihood of a hard landing in the economy. Some very important comments. Listen in.
When we change interest rates, that tightens financial conditions, and that in turn affects economic outcomes, growth, labor markets, and ultimately inflation, but with lags that can be long and variable, as Milton Friedman famously said. And the implication of that is that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing, or the level of tightness that you have, is still having effects which will probably drive inflation below 2%. So we've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. The labor market does not have slack. Essentially, you're at equilibrium now. But look where inflation is. Inflation's at 2.5%. So this was in defiance of a lot of conventional wisdom, but we thought that was right. And that says that, you have to be, one thing you learn is humility in forecasting, so I wouldn't rule it out, but I would say that the kind of hard landing scenario is certainly not the most likely or a likely scenario.
All right, some important comments there, and all eyes would be on the first interest rate cut by the Fed. With that, we'll slip into a short breather on the show, but stay tuned for more news and updates and all the market action on the other side.
What are the tests that women need to probably undertake when they are approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, like with the whole body checkup, a lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then specific...
Welcome back. You're watching Business Lunch. Now, NCLT admits BCCI's plea seeking insolvency proceedings, and Ritu Singh joins us with all the details. Ritu, tell us about this, and what is what is Byju's response to this?
Well, it's a big setback that's coming in for Byju's. Its parent Think and Learn being admitted into the bankruptcy court means, the current founders, the current management are at the risk of losing their company depending on how this resolution pans out. Now, BCCI had claimed dues of 158 crores on which it said that Byju's had defaulted, leading BCCI to file an insolvency petition in the NCLT. And now that plea has been admitted, which means all of the other pleas as well from some of the other operational 405 other operational creditors that had also filed these bankruptcy pleas against Byju's are going to be combined into one, and now the company is going to be resolved through the insolvency and bankruptcy process. The court has named a resolution professional by the name of Pankaj Srivastav as the interim resolution professional to run Byju's until the committee of creditors is formed. Keep in mind that BCCI is an operational creditor. There are financial creditors, but of course those are foreign financial creditors. We'll have to see how the treatment there is. But important to note that given that Byju's has been admitted into IBC, the company immediately comes under moratorium, which means no other action can be taken against the company to recover dues by any of the creditors. Do keep in mind the investors have separately filed a case against Byju's in the Karnataka High Court and the NCLT, seeking to stop them from raising money through the rights issue, seeking to change the management and so on. All of that will probably just take a back seat with the company being admitted into NCLT. That case, however, is up for hearing at 2 p.m. later today. We'll keep you posted as to what happens in the case of investors. But a spokesperson for Byju's told us, and I quote them, "As we have always maintained, we wish to reach an amicable settlement with the BCCI and are confident that despite this order, a settlement can be reached. In the meantime, our lawyers are reviewing the order and will take necessary steps to protect the company's interest," end of quote. But we begin, given to understand from sources that Byju's does plan to challenge this NCLT order in a higher court, that is the NCLAT.
All right, Ritu, thanks so much. It's a very, very significant development for a startup company to go for insolvency. Of course, other options are also available, and it will be very interesting to see how an equity-based funding is really resolved through an NCLT process, one of its kind. Cipla stock is down in trade because income tax has raised more tax demand. Keep an eye out on that particular counter. We'll slip into a short break and get you more details on the other side about attacks in Jammu and Kashmir that killed 4 soldiers. All that and more coming up on Business Lunch.
Is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the examination, internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing and an ultrasound lower abdomen.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to.
Welcome back. And in the last few minutes of trade, market is seeing some bit of profit booking led by especially the banking stocks, and keep an eye out on Kotak Mahindra Bank at the low point of trading session today. Now, in a tragic incident, 4 Indian Army soldiers included with one officer were killed during an encounter with terrorists in Jammu and Kashmir's Doda district. Now, reports suggest that the search operations continue, and CNN News 18's Ishan Vani reports on this development.
Yesterday evening, when the forces received input about presence of militants, an operation was launched in the forest area of Doda, and that's when multiple teams of security forces exchanged gunfire with militants. And as they were trying to flee from the area, a young captain with his team and J&K police personnel try to chase them down. That's when a barrage of gunfire hit them. Then later on, they were taken to the hospital where 4 Indian Army Jawans, including this captain, succumbed to their injuries. There has been an intense operation which has been launched by the security forces, but there has been no success or contact which has been able to establish by the forces since yesterday. Now, this has again thrown a light at the situation that is unfolding in Jammu, but number of militants are active and trying to cause damage and harm to the security forces. We have seen it in Riasi, Udhampur, Doda, Kathua, and there has been a sizable number of militants present, and the forces put it somewhere between 40 to 50, and they are highly trained and infiltrated from Pakistan, and now forces are trying to regroup and reassess, and on the ground trying to monitor the situation to ensure that they are able to carry out extensive operations. Now, why is all this happening? One, because of the fact that when the India-China came face-to-face in Galwan, a lot of forces from these areas were moved there to the line of actual control, and that left area vulnerable. But it had been peaceful, and the enemy explored that gap and has been able to settle highly trained foreign militants there. Now, they have been trying to attack forces, ambush them, and also attack their vehicles. They have sophisticated M4 rifles which have been used by the US forces. Apart from that, there are also armor-piercing bullets which have been found which can pierce through certain gradings of armory of the security forces. But yes, there are meetings being held between several agencies to fix this problem.
All right, so that was the on-ground report from Jammu and Kashmir. With that, it's a wrap on this edition of Business Lunch. Mid-Cap Radar comes up next. Don't go anywhere.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Well, so far, a decent day for the Nifty. We've come up from the highs, though, 43 points higher on the Nifty. The pressure, that little bit that's coming in, is from the Bank Nifty. So that index is absolutely flat with some negative bias. But it's a very stock-specific market, and that's what we'll discuss in the next half an hour.
Very stock-specific market. Earnings have started trickling in, especially in the broader end of the markets. You had a few results that came by, and stocks are reacting to that. But we have quite a lot lined up on the show today. Let's start off with the top headlines. Stocks notch up some more gains, while mid-caps relatively lag. Realty, FMCG and IT are prominent gainers, while pharma and healthcare are the soft spots.
Vodafone Idea hopes for some relief on their AGR dues after the Supreme Court agrees to hear a curative petition. The company owes 70,000 crore rupees to the government.
Hatch & Agro surges more than 8% on the back of its strong Q1 earnings. Revenue rises 10% on a year-on-year basis. The summer season has also aided the company's ice cream business.
Max Estates up over 4% after its board approves 800 crore rupee fundraise. Street believes this fundraise could help the company invest in high-growth residential businesses.
Shares of Bharti Hexacom rally nearly 8% after the brokerage firm JP Morgan initiates coverage on the stock with an overweight rating and a target price of 1,280 rupees a share. Says the company is the best play on the Indian market tariff hikes thesis.
Oh, okay, all right. Those are the top headlines for the markets. As we pointed out, it has come up from the highs, but it's a 43-point uptick that we are seeing on the Nifty right now. Bank Nifty is the one which is underperforming today with cuts of around 0.1%. The mid-caps doing well, though they are still lagging the benchmark indices. The advance decline ratio is in the favor of advances, and it's a very stock-specific market. So we'll just discuss those broader market movers in just a bit as well. But a lot of news flow. We have earnings which have started trickling in as well, but the gap between the advances and declines, that seems to be narrowing. So that is something that we'll be tracking, whether this green that we are seeing on the mid-cap index that continues or not, because right now it's absolutely flat. But yes, some positive takes there as well.
Some positive takes there. Advances outpacing declines, at least at this point of time. But remember, we are sitting near the lifetime high levels. So Hormaz, I'm sure you have a lot of interesting stocks. Over to you, Hormaz, for the mid-cap movers. At this particular point of time.
The gap is narrowing. The volumes are also on the lower side. We're heading into a holiday, so I guess that explains the quiet trade that we are witnessing today on the benchmark indices and even in the broader markets. But as you mentioned, it's an extremely stock-specific market. So we'll get to some of these that are moving around in the broader markets at this point of time. And Raymond is one of them. That stock is around was locked in a circuit at one point of time, been in and out of that 5% circuit. So currently 4.5% higher. CAMS is doing well for itself, as is IRB Infra, and that is these are some of the movers today. The real estate index is the top sectoral gainer this afternoon. Sunteck Realty, after the business update, continues to move higher off the highs of the day, but 4.5% with gains. Prestige Estates, Brigade also having a good day. All constituents of the real estate index are trading with gains in today's session. Some stocks witnessing profit booking today. Some of the railway names, of course, Railtel, Ircon, Godfrey Phillips was up 20% yesterday, so coming off a little. And Zomato also witnessing some bit of profit booking at lifetime highs, down 3.5%. Stocks doing well on the back of volumes, and Tata Tele is one of them. Chennai Petro, of course, it's going to turn ex-dividend on Friday, so 16% higher there at the highest point of the day. Alembic Pharma is now up 10%, and LIC springs up among the volume buzzers in today's session. 3.5% higher now at 1100 is LIC. And lastly, some other losers within the broader markets. Jupiter Wagons has also had a good run, 6% lower now. Amber Enterprises, Oil India, after that positive brokerage commentary, had surged, but now is seeing a bit of profit booking. And Five-Star Business Finance also seeing losses of around 4% today. Back to you.
Okay, all right, Hormaz, thank you so much. That's an interesting list of stocks in the broader markets which are moving around. It's a good time to get a technical check on the markets. Let's welcome Shrikant Chauhan for just that. Shrikant, good afternoon. Thank you so much for joining in. What is the trade suggesting now? Will we consolidate now, considering that we are going into that midweek holiday tomorrow? What are the charts suggesting?
Yeah, good afternoon, Sonal. Good afternoon, everyone. Yeah, I think the market is in fact, it is gradually moving up and it is consolidating on a day-to-day basis. In fact, if we go through with India's volatility index, then that is also down and it is at its lowest level. So near the budget, we are expecting this VIX to again jump up from current levels. and that will actually then open the trading range for the Nifty. But currently, we are of the view that any correction from current levels close to, let's say, 24,500, 550 will be an opportunity to take some long positions. But at these levels, yes, we need to be more and more stock specific. At higher levels, I think 24,750, 24,800 going to act as major resistance in the near term. But in case if there is any correction, then there is a possibility that we could get one more opportunity to take long position in the market.
Good to hear that. Srikanth, what are the individual picks that you like at this point of time, or long positions that you're recommending?
Yeah, Vivek, I think, see, at these levels, we should look for adding those stocks where there is like momentum. And if we just go through with a few insurance company or insurance related companies, then in that we like LIC India, which is currently around 1,098, 1,095 levels. There we are of the view that the volume is expanding on a week-on-week basis, and it is crossing all important levels. So on the basis of its daily chart, it is heading for the levels of at least 1150 or 1200 in next few weeks or months. So it will take some time. But at this level, it's a buy with a stop loss close to 1,040. And we also like IRB Infra. And today we are seeing some good amount of buying momentum in infra companies. So in that, IRB Infra looks good. From here, the stock can move back to the levels of 77, 78, where it has made an all-time high. And at current levels, if we are taking long position, then stop loss should be somewhere close to 69.
All right, thank you so much, Srikanth, for joining us. By the way, we have Bajaj Auto's numbers which are flashing for you. Revenue is largely in line. If you have to say, it's a mild miss at 11,547 crore rupees, but there's nothing to really complain about there. Again, the net profits are also absolutely in line with the CNBC-TV18 poll, has come in at 1,988 crore rupees. The expectation was of 1,980 crore rupees. We'll just calculate the margins in a bit as well, and we will get some analysts to comment on the numbers as well. But this time around, in terms of preview, the poll suggested that revenues were expected to go up by 13.5%, EBITDA was expected to go up by 21%, margins were expected at 20% versus 19%, so 100 basis points increase is what was expected because of a rich mix in domestic motorcycles. Export markets were also seeing gradual recovery as per the commentary coming in from the management as well, and lower input costs, better mix and operating leverage was to support margins this time around as well, but we're still getting the margin number. For now, the stock is trading at the highs of the day, and so far the street seems to be liking the basics that we have got as well. But of course, we would need numbers in terms of margins as well. There you go. It is spiked in how it's up 1.5% right now, Bajaj Auto stock. So the street seems to be liking the basic numbers that we have got. Volume growth came in at 7.3% in Q1. It is expected to be a decent quarter, and so far these are the numbers that we have gotten. The basics, where net profit has come in absolutely in line with estimates, and revenues also largely
in line with what the CNBC poll was throwing up. Like you mentioned, the profitability is largely in line with what the street was anticipating. Remember, just a couple of weeks back, the stock did quite well, especially after a significant launch did come by. So we'll wait and watch by, number one, for the operating margin figure and the commentary that the company did. Remember, in the last couple of quarters, company also did pretty large buyback as well. We also have Abhishek, who's joining us Abhishek from Sharekhan, who's an auto analyst. Abhishek, you've seen the basic numbers on the screen. What is the first, reaction that you have to this particular set of numbers that Bajaj Auto has delivered?
So, prima facie numbers are looking broadly in line with our estimates that we are also expecting flat to marginal growth in bottom line on the QOQ basis, and the numbers are saying the same thing. Broader thing that in this quarter, while the company has reported a 7% kind of a growth in the volume, but the volume mix was quite better in most of the segments. Export mix and the three-wheeler mix was flat, but this motorcycle mix has improved significantly, and that has been translated into kind of a performance. Just for an example, that this above 125cc segment has contributed roughly 39% to the volume compared to the 31% in the previous year. Beyond that, I would also like to highlight that because this Egypt government has accepted a quadricycle as a as a recognized public transportation, the exports for quarter cycle has improved significantly in this quarter. This has been almost double. And third, this EV sales has been increased to over 40,000 units. So I suppose that has been supported performance in this particular quarter. Margin thing, I'm also waiting for that.
The margin number, Abhishek, has come in at 20.2%. The expectation was around a 20% margin. And of course, the last year saw a margin of 19%. How do you look at this number?
See, almost the margin picture is almost in line with my estimate. My estimate was 20.3%. So with this improved product mix and the stabilization of this export volume, the company has been sustaining this 20% kind of EBITDA margin for last, I think this quarter would be the consecutive third quarter when it has been sustained 20% kind of a margin. So going forward, I think with this the continued improvement in the product mix, the company is expected to sustain this 20% margin in the coming quarters. And beyond that, we will see some kind of a uptick in the quarter cycle sales and continued traction in the 125cc segment for this company.
Thanks for that, Abhishek. We also have Ashwin Patil. Ashwin, first up, we want your take on the numbers as well. A 7% volume growth and margins have expanded, and it's in fact come slightly above what our poll was looking at. Our poll was working with a number of close to 20%. It's coming at 20.2%. How do you see the numbers? Do you expect any EPS upgrades to come about?
See, the numbers have been quite decent. Nothing great as such, but 7% volume growth we were all knowing. But the margins have come slightly above our expectations. We were expecting close to about 20.1, so they have come at about 20.2%. So that is slightly above our expectations. Also, the stock has rallied a lot in the past, and going forward, with exports expecting to better their previous performance on the back of the quarter cycle growth that we are seeing in Egypt, and some sort of uptick again in the African markets also. And in the domestic markets, I would say that the 125cc segment going forward should pan out well with their the recently launched CNG bike. That should also pan out well for them in the coming quarters. So that proportion also should improve, and therefore the proportion of the contribution of lower than 125cc should go down, and that may aid margins going forward. So exports and the new bike should, and also the growth in the 125cc segment should aid better margins going forward. So we think that the stock is very much fairly valued, but going forward now we need to listen to the con call which is there in the evening and the outlook that the company is going to give. So based on that, we think that we'll be revisiting our numbers, but nothing great upgradation in the EPS at this point in time, I think.
Yes, actually the stock saw that spike. It has come off from the highs again. As both our experts have said, that numbers are largely in line, and the stock already has done very well. It's up 44% this year itself. We have Prakash Diwan joining in as well. Prakash, as Ashwin and Abhishek told us, they'll now be listening to the con call, the commentary from the management. Most of the positives are priced in as well. But of course, the CNG price, the bike launch and the export recovery will be key to watch. Do you think there's still some more triggers for an upside on the stock? How do you look at this entire space?
So, Sonal, I think you're right. The stock has run up significantly. So what these numbers do, which kind of definitely not just meet expectations, but better than marginally, these numbers will help the stock sustain these elevated levels. That's one. Second, it's a bit too early to figure out whether the Freedom launch, the CNG bike launch is going to be brought up to scale. If that happens, that is going to be a significant trigger, because they will have a head start before others even get into that space. And remember, that's a price-sensitive segment that they cater to. They can scale up very rapidly at the cost of other entry-level bikes. And the last thing is, the raw material side has been fairly benign all these last 2-3 quarters. There's been nothing very alarming about it. And if they were to, let's say, give out some sort of an indication in the con call where the margin improvement levers will still kind of be intact, then, probably the stock gets some more headroom to grow. But otherwise, I think these numbers are fairly decent, justify the stock at these 9,700 plus 9,800 levels. But the triggers are still in the making. This quarter really didn't have much to talk about. And then, of course, the monsoon and post-monsoon season is always better for sales domestically as well, not just exports. But we'll probably wait to see that happen. But otherwise, I think very good numbers. There's no shock in the stock that you would expect on the downside, even if things were to be a bit soft going ahead.
Thank you so much for that, Prakash. On that note, Ashwin, Abhishek, as well as Prakash, thank you so much for joining us and throwing light on the colors of Bajaj Auto. Let's now slip into a short break. The management of DB Corp joins us post the break to discuss the Q1 numbers and the way forward.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's long
Welcome back. It's time to talk about DB Corp's Q1 earnings. Company saw 50% surge in net profit year-on-year, while margins were aided by advertising revenue growth. Management is maintaining growth trajectory across print, radio and digital platforms. To discuss more on the Q1 performance, Girish Agrawal, Promoter Director at DB Corp, joins us now. Mr. Agrawal, good afternoon. Thank you so much for joining us. Well, as always, the first question will be that, yes, Q1 was strong. What is the outlook for FY25? Because it has been a very strong FY24 overall. What are the triggers now? And will you be able to maintain this 600 crore of revenue run rate throughout the year?
So I think what we are waiting for is the budget. Because the monsoon so far looks good. And if the budget also goes in the same direction, then I think this year would be also another stellar year.
So what kind of spends are you expecting, post-budget? How did Q1 pan out in terms of advertising spends by corporates as well? And what is it that you're anticipating or expecting from the budget that can act as a kick or as a trigger for you?
See, my advertising business is all dependent on the market. In the sense, if consumer companies, automobile companies, education companies, they all do well, I will certainly do much better. So, for example, if this budget gives certain benefits to all these sectors and increase the consumer uptake in the market, and I'm very confident that this will help advertising to go up. Because for me, all the sectors, automobile, real estate, banking, finance, jewelry, all of these sectors are firing for me. So I'm very hopeful that this budget will take care of them and they in turn will take care of me.
Well, there is an expectation there could be some relief to boost rural consumption, which has already been doing well in Q1 for sure. What really worked in terms of margins as well was that newsprint prices came down drastically in last couple of quarters. Now some of these companies have gone ahead and increased paper prices. Is that impacting newsprint paper prices as well? What's your take in terms of margins? The 27% mark, is it maintainable?
See, last year we were at almost 57,000 rupees per ton on this quarter, and this year we are at almost 47,000 tons. So there is a sharp decline. And I'm not worried about the mills raising the price. I'm more concerned about the freight. Because of the international affair, the freight cost has gone up in last quarter. So I'm more worried about that.
Girish, last time you spoke to us, you told us that government spending as part of your ad spends was close to 13 to 15% of the total ad spend. We understand that Q4 and Q1 you may have peaked out in terms of the government spending there, given the fact that the elections are now behind us. How do you expect that particular portion of ad spends to moderate, and what kind of ad spends will you be guiding to for the rest of the year?
See, I think government spending, which went up for last 2-3 quarters because of election, will certainly come down. But having said that, other sectors, should fire. I'm very hopeful on the other sectors that looking at the overall growth in their country, I'm sure those sectors will help me to continue this kind of growth.
Mr. Agrawal, coming back to the margin point, I wanted to understand, because a lot of companies have spoken about, freight rates going higher, and that is impacting raw material prices. There are no two ways about it. In that case, what happens to margins? Because margins have been improving for you. I've just been looking at the trends as well, and there's been a substantial increase here. Do you think it'll stabilize and there's not really a room for improvement from here on?
From 24% last year, we came this year to 31% margin, EBITDA margin. So I think this 31% margin EBITDA is a good number. It should stay around 1% here and there.
Okay.
Girish, you mentioned that the digital platform will be a powerful pillar of growth. Now, going forward, what kind of growth do you see there? Would you be able to quantify it in terms of revenue profitability? You are also experimenting with paywalls earlier. What is the update over there?
So in terms of my monthly active user, the number has now gone up to almost 18 million plus. So that's one positive for us. And as I told you last time, we're experimenting in various segments, and the initial results are decent, good enough, I would say. So we are very hopeful that going forward, this should be another business model for us.
So is it breaking even if we just talk about the digital business? Is it profitable? And will you look at, demerging that as a separate business and just grow that separately? Is there any plan around that?
No plan for demerging. In fact, you remember 10 years back, we took the radio back into the company. So no plan. DB Corp has all possible media in it. So we want to continue as DB Corp as the main company.
And how's the ad revenue trending as far as the radio business is concerned? Is that on an upward trajectory?
Radio grew by almost 6% in this quarter, and they maintained a profit margin of 34%. Unless Government of India opens up the news and current affairs in radio, frankly speaking, is not a worthwhile business in this country.
So, are we seeing any updates happening in the radio business for you yourself? What's the plan here then?
I'm sure somebody from the Information Ministry is watching your channel right now, listening to this, and they would act on it.
Okay, all right. Mr. Agrawal, thank you so much for joining us. Always a pleasure speaking with you. That's the word coming in from DB Corp. Strong set of numbers, but the stock has done really well, and we are seeing some profit booking right now. We'll do one thing. We will take your leave on this edition of Midcap Radar today, but stay tuned, MF Corner, when we return.
On startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
What are the tests that women need to probably undertake when they are approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies especially.
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we'll put focus on the new fund offers. So a table will just come up for you on the screen, and we'll see how it has been a surge in NFOs in last couple of months. October it was 14, Jan we came to 17, but the amount raised has been hovering around the 3,000 to 7,800 crore mark. Come 2024, we've seen a massive increase here as well. So from around February, you will see that there were 20 NFOs that time, which garnered around 11,469 crore rupees. March was 19 NFOs, but the amount garnered there was 3,827 crore rupees. April, 9 NFOs with 1,532 crore rupees. It should shift. The table should go to the next particular month. The June number is the number which has been the highest in a couple of months actually. 17 NFOs which have garnered 15,227 crore rupees. So there's been a lot of action in the NFO space. A lot of them are sectoral themes as well. So we'll try and understand if the rush that we are seeing in equity inflows, it's largely led by NFOs, largely led by sectoral and thematic funds. And what should an investor do? Should they be aware? Is it a sign of over-exuberance? On that note, let's welcome Kaustubh Belapurkar, Director of Fund Research at Morningstar Investment Advisor, and Dhirendra Kumar, CEO at Value Research. Gentlemen, good afternoon, and thank you so much for joining us. And I'm glad we are having this discussion at a time where there's so much action in the mutual fund space, which especially is led by NFOs. As I said, 17 NFOs garnered over 15,000 crores in terms of flows. We have seen a big interest in NFOs recently. Dhirendra, let me come to you first up. What is causing this? What do you think are the major reasons here?
Oh, good times, and it has lingered for a long time. And, new funds being sold as a story, and people like stories. As you know, every Friday there is a movie released. And likewise, once you have a lingering rising market, then investors make money, then they realize it, and a large number of new investors coming in. And there is a growing fatigue among the SIP investors because, they are doing well, it's rising, but, everybody wants a story, everybody buys into a story, and that is where, that need is getting fulfilled. And all these stories in a good market, they perform. Everybody thinks that, it is the result of their action.
And it seems like investors, like everyone else, are just latching onto any story which is served right now. So, Kaustubh, let me come to you. Your take on this question right now, and do you think it's time for some caution in that case? Kaustubh, I think you're on mute.
Yeah, sorry, my apologies for the technical issue there. Yeah. So I think Dhirendra hit the nail on the head. In markets that have been so extremely bullish for a pretty prolonged period of time, there's a fair bit of fatigue that's set in with, literally now the baseline expectation, unfortunately for, especially the newer investors have been set from the recent trend of, 15% north in any, regular index or, sort of actively managed fund. That's literally what we've experienced over the last, 3 odd years at least. So I think investors are looking for newer avenues, something that's more exciting. And typically when something which is kind of put forward as the next big thing tends to capture the attention of investors. And that kind of then flows into sort of, translates into flows. I think it's been a little exacerbated over the last, sort of 6 months in this year. It kind of started in 2023. If you just drill down and see what happened in terms of flows across categories, we saw a large pickup in small and mid-cap flows in 23. That still continues, a large part through SIPs, but I think this year, thematics, sectorals, there have been this whole host of fund launches, and I think that's kind of grabbed the greatest amount of attention. I think to the second part of your question, is there a lot of exuberance? I think, as an investor, you need to be very, very clear as to why you're investing in a particular fund, right? And especially the fund investors who are coming in new to the market, or even investors from the perspective of their own portfolio needs. I think that's the question that investors need to ask, that, if I'm buying into a new NFO or a sector or theme, what need is that fund fulfilling in my portfolio? I think that's the burning question that needs to be answered. I think these are signs of kind of, a fair bit of exuberance coming in, but, it could be different at different investor perspectives. I think that's important to keep in mind.
Okay. Dhirendra, comment on this then. Do you think that when we say it's time to be a little cautious, it is the case for every NFO, every sectoral fund that is coming in? Should investors not look at this particular theme at all for now? Or do you think, as Kaustubh was saying, it depends on investor to investor, maybe new, maybe old, how it's serving their portfolio needs right now?
No, I don't think it is a matter of, investor to investor. All investors can ignore the NFOs and they will not be deprived of anything. If you have built a thoughtful portfolio, and if you have built a thoughtful portfolio with, diversified portfolio, a well-performing portfolio with excellent track record and with a long-term view, and you have your tactical position for, for selectivity or emphasizing something in your portfolio, why should anybody invest in these funds, any of the new funds, without any track record? And I don't think any of the good funds will actually be deprived of any of the opportunity. There is nothing which is, unique to these funds that only they can invest, others can't. Then I think, there is nothing unique in these funds from, of a kind. Once in a while it happens, maybe 10 years back, 7 years back, or, we got the NASDAQ 100 or, FANG Plus, and, they were compelling opportunity. It was not available before. Somebody had to launch one to actually make it accessible to Indian investors. And it was adding very meaningful diversification and value to investors. So those make sense. But I'm very confident that, if in fact, on the contrary, this is a very dangerous thing. It might linger for a while. We should not forget that, we had a great story called Infrastructure. And it did not work for 10 years. And it was an expectation management disaster. And people did not make any money. There is nothing questionable about infrastructure. In fact, but the point is that, and it has worked over a very long period of time. But before that, large number of investors came, they got disappointed, and they got disappointed to the tune that, they will never be, some of those investors will never get back to mutual funds. So I think it is very important to choose the right kind of vehicle, and it is responsibility of the fund companies to, and at a point when the mainstreaming of mutual fund is happening, people are, SIP book of 20,000 crore is becoming big by the day, by the month. And people are beginning to understand that how to really, always in the past, investors have been opportunistic.
Okay. Dhirendra, looks like there is some technical issue. We are not able to hear you right now, but do take your point and do take your expert advice here as well, that some of the NFOs are already offering something that's already there in the market. Kaustubh, I wanted to understand from the fund's perspective, are they thinking of an ultra long term when it comes to some of the spaces, be it defense, be it energy space? Because, what's happening is some of these stocks have gone through the roof. And we are getting NFOs later, after those valuations are at much higher place. What's happening with the fund houses in that case?
Yeah, absolutely. And I think, what Dhirendra was alluding to is exactly the point that, NFOs, unless there's something very, very unique that it brings to the table, there's really no point in looking at it, because most investors, and a large part of them, are best served just purely investing in a good mix of diversified equity funds, doing that judiciously, and that takes care of your portfolio needs, right? And to the other point, in terms of why are all these fund launches happening? I mean, there are two parts to it, right? So one is there's been this whole regulation around one fund per category, and the only space literally. Now, I'm not a big fan of it, to be honest. They're finding space in this the sectoral thematic space, because obviously their diversified bouquets are all kind of complete. But the timing, in a sense, which you spoke about, and that's a big challenge, right? Because yeah, sure, the past returns look very, very great on paper. I mean, if you look at it, there's certain sectors, be it the PSU basket, be it cap goods, realty, you would see a great amount of jump in the past year or so. So on paper, these returns look great. But remember, when you look at the market and slice and dice it over any time period, you would see that different sectors, different themes would come to the fore at different points of time. And more often than not, as an investor, you tend to get the timing horribly wrong, because these performances are very lumpy, right? They're going to come, it's going to be a boom or a bust. And most often than not, investors come after the large part of the rally is already played out. If I'll just take you back a few years after COVID, you had this huge run up in tech stocks, 2020, 2021. While we didn't have too many tech fund launches, existing tech funds got a fair bit of money that came into the fund, but the investors came in too late into these strategies. So it becomes very, very risky in terms of the timing perspective. And I think that is the challenge. So either investor needs to come in with very, very realistic expectations. Ideally, don't take any thematic exposure at all, because the diversified equity managers are already doing that for you, right? I mean, they're already expressing their views on certain sectors or certain sub-themes through taking more graded exposures in their diversified equity. I mean, that's what active management is all about, rather than trying to create a binary option, right? So I think that's something that's important to keep in mind. While obviously the asset managers are making these products available, I think investors also need to think about, alluding to my first point, what is that role? Is it playing any sort of role in your portfolio and meeting your financial objectives, or is it just because it's looking exciting on paper you want to invest?
Thanks for that take, Kaustubh. Dhirendra, I hope you can hear us now. And I'm asking you about this ultra long-term perspective of asset managers, because the conversations generally say that, okay, maybe if it's a defense market, long-term story of defense looks good, maybe the stocks are overvalued right now, so they are issuing it from a long-term perspective. First, I would like to finish your point that you were making earlier. We couldn't hear you. And then your take on what fund managers are thinking here.
No, my sense is that, everything works out well in the long term, but these are very high octane things. These are concentrated bets. These are, if you look at all the sectors or all the themes, why anybody should, the whole reason why mutual funds were invented was to, help you get diversification with convenience, with ease, with your 500 rupee SIP. And these are, they might be a special story, they might be tactical, there might be a story around it. One can always weave any kind of story in a rising market. And my sense is that everybody is looking for an excuse to launch a new fund with a new story, because they sell and it makes it easy to sell. And period. Most ordinary investors who are doing their SIP, they should not get distracted. They should invest more in those funds. They should always choose, when it comes to mutual fund, choose a tested, proven ones. You will not be deprived of anything meaningful if you're not investing in any of these funds. Don't think of missing a bus if you're ignoring all these.
Take that point, gentlemen, and it's a very interesting discussion, but we have to take a quick commercial break. On the other side, we'll continue our discussion with our experts on the big NFO rush. Stay tuned.
You just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound if they are young.
Welcome back. You're still tuned into MF Corner, and we're talking about the big NFO rush and whether investors should go ahead with investing in NFOs or not. We have Kaustubh and Dhirendra joining us. Kaustubh, let me start with you, because we've seen so many NFOs. The number has been so huge, right? Did anything stand out? As Dhirendra was mentioning earlier, the NASDAQ fund, some of them, the fund of funds to invest in US treasury markets. Those are some of the ones that would stand out. In the recent ones, is there anything that you think is still working?
I think, again, I don't think anything specifically stands out for us. Again, going back to my earlier point, just stick to your tried and tested, diversified equity funds. Any sector theme that the fund manager is bullish on, they will take a graded exposure, overweight exposure, or underweight, as the case may be, depending on their views. And that's pretty much going to solve purpose. Unless you're yourself a fundamentally driven, which is a very small segment of the market, then that's something that a fundamental investor, there is a vehicle that's available to him or her, but they could do it by buying stocks themselves. But that's a very small part of the market. I think, like I said, largest part, just stay put to, don't change course, because there are all of these sort of new fund offerings that might look exciting. They probably don't serve the purpose for your portfolio.
It definitely is looking exciting to investors, as we've been talking about how much money it has been garnering. Dhirendra, your take on the present NFOs, anything that you think stands out? I specifically also wanted to ask about Tata Tourism Fund. This is not something that I think we have seen earlier. Of course, it's a sectoral theme again, but tourism as a space is not something that we talk about so much because there are a handful of stocks here.
Yeah, I think, most of these sectoral funds or the thematic funds are proving to be a fairly opportunistic bet, and one or two things which actually stands out for its novelty. For example, the microcap index fund was interesting, and here is I'm quite wary of these sectoral thematic index getting created for somebody to write and individual investors' money into those funds. They are not mainstream index. They are being invented to mount a mutual fund on that. Don't get attracted, don't get carried away by that. But that was interesting, because that is one component of the market which investors are excited about. It could be a tactical allocation. And most mainstream funds are unable to provide you access to the micro cap segment of the market. So that was the one interesting thing. Particularly about the Tata Tourism Fund, it is an interesting thing. But, once again, before I say anything interesting about this fund, I would say that most investors will be fine to ignore it completely. And also, I would like to, warn people and remind people that recall the infrastructure days. Everybody got excited and everybody remained excited without any, and it was an expectation disaster, for 10 years, it was a long wait. Some did well, some did poorly, but generally speaking, the kind of euphoria which we saw around infrastructure was a great disappointment. And, not to forget that Tata Mutual Fund itself launched about half a dozen infrastructure fund, which over a period of time got merged into other funds. And most investors should steer clear of anything which looks too good to be true in the short run. I think the long-term tenets, and it should be a very small part of something, only for something you get excited about for a reason.
Good to be true for short term. That's the big takeaway, because that's what we've seen in last 2-3 years, the returns in a short term. In fact, the sectoral thematic funds are 55% of the top equity mutual fund rush that we've seen, and it has increased from 22% that we saw in January. So big uptick there as well. Gentlemen, we have to slip into another commercial break, but we'll continue the conversation on the other side. Stay tuned.
It should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the examination, internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has to be, testing, and then ultrasound lower abdomen.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
CNBC-TV18's most comprehensive and award-winning news.
Welcome back. You're still tuned into MF Corner. We are joined by Kaustubh and Dhirendra. We were discussing everything about this big NFO rush and whether investors should be wary or not. Kaustubh, just want to understand what has been the fundraise by NFOs in last few years. How does it compare with the first 6 months of calendar year 2024?
Sure, Sonal. So I think, it's been a, great time to be an asset manager in terms of obviously new fundraisers. Flows in general have been great, but I think from the NFO perspective, I think since the COVID year, we've seen an increasing amount of money come in. I think 2021 was the classic case in point, but there's certain reasons where you had a lot of money coming in. For instance, you had this whole fixed income sort of passive hold to maturity sort of products, which were interesting, and that saw a lot of money till obviously the taxation changed. I think year to date, we've seen about 50,000 crores coming through new fund offerings across close to about 100 NFOs. But a significant amount of this actually come into sectoral thematic funds, right? About 33,500 crores. In the past few years, I think, like I was alluding to earlier, thematics were picking up steam, but they weren't the largest sort of garner of assets. I think this year, given that we've seen these elevated levels, the numbers have changed. And I suspect, given this whole pipeline that continues to come up, you'll probably see continuing interest in new fund offerings and sectoral thematic funds, which we see quite a few of that lined up over the next few months. So I think that's been the general trend when you think about flows into the markets.
Actually, that was going to be my next question to Dhirendra. The pipeline of NFOs, are they again a lot tilted towards sectoral funds?
Yeah, they are, every fund company is looking for an excuse to launch a new fund. Because that is working. They are succeeding with it, and some are succeeding big time with some of these new funds, which are very, very generic in nature. They are not really, they are not making available, or it's not invention of an idea which was not available or not known to any of these fund companies. Business cycle fund, I imagine that, most actively managed funds are attempting to do it for a reasonable part of their portfolio, or the sector funds, oil and gas, energy, manufacturing. I don't really find the novelty here. I find that there is a case where there is also an economic supporting it. Fund companies, when they start and when they are small, they are able to charge more. When they succeed with their older funds, they get big, and the regulatory framework is such that fund companies are supposed to charge lower expense fee as they get bigger. Bigger they get, lower they earn, or in percentage terms. So they have greater leeway to spend money or incentivize people to encourage them to sell these funds. So there is a favorable economics. There is a favorable mood, and there is aggressive sales and good times. Many a times I'm finding that, money it may not be fresh money. The same intermediary is routing the older, some of the funds where an investor has done well, the naive investor has done well, and his money is getting redeemed and getting routed in these funds. That is the market reality. That is the market dynamics, So I don't think, there is anything special about it. Good times, these are symptoms of good times.
Okay, we do take that point, and that's the reason why this conversation today was so important. Dhirendra and Kaustubh, thank you so much for joining us today on something which is so topical. But we have completely run out of time on MF Corner today. But you stay tuned for Closing Bell to take you through the last hour of trade.
Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, From consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
It's a slightly mixed picture across the Asia Pacific.
Markets baking in a higher probability of a Trump victory in November.
I think Vedanta keeps coming up with some or the other news development.
4,600 plus on the Nifty.
As far as budget is concerned, we think there is broadly going to be continuity.
The nominal GDP itself, I think, can get bumped up because growth in the last 6 months, growth forecasts have been revised upwards.
Stakeholder Advisory Committee, we understand the meeting is about to begin shortly.
Third consecutive day where markets have gone ahead and hit record levels in the morning.
This was an ask by the automotive industry to extend this policy to 2027 because it was lapsing in October 2025.
Vedanta Limited has launched its $800 million QIP.
Right now, it's absolutely flat, but yes, some positive takes there as well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal Studio. I'm Reema Tendulkar. With me is Nige D'Souza. And profit booking has set in. The Nifty is virtually at the day's low at 24,600. It started off with promise. We went on to hit new record high levels on all the indices. Now the mid-cap index is also off about 0.7% from the session tops.
Well, that's right, Reema. Just around 3 hours or so ago, you had way more number of stocks that were advancing than declining. Now that advanced decline ratio is pretty much even Stevens. And what's taken place in the last few minutes actually on the headline index is Reliance Industries. Now that has been the flag bearer of this market, has been holding one end up. But that slipped in the last few minutes. I think we should get the intraday chart of Reliance Industries. And for the last 60 minutes, the swing factor is going to be the Nifty Bank and the Nifty Financial Services Index, because both of them will play out the weekly expiry. So keep an eye out on both those two names. That aside, there are a few winners though. SBI Life moves to the high point of the day, so good going on that one. And I think Divi's Laboratory as well is seeing a bit of a spike up. But what else, Rima?
Well, consumption, so HUL, Britannia. So if you see the top gainers list sectorally, you've got IT there, you've got consumption, FMCG names, and you also have real estate. So in the consumption pack, it's HUL, and that's the top Nifty gainer today, up close to about 3%. Tata Consumer is also showing you a gain of more than 2%. Oil marketing companies like BPCL, IOC, HPCL are reacting positively to the decline in crude prices. Coal India carries on with its momentum from yesterday. PSUs generally have seen buying. Bajaj Auto is up after reporting good set of numbers, largely in line, maybe slightly ahead on some parameters. So Bajaj Auto has gained about 1.5%. Telecom stocks have come in for some amount of buying, and IT names too. Infra ahead of numbers which come on Thursday. Tomorrow is a market holiday, but Thursday post-market hours, Infra reports their numbers, and Infra is up nearly about 1.3%. Though the broader market is fairly active, and we'll get to that in just a bit. But lots of gainers, but on the losing side, it's largely Reliance Industries, which is hurting some pharmaceutical names, and banks are not performing. So HDFC Bank is absolutely flat. So how should you position yourself in the last hour of trade? Mitesh Thakkar is now with us for a few closing strategies. Mitesh, thoughts on the day so far? Come off quite a bit.
So I think the indices are showing signs of tiring and fatigue. I think, that's been the pattern for the last few days. The hourly charts are now not, we are not seeing indicators make new high, but the price is still making new high. But since the indicators are not participating, the newer high isn't, like giving you a burst of momentum, which typically happens with fresh highs. So I think this is a market where some profit booking should be done, or at least stop losses should be tightened. For the Nifty, in case we start breaking below 24,550, then I think we might see about another 150, 200 point kind of a correction to begin with, maybe more, but that's the minimum which I would expect. And similarly on the back Nifty, I think till we get past 52, 650, 700, I don't think I would want to take a long side trade. So, avoiding the indices, but trading with more bias on the stock specific basis is what we have been doing for the last few days, and that approach continues. I have a buy on Coal India with a stop at about 504 and a target of 530 can be looked at. And Piramal Enterprises, after a long time, the stock has come on the buy list. It's given a very good breakout today. So they should see more upsides. Buy here with a stop at 950 for targets of 1025.
Okay, all right. Thanks a lot for that, Mitesh. We'll come back to you as the hour progresses. For the time being, let's welcome our guest. We have Deepan Mehta from LXR Equities who joins us on the show. Hi, Deepan. Good afternoon and good to see you win. Well, Deepan, I wanted to ask you about the top winner on the Nifty today, which is Coal India. Let's run our viewers through a note that's coming from Phillip Capital. They have initiated coverage buy rating, target price of around 611 rupees a share. Their header says that the growth story is likely to stay longer for this particular company. And let's break it up into 4 big triggers. And some of them should come up for you on the screen. First, there's an industry tailwind. They're saying that India's power needs an additional amount of thermal capacity and in turn will require more coal. So they have put out a couple of numbers. The energy demand for the last year, it grew in low double digits, was at around 243 gigawatts. Now they're saying in the coming years, they're expecting that number to go to around 260 gigawatts and then move to around 400 gigawatts by 2030. So because of that, we'll require a higher amount of coal. They've also said that the government of India, they have sanctioned 88 megawatts of thermal capacities. So just, this 88 megawatts of thermal capacities, you assume that it functions at around 75% PLF. It could increase the total coal demand by around 400 million tons odd. And the third factor is that they're looking at commissioning annual rate of around 6 to around 8 gigawatt per annum. That compares with the 5-year average of around 4 gigawatt. If that is the case, then in fact, the increase in the annual demand for coal will go up by around 30 to 40 million tons. So the first part is on the industry tailwind. Point number 2, that's with regard to the volume growth. They are factoring in a volume growth for Coal India of around 8% in the next few years. That's FY24 to FY27. They've given a comparative number. In the last 5 years, India's coal demand grew by around 4.8%. And Coal India shipments, they grew almost mirror image at around 4.9% odd. Remember, Coal India fulfills close to around 80% of India's coal production. So it moved more or less in line. For the next few years, that's from 2024 till 2030, They are saying that Coal India's volume growth could grow by around 8%, though the thermal coal demand will grow by around 5.5%. Why is it outpacing the coal demand, the thermal coal demand? Because there'll be restart of some of the thermal projects, and also the government intends to reduce the imports of coal. So that explains why the volume growth will be higher than the coal demand growth. Point number 3, profitability they're saying will stay around the 500 rupees per ton, which will be more or less at par with what we saw in the past year, that's 2024, but it will be significantly higher than what we saw in the previous decade. And point number 4 is they're talking about the solid balance sheet that Coal India has. They're sitting on cash of around 27,000 crores. They also have a capex lined up of around 20,000 crores on. But they're saying the cash burn will be lower than the cash generated. So that's why the cash per share will only go up from here on. They are penciling in a number of around 69 rupees per share in comparison to around 44 rupees per share. So basically, cash generation more than capex. They highlight a few risks though. If there's a sharp fall in international coal prices, in case there's a delay in construction as well as ramp up of capacities, and if there's higher than expected production from private miners, if that's the case, then it reduces Coal India's pricing as well as volume offtake. So put all this together, Phillip Capital, they have initiated coverage on Coal India and they have a target price of 611 per share. Deepan, what's your view on these? Some of these stocks, they seem to be coming back in the last few days. We've had Oil India that gained in Friday's trading session. Then you had ONGC yesterday, and today you have Coal India. So it seems the street is suddenly taking notice of some of these PSUs that traded lower multiples, high cash generation, and have a dividend yield as well. Anything you like from here?
Yeah, good afternoon, Nigel. Thank you for having me on your show. I think in a situation where there are so many high PE stocks and even the PSU stocks are trading at exceptionally high PE multiples, I think coal and oil marketing companies, to an extent PSU banks, are the only kind of categories within the market which are still trading at single-digit type of PE multiple. And Coal India especially has got nearly a 5% dividend yield as well. And I think all the arguments put forth are pretty compelling. There was a time when ESG investing was a lot in fashion, and Coal India, being such a big polluter, was being avoided by a lot of the fund managers who were very conscious of ESG score. But now I think it's been well established that conventional thermal energy is here to stay for many, many years and many decades, I would say, and they will coexist with wind and solar energy, because as a backup and also at points of time when there's a surge in power demand. So from that point of view, Coal India certainly has a decent future. And this is one company, I think, gradually under the BJP rule, it's as with all PSUs, the overall efficiency levels are improving, and that's reflected in the corporate numbers as well. So don't go by the track record, but I think that certainly this company can have a higher PE multiple, and there could be stability in earnings as well. So I think that it's a stock definitely to be slightly overweighted.
By the way, Himadri Specialty is a company where you are seeing Himadri Chemicals reacting to their numbers look good. 26% revenue jump, some expansion in their margins. Now margins stand at 16%, and that's driving a 42% increase in the company's profitability. Even today's, you can see that spike up posts the numbers. Let's talk about telecom, because that's another sector which is on our radar. Now, first on Bharti Hexacom, which is a recent listing, there have been two initiating coverages, one of them by JP Morgan and the other one is IFL, and both of them have initiated coverage with a bullish stance. So for JP Morgan, the target price stands at 1,280, so a little bit of an upside from where the stock currently is, about 10 to 12%, post the 7% gain. Now the key reason why brokerages are so bullish on Bharti Hexacom is that now Bharti Hexacom is a pure mobile services company, but they operate only in two circles, Northeast and Rajasthan. Here the tele density is lower, which means fewer people have SIM cards, and therefore the opportunity to grow is higher. Plus the cost of acquiring a customer is lower compared to rest of some of the other markets, and that's also a positive. And now that we are in a rate hiking cycle, there has been a tariff increase, and even Bharti Hexacom has taken a tariff increase similar to what Airtel has. It will benefit Bharti Hexacom the most because the leverage is the most. Unlike, say, a Bharti Airtel, which has other businesses, like they have the B2B businesses, they have the homes business, Bharti Hexacom is a pure wireless business. So the benefit of the tariff flows through the most on Bharti Hexacom. So that's the reason why the stock is active and brokerages are very bullish. But the other bit of news is positive for Airtel and Vodafone Idea and not so much for, Reliance Jio. Now, if you remember, telecom companies are saddled with AGR dues. This case has been going on for a very long time, and currently for Vodafone Idea, the AGR dues stand at 70,000 crore rupees, while for Airtel it stands at 36,000 crore rupees. Now, the companies have been arguing that there are mathematical arithmetic errors in the way AGR is calculated. And therefore, they've been going out to the Supreme Court. The Supreme Court once said that no, what we said that you have to pay the AGR dues still stand. But now, yesterday, Harish Salve appeared for Vodafone Idea, and he once again said that we want an urgent hearing of the AGR dues. They filed a curative petition, and the Supreme Court has agreed. And therefore, the street has gotten excited or hopeful that maybe some relief is coming. Because if Vodafone Idea has to remain as a viable, competitive third private player, then it will need relief on the AGR dues. Now, the street is assuming or hoping for a 50% cut in the AGR dues. And if that comes through, it's a big positive for Vodafone Idea and even for an Airtel. So that's the latest bit of news coming through on telecom. Dipan, I know we've spoken a lot on telecom in the past, and you've said the best telecom story for you is Indus Towers. Isn't that correct? Would you look to say Indus Towers, I remember, is your favorite play, but would you look to say add a Bharti Hexacom? And what about this news? If that AGR relief comes through, is it in the price, or do you think there is a tactical play involved here?
Yeah, Rima, I don't think the AGR, any relief on the AGR dues is in the price as far as Bharti is concerned, or even Vodafone for that matter, because it can go play out any which way. And if it does come through, that's extremely positive for these companies. But I think I agree. I still maintain that Indus Towers certainly is a better play on the telecom industry. It's trading at a discount to its other global peers. And with the overall health of the telecom industry improving, they should be able to get higher yields as well. So from that point of view, I think we like Indus Towers, but pure play Bharti Airtel also is quite interesting.
Okay, all right. Well, Deepan, I wanted to ask you about a couple of these other names that are moving around in the last few minutes. Hero MotoCorp actually has moved to the lower point of the day. That stock's seen a good rally. For the time being, it's down a little bit. What's your view on Hero MotoCorp?
Yeah, Nigel, I think that valuation-wise pretty attractive, and with good monsoon, overall rural prosperity gradually improving will benefit two-wheeler companies, especially Hero MotoCorp, which has a very large exposure to the rural market. Some of the new models also have been pretty well received. So it could be a steady performer over the next 2-3 years or so. But look, we need to be mindful that the industry is undergoing a lot of disruption. And the leader will be a company which has got a very solid base when it comes to two-wheeler EVs. And I would place my bets on Ola Electric, the way they are scaling up operations and the kind of backward integration they're doing into actual manufacturing of batteries as well. So while I think there's a good trading rally in all two-wheeler stocks, monthly numbers also have been very good, much better than passenger vehicles. So from that point of view, I think next 2-3 years looks good, but you cannot factor these companies as great long-term investments with a holding period of 5-10 years or so, because of the kind of changes taking place within the industry.
Okay, that's the view coming in on two-wheelers. What about, the budget is 1 week away, and I wanted to get your views in on defense, because these stocks have had a phenomenal run. Even year to date, a Cochin Shipyard is up 300%, Garden Reach is up 180%, Mazgaon Docks is up 135%. Do you think we'll get something in the budget which could keep this rally running on defense stocks? Today, the rally is paused, so the stocks are not doing too much, but they haven't fallen. They're just down flat or maybe down about 0.5%. But do you think we'll get anything in the budget which could push up the defense stocks further from here?
See, Rima, the disinvestment figure is a big factor for the PSU companies. And ironically, whenever the government announces a disinvestment figure, PSU stocks actually tend to rally, which I don't understand why, because actually there's going to be more supply in the market. But I think that once the government, opens up the liquidity for these companies, PSUs, especially defense PSUs, some sort of a cap should get formed, because these counters are extremely tight and there's very low floating stock, the government being the largest shareholder, and it doesn't take much to drive these stock prices higher. Investors, especially professional investors who already invested, when they get fresh money, they're buying the same companies and taking the stock prices higher. And valuation-wise, you cannot justify buying into any defense PSU. So I would say that if you're invested, remain invested. But more or less, I think the entire upcycle, the discovery process is over. And from this point on, it would at best move in line with earnings or even slightly lower, as P's will get compressed considering the nature of the business.
Okay, all right. Deepan, I wanted your view. We have discussed ITD cementation in the past. The stock saw a sharp downtick on that news that the promoter entity could be looking for a buyer, but it's actually recovered quite a bit from those lows that we saw on that day. It's at around 510 rupees odd. From this space, any other company you like? I'm looking at Vascon Engineering. The stock is up more than 10%, and it's one of the top volume winners today. It's been a relative underperformer. What's your preference over here?
See, I think that ITD cementation per se also is a fantastic blue chip company. And whoever the new owners are, I think they'll also really take the company to the next level, I feel. There's a lot of demand for the type of projects that ITD does. Not only does it do typical road projects, but it's lot into ports and metros as well, where I think it is pre-qualified for most types of projects, which is a big advantage. So I'm still positive on ITD cementation. And of course, I think if you want to play it safe, there's always Larsen and Toubro. Every now and then we are seeing the order book, them winning new orders. Order book position remains really strong. And the kind of order wins they have got in the Middle East, I think that is really quite, I would say, impressive and should sustain growth for many, many years. So very positive on L&T also. Great value being created in subsidiaries as well. So I would say between these two companies, you are pretty much fine. Amongst the capital goods manufacturing companies, of course, there's one company which comes to mind, again, disclosure we and our clients are invested, is Praj Industries. It's got impacted a little bit because of government's sugar policy and ethanol policy, but long-term prospects are great for this company as well.
For L&T, its global credit rating is higher than India's sovereign rating. So both Fitch and S&P Global have assigned a BBB plus rating for L&T, which is 2 notches higher than India's sovereign rating. And that is a positive for L&T's overseas funding, considering the kind of work that it does in Middle East. Deepan, one final word on Zee Entertainment. Now, the stock has struggled with that merger with Sony going nowhere. They've got the shareholder nod for a 2,000 crore fundraise. Will it do the stock, the company, any good?
No, Reba, I think that it's disappointing. And see, underlying fundamentals, if they were good, if there was decent revenue growth, profit growth, they were making progress on Z5. If there were underlying improvement in the financials and the overall working of the company, would still consider. But that's not visible in the earnings. And they are going to deal with very large competitors coming into play. So I would say that, and also the entire entertainment patterns are changing, habits are changing. So too many headwinds for Zee, and it's a low P stock, I understand, but I'm not looking at it in positive light. I'd like to avoid Zee at these levels.
Okay, Deepan, thank you very much for joining in. We'll get into a break. On the other side, we'll invite Shiv Sehgal, President and Head of Nuvama Capital Markets, on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Okay, welcome back. You're with us here on Closing Bell. 30-point change on the Nifty. We're at about 24,600 plus. But, as we discussed in the morning as well, the day is not really about indices, but about the stock moves that we are seeing. And there is more than enough, which I think is keeping everyone occupied. Now, let's talk about some individual names. Bajaj is buzzing in trade after it reported its first quarter numbers. Stock, of course, has done very well. I think the best performing auto name, perhaps right up there with Tata Motors from the four-wheeler pack. Sudarshan is here to run us through the details of the numbers. Sud.
So two-wheeler major Bajaj Auto has reported numbers for the first quarter of FY25, and numbers were higher than estimates as well as higher year on year. And it was led by healthy volumes and better realization. Volume growth has come in line. It's up 7% year on year at 11.02 lakh units, and realizations were higher than estimates. It saw a growth of 8% to rupees 1.10 lakh. Now, if you talk about the headline numbers, profit is increased 19%, revenue is up 16%, and it's supported by favorable mix. On the operating front, EBITDA has risen 24% and margin has come in 120 bips higher to above 20%. And company says both realization and cost reduction have aided margin in the first quarter. Now, if you talk about the segments, domestic business has registered double-digit growth for 9 successive quarters. Exports revenue have seen double-digit growth, with Latin America posting its highest ever quarterly revenue. In the two-wheelers, Pulsar continues to see double-digit growth, and it has sold more than 19,000 of units of Triumph in the first quarter. In three-wheelers, volume growth was in double digits for 4 consecutive quarters. So overall, it was a good set of numbers from the Bajaj Auto for the first quarter.
All right. So thanks very much for that. So that is Bajaj in focus. Shiv Sehgal is with us, President and Head of Novama Capital Markets. Shiv, good to have you with us here. Thanks for your time. We just want to start by talking about the budget, which is not very far away now, a few sessions away. That one likes it or not. I mean, every year there is chatter about taxation, especially on stocks, which comes through. So I want to just ask you whether that is the big risk really for markets, because everything is done very, very well, and now you've got to perhaps also start to think about what could cause a bit of a pullback, and is taxation perhaps the number one reason which could do it if it were to come about?
Firstly, thanks, Prashant, for having me on the show and inviting me. It's always good to have a chat with you guys. I think, I can't even recollect the number of years we've been talked about before the budget, or the interim budget in this case, when taxation has become chatter buzz. To be honest, I think, yes, there is an element that, given that markets, the euphoria that has been created in the markets and the returns that we have seen in the last couple of years, there is a natural tendency for people to talk about the fact that there could be a change in the taxation regime, especially in the short-term capital gains tax. If you were to ask my opinion, I don't think it's on the cards. I think markets will continue to climb this wall of liquidity that we perceive in India. And India, I've been quite publicly been calling this a great phenomena for India, and I remain a very strong bull in Indian markets, and I think we will continue to carry this uptrend into this second half of this year as well.
So what about the argument about valuations? How do the valuations stack up now, according to you, in the global context? And where is it that you find value now, Shiv?
So great question. I think, in every, I would say, corporate boardroom and investor chatter, valuations are talked about. I think there is no doubt, given the fact that, Indian markets are up 100% in the last 5 years, and even global markets, given the global liquidity post-COVID, has seen a tremendous return to investors globally in different asset classes as well. It is a natural tendency to talk about where valuations are, and yes, they remain stretched. But I think I would break it down into a few segments here, Rima. The reality is that everywhere you look at corporate earnings in India, we find ourselves in a sweet spot. And I think there is a large runway for us to continue to grow around that high teen, 15 to 20% CAGR for corporate India. And as long as that runway and return on equity is maintained, valuations and EPS will continue to remain high and lofty. We are nowhere close to, in terms of the peak that Indian markets have seen in previous regimes, especially in 2007 and 2003 to 2008 bull market. And I think, as I said, this time around, we also find ourselves in a very sweet spot from an India context that global growth is slowing down, and large asset allocators will find it difficult to deploy the kind of liquidity that India is now showing. Let's not forget that along with this market rally, we have gone from a 2.5 trillion market cap to 5.2 trillion today. And to give you some more anecdotes, I was looking at the number of companies that are more than $1 billion today compared to last 5 years. India had about 300 companies, which were more than $1 billion market cap in 2020. That number is almost doubled. We have 600 publicly listed companies today that have a market cap of more than $1 billion, which also means that we are continuing to deploy more liquidity. Of course, the major theme has been the domestic mutual funds continuing to grow. Even there, their number was less than $100 billion in equity, and now they're managing, in excess of 330 billion. So from every stat, whichever way we cut the cloth, I think the statistics are showing that India remains on a very strong trajectory.
Hi Shiv, good afternoon and good to see you in. You and your team, I believe, are very, very busy with all the fundraise as well that's taking place in the market, but those are individual stocks, so we'll keep that aside for the time being. How do you approach the consumption theme? Some part on the street believes that staples require now a bit of a look, but you're in the camp that's still bullish on discretionary consumption. Tell us more about that.
So I think, you're absolutely right. The one pain point, and I think at least in the investor and analyst community, the rural demand has been the weak spot in India lately. I think monsoon has been pretty robust and remain on track for a healthy season this time around. And I think, if you look at it in the context of what happened with elections, a lot of investors also attributed, the BJP's weaker than expected performance to rural stress. And I think that has raised expectations. You just asked me a question on budget. I think going into the budget, there is an expectation in the investor community that some targeted spending programs by the government to address some of these concerns are on the cards. As we all are aware, the government has been reducing revenue expenditure to support the infrastructure capex. And well, that is in a longer term trend, a very welcome boon. I think it is possible that the needle swung a bit to the extreme, and I think some restoration of that balance is needed. And we are kind of seeing that in the rural and FMCG upturn. Our expectations are that you will see growth improve by about 8 to 10% in this corporate earnings, which have just started. And already companies are indicating about 3 to 4% growth from the previous quarter already. And market is kind of anticipating that rotation as well.
Yeah, no, absolutely. And, we'll see what happens. We, by the way, Shiv had a couple of infrastructure experts in the morning from CRISIL, and we had Vinayak Chatterjee as well. And, Vinayak made some points saying that on infra itself, he expects a big, as compared to the interim budget, where the central government sort of budgeted number was about a little over 11 lakh crores. He expects the number in the final budget to be upwards of 13 lakh crores, 13.5 odd lakh crores or so. So significantly higher is what he expects the proper full budget to be. So I think, yeah, consumption, yes, but I think infra as well remains pretty much a focus area. You'd agree?
100%. So if you look at infrastructure investments, I think, the estimation that we have is that it will total about a 1.5 trillion over the next 5 years. And I'm talking about dollars here, at a CAGR of almost like 15-16%, right? And that will continue. We have already seen the infra theme play well out in the last 2-3 years. And I think we are at the cusp of a very long-term trend and runway here and India needs it, right? It's not that it is just an investor story. It is also the fact that it is laying the foundations for a much larger runway for the logistical runway for India and the infrastructure that India needs. As we are becoming a much larger attention seeker and driving global economic growth today, right? If you look at even this week's numbers, what China reported versus what India is reporting, we continue to remain a market darling, not only just an EM perspective, which we were, but now I think in the next couple of years, and the government has also talked about this a lot, the runway for the next 25, 27 years, the India 2047 theme, and the goals and the aspirations that both the government and the private sector have, I think a lot of that will be led by infra and the derivatives of infra, which also means real estate, logistics, supply chains, the road infrastructure and the water supply chain and infrastructure as well. So that's a theme that we are very bullish on, and we continue to remain quite robust on that.
As a house call, you believe IT has bottomed out, right?
Absolutely.
Okay.
I think
not everyone's convinced. They think that it's going to happen, but maybe 6 months down the line, 9 months down the line. But according to you, it's already happened.
So I think, the sector rotation is on. TCS reported some decent numbers. And the way I look at it, Reema, is that valuations are now for the IT sector about a 25% down from the peak. We are now at a 5-year average versus during COVID. If you looked at, the first year, we saw, a bit of a, overbought situation, which has now corrected in the last 12 months. The sector, to me, seems in the investor community is slightly underowned. And we feel that the IT sector is bottoming out, as indicated by an uptick in the hiring numbers as well. And, a lot of that is also driven by the GCCs and the kind of growth that we are seeing in India. And let's not forget, we keep talking about the demand demographics and the upskilling that is happening. And I think there is a shift here where global GCCs are coming to India, and that will drive a lot of this demand for the IT sector as well.
Okay, all right. Shiv, appreciate you stopping by and giving us your take on the markets as well as on the individual sectors. Too bad we can't discuss stocks, otherwise it would have been a little bit more exciting as well. Thanks a lot for joining in. Well, I think we need to take that short break, Reema.
Sorry, we do need to take that short break, but here is an important note for you. Coming tomorrow, 9 a.m., we have a very special offering, and this is a big CNBC TV18 exclusive. So just ahead of the budget, one of the world's top market strategists will be coming to the CNBC TV18 studios. We're talking about Chris Wood of Jefferies, and he will make his bull case for India. Also, don't miss out on an exclusive chat between Chris Wood and D Street stalwarts Ramesh Thamani and Utpal Sheth. All this coming tomorrow, 9 a.m. only on CNBC TV18. Welcome back. Let's get to another important story. The Uttar Pradesh government has extended its electric mobility policy till 2027. What does this mean? What are the implications? Parikshit joins in with the details. Parikshit.
Well, yes, this is an important aspect of electric mobility. The UP government has extended the scheme that they had launched to 2022. The scheme was due to expire in 2025, and now it has been given an extension till 2027. Now, what has exactly happened? Well, the government has extended the scheme with the unutilized amount. Now, this is less than 500 crores, roughly around 450 crores in total. This is the unutilized amount from the original scheme. What this says is that there will be a total outlay of 100 crores for a maximum of 2 lakh electric two-wheelers. The cap on subsidy is 5,000 rupees per electric two-wheeler. When it comes to electric cars, the cap is 1 lakh rupees each for every electric car. The maximum here is about 25,000 electric cars and a total outlay of 250 crores. 400 e-buses to be subsidized with a cap of 20 lakh rupees each. Total outlay here is 80 crores. Maximum 1,000 e-good carriers to be subsidized with a cap of rupees 1 lakh per vehicle. Total outlay being 10 crores. So this is the overall objective of the scheme, to increase electric vehicle manufacturing in Uttar Pradesh, also increase deployment of electric vehicles by private citizens and also by fleet operators and cab aggregators. It also mentions the exact number of vehicles which such cab aggregators and fleet operators can buy under the scheme. It has not said anything on the hybrid policy or road tax waiver on hybrid policy. The companies we spoke to, which are in the business of making hybrid vehicles, say that they understand that the road tax waiver on hybrid vehicles, which was given earlier this month, continues till 2027. But of course, we are awaiting a clarification from the UP government. Sources had told us that very soon a note would be issued to clarify the range and the price of hybrid vehicles which will receive the road tax waiver exemption. So for the moment, this is the UP Electric Vehicle Mobility Scheme, which has received an extension to 2027. We are still awaiting a clarification on the price range for hybrid vehicles. At the same time, the central government is working on the FAME 3 policy. HD Kumaraswamy, the Union Minister for Heavy Industry, said that the FAME 3 policy would be implemented soon, subject to PMO and cabinet approval. He also said that the government is considering views from the industry on rationalizing the cess and tax burden on hybrid cars. Take a look.
Okay, thank you very much for that, Parikshit. The mid-cap index is absolutely flat, but lots of interesting movers. So Alembic Pharma has a 10% gain. Natco Pharma is up nearly 6%. Alembic Limited, the API manufacturer, also has a gain of nearly 5%. LIC continues with its up move, was up yesterday, it's followed it up with another 4-5% gain. JM Financial is on the cusp of nearly hitting that 100 rupee mark. So JM Financial is coming for some amount of buying interest. You've got India Cements, which is gaining about 4.5%. Big movers seen in many of these mid-cap stocks. Bharti Hexacom, we've been talking about it, but even NoSil pops up on the price and volume charts. NoSil's volumes today are 81 lakh shares with the upside or a price move of nearly 7.5%. Get into a break on that note. We'll come back and get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you calls from our technical experts.
What are the tests that women need to probably undertake when they're approaching perimenopause, physical as well as maybe blood tests? What would you recommend?
See, blood tests in general, let be the whole body checkup. A lot of people, especially if they got a family history, will have this blood pressure, diabetes, and all those will be first diagnosed in a blood test. And the symptoms appear very much later. Then if there's a lipid profile is changing, so they can be started on statins now so that the cholesterol does not collect on their arteries, and then they have lesser chances of heart issues later on. Then the bone density is very important, because a lot of times the density decreases. It's like a pillar without the concrete inside. So old ladies, especially if they're very frail, if they just fall in the toilet also, the bones break like twigs. That's because the bone depletion. So they will have to get this calcium and iron, or maybe start calcium at 35 years of age and continue for a long time. And then those specific to gynae is, like I told you, mammography or ultrasound. If they are younger than 40, it should be ultrasound of the breast. Or sometimes on the mammography, what happens is they say that the breast tissue is very dense and they cannot see it. Then we have to send them for ultrasound breast. Then the internal examination by the gynecologist. The pap smear, a better form of pap smear is LBC, liquid-based cytology, and HPV vaccination. That has testing and an ultrasound lower abdomen.
Dr. Saneen,
testing.
Back. Well, a couple of stocks have slipped from the Nifty itself. You have the Shriram Finance stock that had a 20% rally in the last few days. Well, that's come in for some profit taking. So pull up the intraday chart on that one. Garden Reach, well, they are backed an order of close to around 840 crores. So the stock is reacting positively to that set of news, up close to around 3% odd. Let's get in Nimesh, who's joining us on D-Street Chatter, to fill us in with how he's reading the flows and market setup. Hey, Nimesh, afternoon.
Hi, afternoon, Nigel. So another day of consolidation, and the big theme seems to be the lack of participation from the larger institutions. You're seeing this delivery-based volumes going down in the cash market for the last couple of days, and that seemed to be the trend today as well. So again, a bit of a lackluster as far as flows are concerned. The clear sector of the day is consumer names, big move on those stocks in anticipation of some relief in the budget. So that's been a big trigger for those stocks to do well. The other sector which has seen some bit of buying interest is the telecom space. Across telecom stocks, whether it's Vodafone, Bharti Hexacom, as well as Indus Tower, all have seen delivery-based buying, and some bit of interest is back from larger institutions in the telecom sector names. But nevertheless, broadly the feedback is it's lackluster from a volume perspective, and it's a bit of wait and watch out of the big budget, which is likely next week.
Nimesh, what are you picking up in terms of specific stocks?
Well, the first stock on my list is Zomato, a big downtake on that name on larger volumes as well. In fact, the stock is under pressure after a large block deal. I understand a domestic mutual fund was a big seller, and they've been a large holder in Zomato for a very long time, and now at these levels they're doing some profit booking. So that's the reason why Zomato is under pressure today. The second name is Vascon Engineering, a small stock but big move on that name today, up 12% and a large volumes as well. I understand the mature interest is back, but also there is a strong indication that there could be a corporate development very soon. A potential fundraising in the subsidiary business is what the street is anticipating in Vascon Engineering. The third stock is IndusInd Bank. Again, while not much in terms of flows for the last couple of days, but looks like the selling is largely over and some bit of FII buying has resumed in IndusInd Bank at these levels. So that's the reason that stock is under radar. And the last is Techno Electric. Again, while the stock has been consolidating in the last 1 month, but if you look at the 3-month, 6-month chart, it's been a big move. In fact, the stock is doubled in the last 6 months if you look at the chart. But now understand the company is likely to raise funds by QIP very soon. So that's a trigger for Techno Electric.
Okay, all right. Nimesh, a quick word on Vedanta. Mr. Agarwal has said enough of dealing with the banks. I want to come to the market and raise some money. The QIP, there was a green shoe option. There's a fair bit of demand, is what I understand. There are some long only as well. They have upsized that QIP from 800 million.
Well, that's the feedback that I've picked up, Nigel, that now the book is upsized to $1 billion. And the key reason for that is there is a very strong demand, not only from domestic mutual funds, but some long-only funds. Even some larger HNIs have participated in the book, is what I understand. And of course, there is some portion of hedge funds as well. So it's a fairly covered book. HNIs, long-only funds, some domestic mutual funds, and some hedge funds as well. So that's the indication that I've picked up, that the size has been now increased from $800 million to $1 billion.
Okay, all right, Nimesh, thanks a lot for that. Mr. Agarwal, taking the opportunity, good demand, went ahead and took an approval for 8,500 crores odd. At the start of today, the initial book was around 600 billion, which had a green shoe option of around 200 million. And as Nimesh is telling us as well, that's likely to be upsized to around $1 billion odd. So the balance sheet will be in good shape. The capex as well that they were talking about, that will be well funded. Now it's for them to lose. So let's see how things go. The aluminium vertical, that's the one that's going to fire all cylinders in the years to come. Let's go across to Mitesh Thakur, who's joining us for some trading ideas, a buy or sell call for a reverse trade in the coming days. Mitesh, tell us, what do you have?
So, Nigel, I have a BTSC and Tata Consumer. I think, that's closing at the day's high, very good setup over here. It can even be a trading bet for a BTSC guy. Keep a stop at about 1165, look for 1190.95 as the target for tomorrow. And one sell call, that's on, Siemens or STBT on Siemens with a stop at about 74.70 for targets of roughly around 74.20.
Thank you very much for that. Let's get to some of the big earnings which will be reported. That's Asian Paints. Numbers will be out tomorrow. Mangalam joins in with the key expectations. Mangalam.
Well, for this quarter, the numbers for Asian Paints are likely to be weak, and that is reflecting the stock price as well. It's down about 20% from the highs. The stock trading at around 52 times one-year forward earnings, one of the lowest multiples in recent times that we've seen on Asian Paints itself. And there are a couple of reasons why the quarter is likely to be weak. One, because there was elections, so a lot of labor movement across the country, and as a result of which the availability of painters wasn't there. And the second one was the strong heat wave, as a result of which, there wasn't a lot of painting jobs that happened on the exterior side and in the interior side as well, also clubbed with the lack of labor availability. Volume growth for the company will be more than the value growth, and that's largely because of the inferior product mix. And the company is now taking a 1% price hike. So to that extent, the second quarter, and more importantly, the festive season quarter, will be extremely crucial for the company to watch out for. This time around, we're expecting a flattish sort of revenue coming in close to around 9,175 crores. The EBITDA declines by about 8.5%, so that would imply a margin correction of close to around 200 basis points. And the net profit on the back of that falls by about 11%. You're looking at a number closer to 1,400 crores. Domestic decorative volume growth this time around should be between 6 to 9%. And despite the company saying that there could be double-digit volume growth momentum in the first quarter, the street is not penciling in that number yet itself. And even that, if that number were to happen, the volume value mix would keep the value growth in check itself. Double-digit volume growth is what the company is guided for this year. Gap between volume and value growth will be in the range of 5 to 6%. And at the same time, EBITDA margin guidance for the company has been 18 to 20% for this entire year. The key triggers to watch out for Asian Paints, apart from this quarter's numbers, would be demand post-elections and ahead of monsoons, outlook for the entire year, capex and competition, because if the companies have been able to take a price hike in light of impending big competition, that implies that maybe they've been able to size them up.
Thank you very much for that. We will slip into a very short break. Even LTIMindtree will be reporting numbers tomorrow. Q4 was a subdued quarter, but the company had guided that things will pick up in Q1, and Q1 will be a growth quarter. So Asian Paints and LTIMindtree reporting numbers tomorrow. Get into a break. On the other side, Jay Bala from cashthechaos.com joins in next.
Say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the testing.
Welcome back. Keep an eye out on VMart. The stock has moved to the high point of the day as we speak. It was down 3%. Even in yesterday's trading session, that one was bobbing around. And towards the end, it pulled back. So the intraday chart will tell you a better picture. And one of the stocks that Nimesh was talking about was Vascon. Some kind of corporate development could be in the offing. That one's moving higher on very, very large volumes. Now at the high point of the day, up close to around 13%. Good time to get in. Jay Bala from cashsecures.com. Hi, Jay. Good afternoon. What's your view on the Nifty, first of all? We have just been climbing up one way, currently holding at around 24,600. What are the levels you're looking at?
Hi, Nigel. Good to be here. The next resistance for the Nifty comes at about 24,800, 24,990, around about the 25,000 mark. But the markets are quite stretched. And as long as the Nifty stays about 24,100, this current uptrend will continue. But keep a watch on the support levels at about 24,140 to 23,990. The market should stay about it. When a stretch market breaks the nearest support, that's the time for caution. But until that point, the trend remains higher.
What about Reliance Industries? That's the big drag today.
Yeah, I think it may still have a incomplete higher highs to complete around 3,400 mark. As long as the stock can stay about 3087, I think it's an incomplete move. But 3087 would probably mark the reversal of a medium-term move that started from 2023. But there are given the strong momentum, I expect that to happen. I would expect Reliance to stay about 3087.
Anything else, Jay? Good afternoon. Any other stocks?
Hi, Prashant. As a theme, the Tata Group looks pretty interesting. Most of the stocks within the Tata Group look giving me in the early indication of buy signal. Tata Tele probably the strongest out there, probably heading towards 100. But all names like Tata Tele, Tata Chem, Tata Communications, Tata Steel, Indian Hotels, Tata Consumer, all of them across the board are giving an indication that something could be brewing within the group. So that's something to watch out for. I have specific picks. One is Bajaj Finance. Bajaj Finance with the long with a stop loss of 69.15 for a potential to scale 7,600. And in the mid cap, small cap space, I like KPR Mills with a stop loss of about 820 for fresh 52-week highs past 1,000 mark. But as I said, the markets are quite stretched. Your allocation, you may want to go down to as low as 25% to 30% of your usual allocation. That's how you control risk.